I think crypto is doing great.
Like everything could be collapsing and you'd have like the most positive take.
Like, why don't we have more users?
Okay, holy shit.
She's very depressed.
I'm clearly not depressed.
So crypto is money.
No one is really getting in trouble.
That's fine.
Very hard when the president of the United States also did one.
ChatGPT was very helpful in that.
Whoa. You would get killed for that.
What?
Yeah. We should just post this.
Yeah, 100%.
It's not very positive, but it's true.
And like, to be clear, it's always about making money.
That's a good way to put it.
I'm glad we're having this conversation. I don't want to get bored here.
I came into crypto being like, oh, they're a scammer.
Everybody's coming for me.
There's an aura here.
And now I'm like, you gotta give them credit.
You never really know until you do it.
It's always been about making money.
At this now, it becomes like Somali pirates.
Have you thought about any of this?
There's a billion problems. I have no time.
This is very dark.
Like,
I
no,
I know I started with like, hey,
great.
we should be very positive.
We don't have to be positive
Okay,
all
we
the
don't have to
time.
be positive all the time.
Are we recording already?
The thing that I optimize for, other than meditating on death, is being able to sleep at night.
That got me interested. I'd like to say I'm a little bit of a pre-boomer.
Jesus Christ, like that. This is some serious shit.
Censored.
Feels like a movie.
This might happen.
I'm here to be entertained.
Good morning. My name is Mia, and you're watching Mad Society. For the next 6 hours, I'll be interviewing 11 of the most interesting VCs and investors in crypto. We are just starting this series. If you find value in this show, share the link with your friends. Throughout the show, you can send your questions, comments, and reactions through the live chat to be featured on screen. The show is powered by Cello and supported by our media friends Genzio and Nolcha. The agenda will be down below in the comments. And we are live on Instagram, LinkedIn, and Twitter. Without further ado, my first guest is the absolute vanguard of digital culture and ownership. While the rest of the world is still trying to figure out standard blockchain transactions, he is actively building the future infrastructure for stablecoin-powered AI-to-AI autonomous commerce. Please welcome Yat Siu, co-founder and executive chairman of Animoca Brands.
Hi there. Thank you for having me.
Hi, Yad. It's a pleasure to have you. I know it's very late where you are, so I appreciate you finding the time to join us.
Well, not as much as you, because you're going to go through nonstop interviews. So I feel like I have it easy.
I feel like I have a really easy start with you because we've had a few conversations like this before. I found it very interesting when your assistant told me that you wanted to talk about AI agents, because we always talk about gaming and consumer, but I find this very fitting. So because everyone knows you more related to Web3 gaming, and you've been obsessing with this recently, I want to know why.
Yeah, well, I mean, first of all, I think gaming and AI agents are actually very much adjacent to each other. I think you may have mentioned even at one of your earlier sort of shows about how we felt that one of the biggest movements that's going to change basically sort of, Web3 in particular was going to be when we get to true agentic AI, because they're going to use a blockchain. And one of the areas that we always thought would have potential is actually gaming agents originally as in NPCs, right? And if you think about the way that we have relationships with sort of, game characters and the way that we interact with them with a very dumb AI layer, right? That's actually really now when you think about what's happening with AI agents, our mental model of AI agents is not how other people look at it. They look at it at, like OpenClaw and Hermes and personal agents. And that's one way. And our agents at Hello Minds can do exactly the same thing. But we take a slightly different perspective. In fact, we think of AI agents as really sort of metaversal beings, if you will, right? In other words, they're actually sort of real live acting NPCs that are actually intelligent and can do things for you, such as personal agent stuff like you can do in OpenClaw, but many, many other things as well. And they're going to run your whole life, and they're going to assist you, and they're going to basically sort of get you the news and get you the materials and do all the transactions. And they're going to be sovereign, which is why you need blockchain. And if they're going to be truly autonomous, they need money. And what kind of money is more fitting than essentially tokenized, as in crypto money, for AI agents, right? And I think the big thing is, one of the things when we talk about gaming and the metaverse, which is always a fun topic, because as you had sort of started earlier, every time I go to a conference or I meet some people that I haven't spoken to for a while, it's always like, how's the metaverse? Haha, right? It's like the usual type of commentary that people get, or sort of, tell me about Web3 gaming, haha, right? However, I think and just to be clear, right, I keep telling this to people, unless you're not paying attention, which most of them aren't, NFTs still are about $300 million of sales sort of a month, and it's really become a big area in things like RWAs, like for instance, Pokemon cards as an example, and other such assets, versus, for instance, basically the traditional type of sort of, let's call it traditional, basically the digital only ones. And also, Bored Apes and CryptoPunks, are actually quite high in terms of value of ETH, right? But I think the thing is, the way that we express it now is that, we may have made a mistake when we said that, we would spend all this time online, the metaverse is coming, basically we're going to spend time in the metaverse. But actually what AI agents are doing today, certainly in my life and other areas, it's more like the metaverse is coming to you, as it is coming to our physical life. It's helping our physical world. It's basically doing things like handling our shopping, managing our life, maybe being our friends, helping us with sort of connections, right? So it's actually much more real today than it was before, right? And I personally have, something like 300 to 400 agents now, right? And of course, a lot of them are experiments. But the thing is, when you think about where the future is going, I mean, if I asked you the question, or even the audience, how many agents do you think you'll have? It's going to be more than one, probably, right? And most say it's going to be 5 or 10. If you go to San Francisco, it's 200 to 1,000, right? It depends where you go. But the point is that wherever you are, it's more than one human, right? Generally speaking. So that means that between a ratio of 5 to 10 to 200 to 1,000, or maybe even more than that, not even including corporate and work agents, which is going to definitely be a thing as well, we're going to have hundreds of billions of agents in the world, right? And that's going to completely reshape the internet. Everything's going to be different. The internet is going to be much more agentic. And as a result, everything will redraw and reshift. And who's going to power the economic engine behind that in an autonomous fashion? We think it has to be the blockchain.
You know what I find interesting? Because everyone's been talking about AI agents from a sense of, like a company having like a bunch of agents running for them, or like in terms of productivity at work, even if you're working as a freelancer, let's say. But when it comes to personal life, having agents, having like my mom having her agents reminding her to take her supplements, let's say, something more simple in the day-to-day life. I think that feels to me that's the natural next step. Obviously, for my mom wouldn't set up an AI agent right now, but that might become easier. My question would be, at some point, we will have the trust on AI agents to make purchases for us. So I'll be able to, instead of going, like to Claude or ChatGPT and say like, hey, what's the best restaurant for me to go out tonight, and giving some prompt, I would say, hey, book me a table, like use my card on file, if it's necessary, like, like put some down payment, whatever, and feel comfortable for them to have access to our bank account. And so the question is, how long do you think we'll take to get to that? And realistically, what does that look like?
So first of all, I think we're going to get there much sooner. And I think, Mia, you're probably too young to remember, but there was a time when, certainly I remember, when we used to say, oh, payments on the internet are not safe. Who would ever put their credit card online to buy something online, right? That was really less than 30 years ago, 25 years ago, that was the talk. And everyone basically dismissed the idea, most people dismissed the idea that you could have e-commerce and online payments, because we simply couldn't trust money over the internet. And look today, right? So I think, from that lens, I think the sort of agentic space is very similar, which is that we're not familiar with it. But because we've already gone through this transition of essentially being mostly digital, which we weren't 30 years ago, we're going to be very, very comfortable to basically give an agent some kind of way of managing money to do payments. And this, by the way, is precisely why blockchain is so interesting with stablecoins, because I can basically sort of limit it. I can give conditions. I can put the human in the loop. I can, do all sorts of things. And I don't have to basically go to the credit card company and do specifics. And by the way, there's also credit cards that give you spending limits and all that kind of stuff, but it's a little bit cumbersome, but you could do that as well. But actually, when you think about the superpower of blockchain and stablecoins in this case, it's programmatic money. So I can literally, in fact, the agent can help you write the sort of conditions that you want to have in order to make that spend. For my grocery, spend no more than $100 every day, for instance, right? So there's all sorts of things that you could sort of establish. And for the human, because of the programmatic nature, because of what agents can now do in terms of literally programming things better than most humans can, right? The result will be that a human won't even think he's programming. In the same way that when we take a photo on Instagram, we're not thinking about everything that makes the photo great, which is what photographers 30 years ago did, right? They said, okay, what's the ISO rating? How to do this? How to make these adjustments? What's the distance? What telelens do I use, right? Today, I just take a photo, it looks great, and I only care about how it looks great. And that's basically what's going to happen with basically agentic commerce, where I'm just going to say, I want this, right? And the conditions are that, and that's all I'm saying. And the agent runs the software in the background, makes some program, makes it firm, for instance, maybe even an instant audit if that's necessary, depending on the size, and we'll just go, right? And as is the case, in the early days of the internet, we didn't start buying basically houses over the internet. Okay, that's not what happened, right? We started sort of buying small things. If you remember eBay or essentially Amazon, what did they do? They sold books. Okay, so I'm okay to send and spend $20, right? And now I'm spending $20,000, but before I would spend $10, $20 buying a book, doing a little shipment, doing a little bit of thing like that, right? And all of the stuff that's happening with blockchain over the last 7 years has been the POC for this moment. I mean, if you think about, for instance, us trading NFTs for literally hundreds of thousands of dollars, or trading crypto in millions and millions of dollars, doing trillions of dollars of transaction value, has actually now created the proof point that this technology can scale as a kind of machine banking economy. And that basically is what agents can leverage on, right? And everyone in this audience will know that actually DeFi rails are sophisticated and safe enough to do so. The humans that are not in DeFi, that are not in crypto, might not fully understand it yet, but they won't care. I mean, how many people care about TCP/IP? How many people care about what happens on the back end on the client server, or the fact that it runs on Python or that it runs on Java? They don't care. They just trust that it works, and I think that's exactly the same way that's going to happen here with sort of agentic commerce and payments with agents.
Wouldn't the agents be able to use some? Well, I don't really know how banking works in these terms, but some kind of API from the banks, instead of having to use forcefully, like why use stable coins, why use crypto for it?
Well, I mean, first of all, the whole point about essentially having a sort of crypto banking, as it were, through agents, is because you don't need a bank to begin with, right? But let's make an assumption that people want to use their bank accounts, right? So one, yes, you could have an API and you could have gated access and you could do that kind of stuff. But the big question becomes, why would you do that? The more likely scenario will be, if anything, that there's going to be a kind of Visa, MasterCard sort of option. So agent cards are coming. And so I can basically, plug in my credit card and I can basically access the legacy rails. So I can make all the purchases because they all accept credit card, right? That seems to be like the natural sort of first step. But it still requires me to send money, and I still need to be able to give credit. So they're all going to be debit type card systems, right? So that's kind of step one. But what I do expect to happen much more rapidly, and I think it's going to happen really, really fast, that's why Stripe and all those guys are all going into this area, is that actually at the end of the day, I might send money somewhere, which, by the way, might not be a bank. I mean, PayPal is not really a bank in the traditional sense, and I'm happy to send money there, for instance, right? Or I'm happy to send, and then, all these neobanks that are emerging, I mean, they call themselves banks in the way they are, but they don't operate the way that we think of a traditional bank. I don't walk into a teller, right? I don't basically set up an account in the classic way. I just have a bunch of money there and I just do stuff with it, right? So eventually, I think the whole banking space as we know it is going to be generally commoditized. If you think about what is Robinhood, what is Revolut, like those companies are actually going straight into we're going after the banks type of model without being a bank in the traditional sense. And when you think about DeFi, that's actually more the decentralized version of all of this. And the one thing that I think we often underestimate, I think, in the space, because we're so used to, and I say this so because in the West, like I was just in Europe and I was talking about sort of crypto and stable coins, and they were like, well, why do we need it and so on, right? And I was like, well, you here are financially privileged, right? And when you look at the map of the world, right, the generally financially privileged places are most of Europe and most of North America, and the rest of the world actually has an average of anywhere from 40 to 10% in which they're actually financially connected, right? I mean, even in Asia, sure, North Asia is pretty well connected, but for the most part of Asia, which is Southeast Asia, which is India, and then you've got Pakistan and all these places, people barely have bank accounts, right? So financial literacy and financial sort of, inclusion is very, very small. We have almost 2 billion people who don't really even have a bank account, right? So when you take that sort of into the lens of things, then how do you include them, and how do you bank them, and how do you transact with them? That's actually what the internet did, right? The internet connected most of the world with information, and now we can have an information exchange with each other, which is a kind of commerce, right? But now, how do I actually create money commerce? Well, I can't do that unless I have something like a currency that can do cross-border transactions. And that's exactly why crypto solves this problem beautifully. But it's been difficult for humans to use crypto. Enter the agent, right? And the agent won't make the payments, say, hey, well, we'll use crypto for you now. The agent's going to say, I'm going to make the payment. And he's going to make the payment in the fastest, cheapest possible way. And if he finds that doing a stable coin is going to save my human sort of overlord 10%, 5%, 2%, he's going to do that. And from a trust perspective, if the human says, okay, well, if you can buy this for me with 2% less or 5% less, go for it. He's not going to make a decision that says, oh, you know what, please use my credit card, unless he gets air miles or something, right? From an incentive standpoint, he's just going to go for what's most economic, because he doesn't care about, there's no loyalty to money in that sense, right? Money has a utility function to transact something. If you get the same product for 10% less, of course you would do that, right? So that's kind of what happens. And agents are going to do things better, faster, and cheaper. And by the way, they're going to do this not just for money, they're going to do this for everything, which is why the entire internet is going to be reshaped, which is why those hundreds of billions of agents are going to be completely rewiring into kind of a new agentic framework, which we like to call Web 4.
Oh, Web 4, yeah.
Yes.
Yeah, we've been talking about it. All the numbers the web could reach like years ago with the metaverse and everything. So bringing it back is kind of a little bit nostalgic. I think, as you were talking, I was thinking, even if we get to a level of trust, so right now people trust AI to give them recommendations almost more than a real person, than an influencer. Because it has access to way more information. So even if you're very knowledgeable on something, maybe there's new data, there's something. So once we get to that, I don't know if we will get to that level of trust in terms of payments, but let's assume marketers ruin everything. Like marketers are infiltrating through, like when you ask for a recommendation on ChatGPT, perhaps it's a little bit influenced from the way things have been written on websites, like SEO is influencing things. Absolutely. And so on. So I'm thinking, like, in terms of marketing any consumer product, how that's going to change, because now you're trying to influence not the human, but the agent. And would that be something that would be done by, like, would a human have input on that, or be agent influencing agent?
I think the human tries to, as an orchestrator, would basically create the sort of influence layer around this. But generally speaking, maybe if I sort of flip the question around a little bit differently, when, and maybe we can just sort of slightly meta question to you as well as the audience, which is, do you think that most of the purchases you're making today over the internet are your sole decisions anyway? And if not, who decides those decisions to begin with? When I'm basically seeing an ad from Instagram or on Facebook, when I get a recommendation from someone, is that a recommendation that really came from someone's free will in the classic sense? Or was he influenced by something that came from, someone who paid some advertising, or we saw some marketing, or we saw some element around that? So the game hasn't really changed here. The only difference is that just how the early days of the internet, we used to think billboards and magazine ads were the way to influence people. And then later on, we had to think about, advertising and clicks and that kind of stuff. And from that, we ended up basically evolving into, we had to be on social media, and we had to be on LinkedIn, and we had to be on Facebook or TikTok, for instance, right? And any company and any individual that was trying to sell a product that was not basically going for the trend direction where they knew where the audiences that basically would make the purchases are going to be, they would lose out, right? And the same thing is the case here. You have to basically get into the new kind of what people like to call AEO, essentially AI and a sort of agentic sort of optimization, if you will, right? The difference though is that the agents can help you get optimized. Like for our own sort of Hello Minds, we have our own AI agents that basically sort of optimizing how you agentic sort of search, basically constantly reminding us how to sort of make sure that you basically are in the right search indexes and so on. And so similarly to how the internet democratized access to broad information, now you have agents who can democratize broad capabilities on actioning towards that kind of information, right? But I also think one big thing that will be different is, a lot of people think about AI in the context of ChatGPT and Claude, and they're very, very powerful. But I think that's actually going to change. Meaning that, rather than thinking about agentic frameworks and essentially chatbots, which is what they are for the most part, we're going to get to a form of agentic sort of autonomous agents. And these autonomous agents, we think, are mostly going to sit in your favorite spots to begin with, as in your WhatsApp, your Telegram, your email. That's certainly how we design our minds, and sort of our investment thesis as well, is that we actually think that kind of direction is going to be much more personal, much more directed, and more importantly, they're going to be social relational, right? So, the lens we take is that the internet, as it was before, often people talked about it as tools. And today we talk about AI mostly in the form of tools. It can help you with this and it can do that type of stuff. But if you think about that, that's what the internet was thought of. And today the internet is way, way more than tools. It's essentially our entire life. It's culture, it's social, it's relational, it's everything, right? And we actually think the agents are going to basically displace and replace that. And what the large platforms have done, they've basically monetized that through the attention economy, creating another kind of microtransaction economy, which is worth almost $1 trillion a year. And Facebook generates generally sort of something like 95% of the revenue that way, and Google something like 77%, right? And that will all go away in the classic sense. Just think about the last time. When did you last click through to a website that essentially Google or ChatGPT, gave you information on, right?
Yeah.
Most people don't even click through, right? So the classic advertising revenue is going to go away. And this has to be fulfilled with some kind of transactional economy on the back, right? Which, before it was very difficult to basically collect revenue that was going to be 0.00001 cents, per transaction, which is what advertising is. Advertising is 1 million views per whatever currency, right? It's essentially another kind of microtransaction. And now with blockchain, you can do microtransactions like this at scale, right, in a way that most systems can't do. And this is actually how we think the whole sort of framing is going to change as a result. We're going to have microtransaction on the back. Everyone's going to talk to agents. You already see this MCP servers, API, CLI, whatever buzzword you want to call, but it's mostly how do I interface with agents.
Amazing. Yeah, thank you so much for joining me today. We already have our next guest waiting. It's been a pleasure. It's always a pleasure to have you on. I hope you have a good evening.
Thank you for having me.
Thank you. All right, and my next guest is a relentless allocator who recently closed a major third fund in one of the toughest climates out there, investing heavily in the Solana ecosystem and real-world hardware. More importantly, he is a massive die-hard Knicks fan who is finally celebrating a legendary championship win. Please welcome Mike Dudas.
Hello, how you doing?
Hi, Mike. Pleasure to have you on.
Likewise, pleasure to be on. Pardon the massive microphone right in front of my face, but I wanted excellent audio quality today.
That's all right. Where are you joining us from?
So I'm at home in Connecticut. It's 100 degrees here, and we're in the dead of summer.
All right. Oh well, I'm in London. It's been very warm here as well.
Yeah, that's what I heard. I heard it's been like Europe is no air conditioning and unseasonably hot.
Thankfully, I have some air conditioning here, but yes, I've been through it as well. So you recently raised a third fund. I want to talk about that. And this is like one of the toughest markets. Like, I feel like you've learned something from that. Do you have some tips on how to pull that off?
Yeah, absolutely. So the funding environment, we raised the majority of the fund in 2025 into 2026, and it was night and day from when we raised our last fund, our second fund in 2022. It's very interesting when the market is at its most frothy and exuberant. it tends to be easier to raise money, which, should be, I mean, I guess it's intuitive in some sense. Investors are emotional, but it's counterintuitive if you actually want, really high quality returns. And so, we raised over the past year, and it was much more difficult in the last raise. When we raised our second fund, we were much less experienced. Crypto was far less mature, from a product, security, regulatory, and frankly, usability perspective. And despite all that, far more challenging this time as a more experienced team into a better market with a lot more clarity and a lot more usage and a lot more resiliency in the crypto ecosystem. But yeah, we're excited. And, at our hearts, we're a crypto fund. It's deep in our DNA. And then, like many other crypto funds, we're looking at businesses now that utilize blockchain technology, but perhaps you don't have tokens and things like that. So we're doing a lot more equity investments and really looking for long durational, profitable businesses, just like any traditional VC historically would.
Yeah, Sixman Ventures has been doubling down on the Solana infrastructure and Deepin. Deepin has gotten a lot of hate. Like, I've been through a lot of interviews where people either were super into it or hated it. What's the dumbest criticism people throw at Deepin projects?
So I think a lot of the criticisms are actually very valid, right? So bootstrapping a network through, a native token, so basically the idea with Deepins is that, you can get a distributed supply base by giving folks a token instead of dollars to contribute to a network. And the criticism that that's a silly model has actually worked out quite well, in the sense that many of these networks, their tokens haven't been properly cared for, haven't been given structures that will allow them to accrue value and become valuable outside of bootstrapping a network. So once Deepins get to scale, the idea is that the token then should have some other use beyond just bootstrapping demand. Perhaps it captures fees, has governance, etc. And so basically a big criticism has been like, well, why do these even need to have tokens? There are many sort of marketplace businesses in the traditional world, Airbnb, Uber, many others, where people contribute labor or other forms of work and receive dollars, and those work out great. And I think that's been a valid criticism. So the onus is on Deepin projects. I think some are starting to basically use the native token, not just to bootstrap demand, but also to provide an equity-like asset, basically through buybacks that represents the value of the profits or revenue generated from the networks. I think some invalid criticisms would be like, well, why aren't any of these businesses at scale, like major scale yet? And I think the reason is just these are some of the hardest businesses to grow and take quite a long time. Marketplace businesses can take decade or multiple decades to get to any real scale, particularly when you have regulatory roadblocks in front of you. So I think we're going to see over the next cycle, these Deepin businesses, businesses like Helium that basically have real demand, have real, are offering a real product, whether it's mobile network or others offer bandwidth or AI compute. I think you're going to see some of these businesses start to break out. I think people have had an irrational perception of the time required to build out real businesses because the time horizon of crypto token holders tends to be less than a year in most cases.
Mm-hmm. Is there a specific crypto consumer product that you use that it's kind of like underrated that you feel like more people should know about?
Yeah. So the biggest product segment that I'm using now reminds me of the thing that got me most excited about consumer crypto use cases. So in 2020, I think it was 2020, started using NBA Top Shot. I love to collect things. And basically NBA Top Shot was a digital representation of a basketball card. And they had these things called moments, and they were like a basketball card, but better because they had video, and it was just a really exciting product. So was really excited by that. That got me into quote unquote Web3 and NFTs. I think one of the criticisms of crypto is that we've had a lot of products that haven't had call it intrinsic value. And so one of the most exciting segments on the consumer side that I'm focused on, we're focused on as a fund, is this collectible space. So as an angel investor, I've invested in a company called Baxis that does tokenized liquor, primarily whiskey today. And as a fund, we've invested in a company called Trove that does tokenized cards, so Pokemon, TCG, and sports cards. And there's a number of businesses breaking out in the space, Collector, Courtyard, etc. And I still think they're underloved. You forget the tokens, like not talking about token prices or anything like that, but the number of users and people who realize these things exist compared to the number who basically were speculating on NFTs in the 2020 to 23 era. It's much, much lower. And, I think it can, should, and will be much, much higher because these are products that people already love. And now, anyone can access them globally with real liquidity at any time. So I really expect the collectible space to grow in a way perhaps that could be, outsized to how large the NFT market got in the last cycle.
Yeah, we've seen a lot of things coming in and out of the industry. We obviously have seen how much prediction markets have picked up recently. Do you think it will be sustainable over time, or is it just will it end up being a trend like we had NFTs and so on?
Yeah. So the two biggest call it new trends or new on-chain trends of the last couple of years have been prediction markets and perps. Really, I would say perps for the most part. Interestingly enough, Polymarket is on chain, Kalshi is not, but on chain use cases, perps and prediction markets have grown really substantially, and they, in my estimation, I think most reasonable people's will continue to grow significantly. And so with prediction markets, largely the majority of the volume for Kalshi, again, which isn't on chain for the most part, is in sports betting, which is just a proven large, high TAM, really exciting segment that people love. And I think with this like sort of return to real world and community, and the World Cup is having the biggest it's ever been, and not only are people going into games, but they're having watch parties, and you see cities just be absolutely electric around them. I think this is sustainable. And prediction markets give a great way for anybody to access these anywhere, like I said. And then what's interesting about perps is for the first time we have a really novel structure for people to trade a broader range of assets on chain. So one of the biggest challenges with crypto going mainstream historically has been, well, hey, this is fun and we enjoy this trading, but it feels more speculative. Like, where are the real assets? Where are the things that we can invest in? And so, particularly with Hyperliquid, and then you've seen a lot of the centralized exchanges follow, getting into real asset classes like public equities, pre-IPO equities, commodities like oil and gold. We're starting to see real assets with real liquidity be able to be traded on chain, both perps and spot, 24/7, 365. And by the way, it's exciting because these things are sustainable. They already exist, and now we're giving them to both institutions and retail in a better form. And you can see, with the adoption by the traditional financial institutions, the exchanges like ICE and NASDAQ, the big banks and financial institutions tokenizing and issuing their assets on chain, they're realizing that the blockchain rails that we've built, with the general availability, the transparent ledgers, frictionless movement, it's just better than what they've been offering their customers historically. And if they don't offer these products, they're going to be overtaken by new entrants or by their peers who adopt them sooner. So, I think that things like prediction markets, again, largely expanding the class of sort of speculative or investable, or even to some extent gambling asset moments, and then perps, making currently investable asset classes more investable in many ways. I think those are trends that are absolutely sustainable, and it doesn't take any sort of weird proselytizing or telling a narrative that doesn't exist today for people to wrap their heads around it.
The joke of like pivot to AI. Everyone's been chasing AI risk capital recently, and my question would be, is crypto VC fundamentally losing the war for attention to AI startups?
So, there's no beating, like AI at this point, is, sort of intelligence is like, yeah, it's sort of the unit that's going to drive, like, it's the thing that will drive, humanity, but like civilization or just like the universe forward. So, to sort of fight artificial intelligence or AGI or any of those things for attention, moving forward would be a silly game, because again, that, that's the unit that will sort of drive everything forward. So then the question is, given a world where AI and artificial intelligence and building, sort of augmented, building products that build upon what a human as we know them today is capable of, knowing that that's going to happen, what opportunities do you have to build products that lead to a better future? And there's a lot of ways where blockchains can contribute to that. Okay, so one of the obvious ones is the foundation models are centralized. They start out, certainly the American ones, the sort of frontier models are closed source, and we see all the back and forth between the government and these private companies on what can be made available to businesses, consumers, and the government. So there's obviously an opportunity here, and you see some emerging efforts, with BitTensor, with Hermes. You see some many distributed AI products and projects starting to grow and starting to see real adoption, Venice, et cetera. So one, I think you have this, just like crypto has always been, hey, Bitcoin is something against centralized money, Ethereum is the distributed computer, an alternative to centralized tech. Now you have the alternative potentially to centralized intelligence. So, I think that's one area. Then you have, Venice, again, focused on privacy. So shielded usage of inference and training and other types of AI development. Blockchains are fantastic for provenance. So in a world where, we have just an explosion of, what's true, what's not, what's human, what's not, I think blockchain provenance, can increasingly matter. And then another area is obviously, these are fantastic rails for transacting. And, I won't go too deep into it in this chat, but this notion of, agentic payments, I think certainly starting it with like metered API payments and things of that nature, so that agents can access products is something that will be useful. Now, that's not to say that crypto startups will accrue, immense amounts of value or enterprise value from these products, but they're extremely useful to society, and I think are going to have play a large part in making the broader public realize that blockchains are fantastically valuable technology, and frankly maybe move past some of the prior criticisms of crypto being purely speculative.
Yeah, is there any founder in Web3 that you think is underrated?
So there are a number. There's a lot of quiet founders, in Web3, and or honestly, I don't love Web3 as a term anymore. I just think sort of like crypto, and blockchain.
Yeah, same.
Yeah. So I think I'll give you just one sector.
Okay.
DeFi to me is a little bit quote unquote out of favor or undercovered relative to I think how much impact it's having and will continue to have on the world. So, the notion that, somebody in Colombia or somebody in Bolivia, has the ability to, hold their assets in dollars and perhaps earn, almost like treasury-like yield on their assets is just continues to be an incredible idea. We have a founder in our portfolio, Aya Kantarovich, who runs a company called August Financial. And, she's fantastic. I wouldn't say she's like loud or brash, but, she's out there building incredible financial products, vaults that allow people to earn yield on their balances. And then their products are composable with a number of different front ends, DeFi apps that consumers or businesses can connect to. And I think that's a lot of the, there are a number of founders like that working on the products that aren't loud, that aren't shouting, but that are onboarding, in sometimes small dollar increments, many folks into utilizing the properties of blockchain that are better than traditional financial institutions.
Yeah, I mean, you mentioned DeFi and like what you don't like Web3 and it's you prefer crypto. I've heard some people saying, and I tend to agree, but perhaps because I went to some fintech events as well, I feel like crypto to some extent, most of it is just fintech, if you think about it.
Yep. And I don't think that's a surprise. Like in hindsight, the fact that we're using, these, these are like a blockchain is effectively like a global distributed, permissionless or consensus-based ledger. And what would you use those for? It would obviously, for the most part, be for sort of financial activity, right? Tracking the movement, the settlement, the size of financial denominated instruments, and so that's what's happening. And I don't think that's a knock on crypto. I mean, these are incredibly large TAM markets, and it's probably really good for the industry and frankly for the population at large that we're starting to use them now to augment, complement, and improve things that humans have been doing for many centuries, rather than trying to invent, call it new schemes to separate people from their money.
Yeah, I mean, technology tends to change things. There's a lot of development technology happening at once in all these different sectors, and it feels like at any moment things could flip. Do you have any expectation? I don't mean in terms of timeline, but is there something that you're keeping an eye on for a potential flip of a turn of events?
Yeah, so I think you're probably referring to like token prices. So in terms of like the actual usage of blockchains, there was a report that came out today, just showing that Solana on number of traders, on volume, on actives, hit all-time highs in Q2. And that's happening across a number of different use cases. It's not just the meme coin speculative use case that was the primary driver in 2024 and 2025. That's exciting. You saw the Robinhood chain announcement this week, which connects to Ethereum, and a lot of the leading, EVM or Ethereum ecosystem protocols are going to be working with Robinhood to give, 100 million plus users, access to fantastic on-chain financial services. So the usage metrics are both there and growing, and that's really exciting. Where I think we're lagging, obviously, is on the token prices themselves. And I view this for the first time as a situation where like people are looking at tokens and they're just saying like, is there a fund? So forget Bitcoin, which is thought of as more of a store of value and a non-sovereign money and is valued in its own way. It's very flow based, et cetera. But looking at, things like Ethereum, like Solana, like Hyperliquid, people are now increasingly saying, what scale do these blockchains need to get to of usage and, fee paying by applications and users on top of them for them to justify their token prices? And I think we're in a healthy environment now. It just took a re-rating. Like Ethereum has gone sideways for 5+ years. I think Solana has as well. And I think we're now at a point where you could start to make a valuation-based case that if there is an expansion, for example, in Solana in terms of priority fees and priority transactions that people are willing to pay for, that there is potentially like a rational way that you could now value that token and these blockchains and the activity. And then same thing for the apps on top of the chains. We've gone through a very vocal and loud period of time for the last year and a half where people have been saying, hey, enough of these tokens that have no value to them. Basically, if I'm going to hold a token, particularly if there's somebody who holds equity in this business, I want to see you direct value to that token. And you're seeing, for example, Hyperliquid does that. Aerodrome, our portfolio company Pump, does that in really large size. And it's increasingly becoming the norm. And I think that's a good thing. Now, it's not going to be, there are going to be, I believe, companies that have valuable dual, equity and token structure, but for the quote unquote crypto market to come back, you're going to need high quality tokens, high quality assets at the same time. So I believe that's starting to happen. You're starting to see over the last few weeks some shoots of tokens that do accrue value increasing in price more rapidly than some of the ones that don't. Do I have visibility into exactly what's going to happen and whether we're going to go back lower over the next 3-4 months? I don't. A lot of that depends on macro, depends on elections, depends on the Clarity Act passing in America. But it does feel like the market participants have a set of expectations that even if we go lower, things are getting healthier, and we can see a path forward to a 2-3 year period of not only valuable protocols that people use being on chain, but the tokens associated with them being justifiably valuable.
I see like a mild pickup. I wouldn't call it a trend, but I've seen here and there different people mentioning sort of like a mild demand for a new structure for crypto investments. Have you seen this? What do you think about it? Do you think we need a new structure?
So, we're investors in a project called MetaDAO, which has this concept of ownership tokens, where the token holders effectively have, all of the governance over the project, and where the founders themselves, only earn tokens if the overall, if the token price goes up. I think that's an interesting and evolving model. Is it perfect today? No, but is it a step in the right direction? This notion of an ownership token, I do believe it is. It's not going to be right for everyone. Startups can take many, many years to develop. They often do require quiet, patient capital. And I think crypto's gotten into trouble in the past by having too many projects that tried to be, like an Ethereum or Bitcoin, where they just launched the token as soon as possible and then tried to, build something out of the token goodwill. And you just can't replay some of those sort of, certainly the Bitcoin immaculate conception type thing, and Ethereum being sort of the first smart contract chain of real substance and belief. So what I think we're moving towards is, one, crypto projects that or companies that don't need tokens, not launching them. I think that's really healthy because there are significant fees being paid and generating on chain, similarly to how they are in traditional financial markets. And that's a good thing. So you have equity-based companies. And then, like I said, earlier, many tokens that are being launched or that have been in market are either launched with or transitioning to value accrual structures. And that's a really positive thing. In terms of new deals that are getting done, I do think, I know for a fact, we're seeing more equity specific and equity only deals where, there's not necessarily a token warrant like there would have been in the past, or where the token warrant looks a little bit different. And you're thinking of it as perhaps resembling tokenized equity in the future, rather than a token with a different design, a foundation, and a different structure. So, I think we're moving more towards closer to norms that you see in traditional private funding markets outside of crypto.
Do you think something new will emerge, given we've talked about like AI, crypto, like the crossover? Do you think a new category could emerge from that? Or is just going to be two different tools, sort of like plug and play?
Yeah, I just think they're super complementary. I don't know what you mean by a new category. I mean, I think there will be, I described some of the ways that I think, blockchains are complementary to AI and can actually add value. I think there will be, for example, I think the compute asset class, like you'll probably have things like compute derivatives. I think those things might naturally evolve on chain. You'll have, new means and methods of financing, CapEx, things like USDAI to finance GPU purchases. Mm-hmm. And so, I think back to what you had said earlier about, hey, this is just financial markets. I think crypto rails and blockchain rails and the markets and participants around them have the potential to be the place where markets for many things in AI do develop at the edge. And I'm excited about that.
Yeah. One concern that comes to mind for me with crypto is I went to these fintech events, and it seems to me that the trend, like if you talk long enough with the CPO, product person. It seems like their way to go about it, these larger, like well-established companies, is to first partner with a company that seems trustworthy and well-established in crypto, and then copy their model and then build it in-house. And if this trend goes on for long enough, that means that these products have, like there's a timeline. Does this concern you?
No. So there are companies that are built to service institutions and large enterprises, right? You have stablecoin infrastructure companies, you have DeFi infrastructure companies, but there is a long track record of big net new companies being built. We talked about some of the categories, like Hyperliquid is a net new company, and the traditional financial institutions are coming to them to list markets on their protocol. So that's a net new company. They're bringing those companies to them. Similar with like Kalshi and Polymarket. Hey, sure, they use some of the larger financial institutions in some cases for distribution, Polymarket, and Kalshi, but they themselves are some of the most used websites and apps in the world. So they're I think it kind of goes both ways, right? They're growing their cash flows, their liquidity, their depth, through partnership with large technology and front ends. But at the same time, they're accruing significant, tremendous value that gives them the ability to disrupt those incumbents. And so, those, I'm just using those as the two largest examples. And I think we'll see many more where native companies do succeed. At the same time, unequivocally, you will have, crypto companies in service of large financial institutions, tech companies, and others who want to offer blockchain-enabled services.
You guys invested on Pump Fund, and they've been doing great. They're more of a consumer product. Consumer crypto hasn't been, like doing as well as in previous year, like last year. Does that concern you? Because in crypto, I feel like anything could be a trend. Like anything could have like a timeline, and anything could feel like this is the best thing ever, best investment ever. And then all of a sudden, a couple years in, and it sort of like starts dying out. Genuinely, like, does that concern you? Do you think, if anything, they can pivot to something else? Like, what's your mental mindset around it?
Yeah. So the mental model, like for Pump specifically, was always, when we funded it, it was pre-revenue. And the idea was, anyone can launch a token. The tokens, the form that took in 2024, 2025, ended up being almost entirely meme coins. And that was very much symptomatic of what the market was desiring at that particular time. We had seen NFTs the previous cycle. NFTs weren't as liquid. They were higher barrier to entry. Meme coins were just like tokenized attention, just at the smallest denomination. And, it just grew into something really, really large. But it's not necessarily pat the pen that that's the end state. And that's not what Pump's end state is. It continues to be, they've introduced a program where companies can launch a token and then have that token convert into a portion of equity in the company. They've launched and continue to develop their creator streaming program where creators can earn fees for launching tokens. In their mobile app, they've launched cross-chain. They've added assets, outside of meme coins. And so they're really focused on encouraging folks moving forward, not only to launch memes, but to launch tokens of other types. By the way, while all of that is happening, they're still doing $1 million in revenue a day on what is primarily meme coins, at the bottom of the market. So I think it bodes well that if they continue to develop, they will become the de facto go-to place for people to launch tokens of all types. Look, I'm incredibly biased as an investor, but there's the potential. Is it a given? Absolutely not. They have to earn that right. There are other fantastic companies that have token launch pads that have good consumer-facing apps for people to trade. But as the quality of assets increase, Pump has a tremendous amount of attention, a number of users of their applications, and is adding token types and cross-chain, and should help them grow. In addition to the entirety of the rest of the market growing, we've seen a number of other consumer trading apps launch. They're adding tokens of all types. You've seen this in the Hyperliquid ecosystem, and crypto is just so cyclical. It is on sentiment. You can start to feel it change this summer, and it's going to change. And people are going to go from the people who were trading memes and crypto tokens a couple of years ago are trading memory stocks and all kinds of AI stuff right now. A lot of it mimetically, and at some point a lot of those things are going to top, or they're going to lose money, and they're going to sort of filter back into I think risk areas and fun areas of crypto.
Mike, I know you have a hard stop. Thank you so much for joining me today. It's been very insightful. It's always good to chat with you.
Really appreciate it. Thank you so much.
Thank you.
All right, take care.
And my next guest seems to have had some emergency and unfortunately cannot replace himself with a humanoid, though I bet if he could, he would. And so my next guest is still a sharp allocator at RoboStrategy, deploying early stage capital into the most ambitious deep tech and crypto native teams in the space. Please welcome Roland. Hi, Roland.
Hey, Mia.
Hello. How are you?
Hey, Mia. Can you hear me all right?
I can hear you all right. It seems like do you have a delay?
A little bit, I think, but no, I think it's fine.
Okay. So I'm excited to talk about robotics. I'm particularly excited about this category. It's not crypto, but as some people might know, you guys were Mechanism before, and you guys were investing in crypto. So I think the first question would be, why the switch?
Yeah, well, first of all, Mia, thank you so much for having us on here. We're probably a bit of a wild card because among all other great investors, we're the ones that pivoted not too long ago. So the switch happened gradually, happened around 2 years ago, after Andrew and the team invested kind of
Seems like the connection is not great.
planted our
We're gonna bring on
flag in the ground and
your partner. Sorry,
That's it.
Roland, your quality is not good enough to continue. So I'm going to bring your partner, if that's okay.
I'm just
Hear me.
Hello.
Hello.
You have quite the setup.
Yeah. How's it coming across?
I feel like RoboStrategy is really the wild card here in the mix, but I'm glad to make it work. So Scott, we never met before. I was expecting Andrew, so this is going to be an improv segment here.
Absolutely.
We're not doing introductions. This is high speed, straight into questions. I'm going to assume that you're as good as Andrew. And if you don't want to answer a certain question, just give me your best. Try to be as bold as you can so we get some good information for our guests here. Hopefully, I will do my best as well. So the question was, why did you guys switch from investing in crypto to robotics? I don't know if you were in the team before.
I wasn't. So I was never
in
crypto. I've always been a roboticist the whole time. So I was recruited by Andrew because of kind of the pivot that the biggest sector of our lifetime is going to be physical intelligence.
Yes, but why did you guys do it at that time? Because at the time, crypto was looking okay. I know you guys invested in Figure. It was such a great investment. If you have any insight, I don't know if you were leading that or if it was Andrew or someone else.
It was Andrew, but I would certainly think that the best investors are the ones that see ahead of the curve, right?
That is true.
Yes. And Andrew has talked a little bit about it in the past. That I can mention that when he was thinking of going to Figure, everyone was telling him, don't do it. And so he thought, okay, either they're wrong or I'm wrong. Either way, there's an asymmetry here. And he just thought it would be a huge opportunity because it made sense to him.
Yeah. I mean, like, more than making sense, there should have been some signs that it was a good time. I think, like, generally, when I think of robotics, I've watched a lot of sci-fi movies. So I think of the scenarios where, like robots would be walking around on the street like we are, and things would be perceived as normal. But there's also the concern that, like they'll be programmed with certain personalities. They might be a little bit more aggressive, or they might be instructed to, like not be as nice to people, and that takes different levels. Does that concern you? Like, as you go through, like, like doing a lot of this research and knowing what different companies are enabling for society, does that ever concern you?
It does a little bit, and of course, all the above are possible. That's just going to happen. That everyone is going to be creating them in different form factors. It's like, the first thing is like, are they all going to be humanoid form factors? And they can take a variety of form factors. They could be human-like but with wheels. They could be non-human-like. They could be just for manufacturing. They could be for caregiving. So they're all going to have their personalities. And I think if you actually look at the Star Wars universe, we think of it as science fiction, but they really thought about that ecosystem really well, because you saw all different kinds of robots there for a variety of different purposes, some for malevolent purposes, some for very, good purposes. That's what we're going to probably see as well. And in the end, we're going to be the ones that sort of decide, because, society sort of decides what they want and what they don't want, what's acceptable, what's not acceptable. So I guess I have enough faith in society that we will sort of choose the right kind of form factors. We will demand the right kind of safety and security with these bots. And the ones that don't belong, they just won't, because there won't be demand for them.
Do you think that, I guess, would the robots take over an amount of jobs to a point where people won't know what to do with themselves? Like, because when we talk about like online, there's a lot of work online, but when you talk about, like building houses, gardening, and all of that, it would be amazing, honestly, but some people enjoy it. And the fact that some people need that, we're talking about perhaps like lower income jobs. We'll be able to do more, certainly, but there's this rising concern that AI, robotics will get people, like jobless. And the question comes, what will we do with our time?
Yeah. And part of it is that the reality is the robots can't come soon enough, because right now we actually have a labor shortage. There are so many openings of jobs that we cannot fulfill. So in many cases, the robots are actually going into places where people either don't want the jobs or you can't do it. And we can already see that there's going to be a shortfall in labor in the coming years. Demographics are dictating that. You've got an aging population that is going to retirement. And then you've got another generation that doesn't really want to do some of those jobs. And the aging population is going to put a lot of demand for goods and services in the economy. That's like, where's it going to come from? And so it's going to be a while before you're really going to be looking at the robots are causing job losses. And I think in the meantime, that means we will find other purposes and other things that we will be able to do. So it's going to be a while before robots can really replace highly skilled kind of labor. And I prefer to see it as that they're removing toil as opposed to removing labor. And that there's always been predictions how technology was going to ruin a particular sector. So for instance, photography was going to put all the painters out of business. They didn't. We get French Impressionism and modernism and everything as a result. So rather than painters being people who were glorified photographers, you think about all they were doing is recording what people were doing. They were portrait artists. Suddenly they were able to be expressive and creative. And I think the same thing is going to happen, is that it will allow a certain amount of creativity. And if you think about it, the guy who invented the plow, he put all those people that were using sticks out of work. And that's how we used to actually plant, is people literally use sticks to put holes in the ground to drop a seed in. And some guy came along with technological process. So that's kind of how technology goes along. And I think there will be a big unlock. It's understandable that there's concerns, but I really think the amount of time it takes to do it, it's not going to be so sudden that society will be able to adapt in time.
Very interesting. So as you do research and go perhaps like talk with these companies in person and such, or virtually, tell me something that I wouldn't know. Like, what is happening behind doors? Like, what is the development looking like that is not already out in the market?
Okay, there's lots of developments of many different form factors, and of course, one of the things that everyone is working on is like, the hand, because the most important part of the humanoid is the hand. That's the business end. That's where things get done. And it's been the biggest engineering challenge everyone has. So you're seeing a variety of very interesting hand designs that are coming out there that I think are going to start to be the unlock to do the manipulation, because cartwheels are nice. They have like an entertainment value, but they really are not productive. They're not something you can actually do in the factory. In fact, you're not allowed to do cartwheels on the factory floor. So you've really got to go in there, start doing manipulation. So you're starting to see that, and you're starting to see them really doing things that are quite interesting. The ability that they have to manipulate objects now is way beyond where you would have expected a few years ago. And as a classical roboticist, where I come from, they're doing things that a decade ago we said, "Oh, that's impossible. You never see a robot do that."
So it's moving fast.
Yeah. It's moving fast, but at the same time, if they can do 80% of stuff, that is great. That's incredible. That last 20% is going to be really, really hard to do it. Some people are obsessed with things like being able to thread a needle. I have to ask, when's the last time you sewed?
Yeah.
It kind of comes up. So sometimes we're asking the robots to do things that even we don't do. So while it's a measure of dexterity, in many cases, a lot of things we're doing do not require high degrees of dexterity, just enough to get the job done. And we set up manufacturing lines to be very easy to do, not be something that's always a challenge for 8 hours a day. We want to make sure it's ergonomic. In many cases, people are wearing gloves and other things that actually prevent them to have the dexterity and the sense of touch. So all the engineers have to do is say, where do we have to go that we can start to do that unlock? And now people, rather than working these kind of drudgery kind of jobs, will now be able to do something that is like definitely is way more fulfilling. And like, that's what I can say is like, fulfillment center jobs are very unfulfilling, which is why the turnover rate there is like 100 to 200%.
I think like when people think of robots, at least for me, they're thinking of the robot that, like what's been advertised, launched like 2 days ago, 1 day ago, this robot that is like moving in a house. I forgot the name of the company.
Oh yeah. This was Weave. Yeah. So it was kind of green in color, right?
Yes. Yeah.
Yes.
But,
folding t-shirts.
But incredibly slow. I wouldn't buy that. It would like personally would get on my nerves, and I would just want to do it myself. So
and I agree with you there. And this is the thing that's interesting about automation, is that we come to accept a lot of things. So we are used to the dishwasher, right? The dishwasher is really slow at washing dishes, yet we accept using it because we don't really care that it's done right there. If I have to wash like a simple dish or something like that, I will do it by hand. But usually if I have a lot, I'm willing to put them in there, and so long as it's kind of done. The problem with a lot of this automation is we're kind of servants to it. We have to load and unload it. The same thing with a Roomba. It's like really slow at vacuuming. So if I know that I've got company coming over in 20 minutes, I'm going to do it myself. But if it's just like, I'm going off to work, and so long as that thing's done when I'm home, it's okay. And so that's the same thing that you're going to see right now, is they're going to be slow, but in the end, they will get the job done for you. And this is the trade-off between, like, if they're working in a factory, they can't be slow. They have to run the same rate as the human. But if they're kind of walking at home, you'll accept it. The same thing like with there are also bots that can cut the grass for you. And they're almost like the Roomba. They're really slow. But the fact of the matter is, I don't care. I go off to work and I come back, hey, great, the grass is cut. I don't care anymore. So this is kind of where the automation is going to be. And the other thing, remember, this is as bad as they're ever going to be. They're only going to get better.
That is true. Can only get better. That's true.
Yeah.
I think my comparison was in, like the dishwasher. I don't want to get too much into it, but the dishwasher is making a sound, but you don't really think about it that much. Well, if you have something moving around the house,
moving around. Yeah.
It's a little bit different. But I agree with you.
The same thing with the Roomba is like, it's kind of moving around. And the thing is, maybe you just do it when you're not there. So it doesn't annoy you. But it's the same thing, is that there are a lot of people that have decided the Roomba is valuable, that they like having them do it. And they accept the fact that, it only does 80% of the stuff. But that's good enough. I'll go over and get the rest of it. The main thing is it makes sure, like, all the pet dander and stuff like that gets kind of vacuumed up every day, and I don't have to always do it. But I know that at least once or twice a month, I have to do the deep clean. That's kind of acceptable. Same thing with the pots and pans. It's like sometimes that dishwasher doesn't know I have to go and do the pots and pans. However, it does free up time.
Yes. I mean, it's like having someone else doing it for you. So if it doesn't matter how long it takes. Yeah, that's interesting. So what is the last thing you think robots will be able to do? Like, as they get better and better, there's this final thing, maybe one of them that comes to mind that you think it will be really hard to get them to do.
Boy, I mean, that's a good question, because every time you think they can't do something, they'll surprise you. And then something that you think they should be able to do, they're like, they just can't do it for some reason. I'm imagining that actually cooking is going to be very challenging. So there's a lot of tasks we have that are very structured, that are fairly easy to do, but there's others where there's a certain amount of nuance and everything else that's a bit tricky. And we think of it, there's like recipes. It's very clear how you make something. You can go out and you can buy the right ingredients for a particular recipe you're trying to put together. And the thing is, if I do it or Michelin star chef does it, the results are just always different because there's some kind of nuance in there. Every time I try to make an omelet, it ends up as scrambled eggs. I mean, no matter how hard I try. And you see that the robots are having sort of the same difficulty there. So that's going to be like the real unlock, when they can sort of figure out what is it you do to cook. Now, they'll be able to cook lots of little things here and there. But I mean, when we're talking about something at like that 5-star chef level, that's going to be a little bit different. And the other thing, of course, if you're a really good chef, it's not just your hands and your eyes, it's your nose and your taste buds, right? You're constantly testing and sensing, like, how is it coming around? Yeah. So the robots are going to have to know, and I don't know that we have sensors exactly for that yet. So that's sort of one area. And the thing to remember is that a lot of times when we automate, we kind of change the environment a little bit for the convenience of the automation. And this is the big thing that people say, like, why humanoids? And the flippant answer is because, we live in a world designed by humans for humans. So the humanoids, if they're going to come into our space, they have to have the same form factor and they have to be able to use our stuff. So if you go into the kitchen, do we redesign our kitchens for the convenience of the humanoid? So do you want to buy new utensils, new appliances, new pots and pans and everything that are easier for them to be able to use? Or do you want to make sure that the same ones that you and I use? Because frankly, I don't want to have to buy a second set of utensils or a second set of appliances. It has to accept my world and be able to go on there. And that's sometimes what makes it difficult. So when you're going to a manufacturing line, you have the liberty to change everything on that floor for the convenience of the automation you're putting in. And when you're done, a person can't go in and use that automation anymore. They're like, that's it. Either the automation works or it doesn't. The idea of like humanoids is to slot in that the humanoid could do it or a person can do it. And you don't have to reconfigure or change anything. Now you might say, hey, I don't mind the fact that I'm gonna have a robot cook my meals every day. But the reality is you don't like cooking every day, but you do like cooking some of the time, don't you?
Yeah. I think that when I think about it, when I think of the question I asked you, I don't think cooking, I actually think intimacy.
Okay, I wasn't going to go there, but
anything is possible.
That's where
here.
A lot of people are going to go.
Is very open. I think some people might think that is like at the forefront, and I thought maybe you could enlighten me on that, because I feel, to me, like realistically, that would be more something that would be less replaceable.
I mean, it sort of depends on the level that you're looking at. So, there can be intimacy and there can also be some kind of care. So a lot of people are actually building the robots to help with like elderly care in hospitals and stuff like that. And there is a certain amount of compassion and touch and empathy and everything else goes along with it. And the problem is that, we're used to like a human touch. So if you're in pain or something like that, just holding a human hand can be very different than holding a robotic hand. And, that's one of the challenges. How do you build something that has that so that, elderly care is good? And again, it comes back to these hands, it's like, would you want something like this wooden hand? And the thing is the robots are going to have different hands. They're going to have big, muscular, metallic hands that are going to be for working in the factory that you would never want to shake, but it's going to be robust and have enough dexterity. There's going to be some that are very soft. They're going to be very delicate things, but they're going to break down very easily. But for that particular task, then we got to find the one that's somewhere in the middle. It's got to be compliant. It's got to be warm and not cold. All these things are a little bit difficult. And then also kind of the sense of compassion that comes in there. That's going to be tricky. And the other thing is, like, you are seeing people making these humanoids that look very realistic. They're putting faces on it. The eyes are doing specific, but you get that uncanny valley sense, don't you? It's like, it is kind of there. I would almost rather have like this cold Terminator bot helping me out in the hospital than this thing that looked like a mannequin that just kind of became sentient. It's there's something,
The other thing that I had in mind was cutting hair, but I've seen some machines. It doesn't look like a human, but there are some machines that people have generated some videos of like something that comes down and then you have like a spectacular hairstyle. I don't think that is possible, but we keep on dreaming.
Fine, because the Flowbee, a lot of people like, they're fine with that, but I agree. If you want to have a really good coiffeur, you want to have something. And the other thing is, like, everyone likes getting a haircut, a scissor cut, right? There's almost a sense of intimacy when someone is cutting your hair. And I just don't know whether the robot will be able to do the same thing.
Yeah. Scott, it's been a pleasure to have you. This was very quick turn of events. I don't know if you were expecting this at all. I certainly was expecting something different, but I feel like this was very insightful. So thank you so much for joining me.
Yeah, you're welcome. It's glad to be here.
And so we go from robotics to a different kind of robot, I would say. The next guest is the ultimate mathematical architect of decentralized economies, a deep tech founder and hyperactive allocator who can look at a highly complex smart contract and spot the exact economic flaw that everyone else missed. Please welcome Tarun, founder and CEO at Gauntlet and partner at Robot Ventures.
Hey, how are you?
Hi, Tarun. It's always nice to interview you.
Great to be back.
I feel like your sound is a little bit low. If you can get closer to a mic or.
Let me just double check.
If there's any way to bring your sound up a little bit.
Yeah, let me do that. How is this?
It's slightly better. If you can improve it a little bit more, would be great. If that's all you can, that's fine.
Let me know if this is better.
Oh, it is better.
Okay, cool.
Okay. I just want to let the people watching that if they want to send any questions, the live chat is on. Tarun, you are the most technical person I have on the lineup, and I want to take a little bit advantage of that. Not for you to go deep technical, but for you to make things more approachable, if I may. So
sure.
One of the questions I had was if you could explain MEV to an 8-year-old in one sentence. You could go more than one sentence, but how would you do it?
I think the simplest answer is you've waited in line at the ice cream truck to buy some ice cream. Someone comes up behind you and they pick your wallet out of your pocket, and then they cut you in line, buy the ice cream with your money, and then give you back the wallet. You have just experienced MEV.
Wow, that's not nice.
Well, I think it's not exactly analogous in the sense that, like, whether someone has stolen the wallet or not is not true. Maybe they put in their own money. Maybe they paid. Like, if you go to a lot of amusement parks around the world, like Disney, you can pay to skip the line.
Yeah.
Like, how they skip in front of you might differ depending on the incident, but somehow in a lot of ways it's about skipping right in front of you or going right behind you and just changing the ordering of things. So I just wanted to give, you said an 8-year-old. I was like, what's the easiest thing to talk about?
Ice cream, it's perfect. I say 8-year-old, but I was really thinking of myself. I'm joking. If you could forcefully merge any two crypto ecosystems together to create a super chain, which two would you pick? You could never do this again. This is your only chance.
I think for the lulz, for the pure laughter, I think it has to be like trying to merge like either Base and Solana or Base and Robinhood chain. Robinhood chain's too new though, so it's like hard to make it, launch this week. So I'm gonna have to say Base and Solana. I mean, maybe it's a boring answer, but it also is kind of the
Base
most
and
obvious.
Solana. Yeah, I guess it would be the most.
I think the Robinhood chain and Base merging would be funny because I think it would be the type of war that wouldn't be public. Like I don't think any of those people are going to be like writing the types of tweets that the Solana Foundation writes anytime soon.
Well, that reminds me of another question. Is decentralized finance actually decentralized, or are we rebuilding Wall Street with faster settlement?
So I think the nuanced answer is there are things where there is true decentralized finance. It has been yet to be shown that those things can scale to the size that people want or expect of a truly standalone financial system. Sorry, but the things they've been good at is like filling holes in the cracks of like where the normal financial system fails, right? Like I launch a new asset, new token, I can get liquidity for it immediately in a DEX, and the DEX will generally be decentralized. Yes, there's MEV and all this stuff, but honestly, prior to crypto, there was really no way of launching an asset and have people trading it immediately in the same way, right? That just really didn't exist. And so there's, in a decentralized way, no one can censor you, stop you, government can't stop you, right? Now, the problem with that is like, so far we have not made models that scale with that. I think a lot of the things that are the biggest successes in DeFi right now are not in the truest sense of like the, at the era of, building an L1 or like building Ethereum or Solana. They're not truly decentralized in the same way. At the same time, if I look at a lot of the decentralized protocols, they're trying to do, partnerships with fintechs and Wall Street that also kind of cross some boundary that's like not fully decentralized anymore. Yeah. So I think at the end of the day, it's like to scale, it seems like we have had to make some compromises. I mean, my hope and dream is that, in the world of abundant intelligence and AI and users who don't have to be as sophisticated, maybe, we will find a way of scaling the purely decentralized things. But I would say right now we're sort of in the post 2017 boom, right? Like 2017 happened, there's the ICO boom. Everyone in 2016, when they saw the ICO boom, they're like, oh, great, I can just launch a token on Ethereum, launch a token contract, and then it'll get listed on an exchange. Binance didn't even exist then, but whatever exchange would trade it, Gate, whatever. And then, of course, people realize, hey, there's censorship. Like the countries these exchanges were based in started not letting them list stuff, ... right? And then some of the exchanges would move from jurisdiction to jurisdiction. And that inspired DeFi because it was like, hey, there's this thing I want to do, I can't do it, whatever. Now, arguably DeFi existed before that kind of event happened, but that event brought people into wanting to put their liquidity into DeFi. I don't currently see the same type of, raison d'etre of like, oh, this is why we need to use this stuff in pure DeFi. The irony is I see it sort of in AI a lot more, where like everyone is now worried about censorship in a way that I don't think even like a month ago, no one cared about censorship in AI. And my belief is that there's going to be, it won't necessarily be DeFi itself, but it's going to rhyme a lot with DeFi, market structure and open source AI that kind of has a lot of the lessons you learn from DeFi, but maybe it'll scale that.
I see censorship and privacy. I feel like there's more people thinking of privacy, and I might be a little bit biased because, for example, like if I reference my mom, like my mom doesn't fit the standard mom, but I see and maybe it's also like my environment, like most of my friends might be in tech, you know. So I don't know if that's like a general thing, but I've seen a rising interest in increasing privacy. And I wonder if that's where the industry, you know, like gets ahead a little bit again, because, you know, like private payments like Zcash and such. Have you thought about this?
Yeah, so I think privacy has always been this, as someone who's been investing in privacy things in crypto, AI, outside of that sort of hardware stuff, and sort of got into crypto arguably because of Zcash. And so privacy was sort of the first thing I cared about. It's been this thing where it's like everyone's stated preference is always like, yes, of course, I really want privacy. But everyone's revealed preference is like, I'm not willing to pay more for it, or I'm like not willing to compromise on accessibility, usability. You know, like there's always some implied trade-off. Now, I don't think that means forever that will be true, right? Like there is a version of the world where, you know, privacy matters a lot more. Oftentimes, historically, that's happened due to, you know, war and like
surveillance,
and things like that. But right now, we have a lot of the surveillance. We have some of the war, but like not in this full-fledged way. And yet, people still seem to be going for convenience. And this is not me to say I don't philosophically still believe in it. I think like people often say they really care about it, but then their actions don't match their words. And like, I would love to see that change, but I haven't really seen much of that.
Seen some people like deleting their Facebook accounts because of privacy and things like that. But I think on the practical side, if they're really hooked on a flow, a system, say like whatever, like their payment system, I agree with you. It might be harder to switch. Okay, so which L1 has the most technically impressive architecture, but it doesn't have that many users?
It's a good question. In 2026, I don't actually know what my answer to that is. Like, I think there's a few years ago, I could have given you a very straightforward answer.
What would you have said?
I think a few years ago, I would have definitely said someone like Near would have to be.
That's what I had in mind.
You know, there's a lot of technical impressiveness in Hyperliquid, Hypercore, but I would argue HyperEVM not very impressive. So it's sort of like a weird thing where the decentralized part is not impressive. The centralized part is actually very impressive. So sort of interesting trade-off, because it's like one of these things where it's like blurring the line of like what really is decentralized and not. Obviously, it's much more decentralized than a full centralized exchange in a lot of ways, but you know, admittedly, it's sort of like makes them blur. But there's a lot of very impressive technology there. It's just not the decentralized part is not the impressive part. Zcash, obviously, I think the hack has been hard, but I think there's stuff they will be doing. I think certainly all the ZK EVMs, ZK L1s have a huge amount of impressive technology, you know, the Starkwares and stuff. But again, it's people don't care about privacy. They don't care about paying more. They don't care about, you know, they're not willing to make those trade-offs. So those things have like no users whatsoever. I think those are probably high up there, but they're also the ones that I think right now, it's very hard to see them ever crossing the chasm. Where someone like Near, it's like underappreciated, but like they have clearly started to find real product market fit. They have persevered through the cycles, and you know, I think, you know, they have a very good, not just technology story, but just like community and founding story at this point that like they will survive. I think also, you know, the SWE kind of folks at some point would have certainly been very high up on there as well. So I don't totally know. Near is probably the easiest answer, but I almost would say that they're not underappreciated. Like they are underappreciated, but not so much that it's like, you know, the ratio of technology is not underappreciated is not as crazy as some of the other ones. But on the other hand, some of these other ones, I'm like, they have no chance of breaking out.
Do you think Near could like break out and become like super widely? Because I know they have users, but they're not like, people don't really talk about it.
I think Near, if it breaks out in the way that like Stripe breaks out, right? Like most, you're in tech, so you hear about Stripe, but like the average person in the world does not know when they're paying Stripe, even though they're paying them.
My brain doesn't even think of that. Yeah,
right,
true.
Right. So like, I kind of think Near Intense is like a Stripe-like business. It's like a back end for a lot of people, but it's not going to be like a consumer-facing thing, and that's totally fine, right? It could just grow a lot and be very successful, but not just and I think that's the direction they seem to be successful in. So that's kind of why I would say is like, I think people know it's good and successful. Like it's just above my cut line on the like, languishing, really smart person, because like I think they do have something working.
Yeah. What is the most elegant piece of code in crypto that also happens to be completely economically broken?
That's a good question.
You could just say first thing.
Arguably, like every oracle is economically broken, and in the sense that like I have no real guarantees on them. So, but like it's sort of, that's the duplicitous thing. The point of an oracle is to kind of bridge the gap between Web2 and Web3, so it like kind of misses that. I think arguably a lot of the meme coin launchpad bonding curves, that especially the ones that were like, we're going to be pumped up fun, but we're going to like have a special bonding curve, and then like they got MEV'd more than the pumped up fun ones. I think there's like a lot of examples like that where there's like a very good theoretical idea, or maybe very good is giving them too much credit. There's like an okay theoretical idea, but then they don't like use the product enough that they don't realize there's all these other ways of hacking it. And I think like the meme coin stuff has a graveyard filled with tons of the launch pads, tons of the Telegram bots that like had this huge growth, and then one or two users figure out how to exploit them, and then they died. And like, to me, those are actually the funniest ones, because those are the fastest economic exploits, right? They weren't even that hard in a lot of cases. They were like figuring out how to front run certain types of users, or, oh, like your Telegram bot broadcasts its transaction too early all the time, and then people front run it. It's like stuff that's not even that hard, but there was a time in the meme coin mania where there was the amount of money being lost to this stuff was egregious.
What was the biggest mistake that you've seen? Maybe it's something that is still around, actually. I mean, people are not launching as many tokens now, but what was the biggest mistake you've seen repeatedly? I guess that would be more interesting, when founders were designing their tokenomics.
Yeah, so I remember, there was this whole era of everyone being like, oh, the dev rugged by pulling all their LP liquidity. But I remember seeing one meme coin protocol, which I think was like a Telegram bot launched their own fork of Pump.Fun and whatever. And they made the bonding curve such that the higher the amount bonded, the faster the the deployer could remove liquidity. And so it created this like horrible like wash trading incentive of like, oh, I'm just going to add my own money so that then I can pull out more first. And I think whatever Telegram bot was doing this probably did this purposely, to be honest. Like I'm on the fence of like, was it an exploit, or were they nefariously purposely doing this to like capture value from their users in a bad way? And yeah, I think it was like almost 100 million from this over time. This is not like a bridge exploit where there's like this was like over a few months, maybe even 6 months, but it was like kind of egregious. I think that one to me takes the like, taking advantage of your users thing to the limit.
Yeah. What is something that could look perfectly secure in a smart contract audit, but it's actually a ticking time bomb?
I mean, again, the easiest answer is always an oracle, but that's kind of boring. I think like a lot of stuff, since we're talking about like the smart contract themselves versus like how it's parameterized or set up, I think a lot of stuff where I've seen kind of nuanced exploits that go missed for years has been stuff of like verifying zero knowledge proofs. I mean, like the Zcash thing, like these type of problems are very nuanced, and like pre-AI, people just like were, you know, you have the kind of the skill of the auditor, and an auditor is more of like a hacker and like a tinkerer, right? They're like putting together things, trying to like find ways to break it, but they themselves might not understand the theory, right? They're usually not people who know a lot of math, know a lot of algebra, know a lot of like how these ZK systems are put together. They're just like, I read the code and I'm going to take a hammer and try to like beat at it in 20 different places. For the most part, there are some auditors who do know that, but there's so few of them that like, that's why the ZK security stuff is actually very hard. It's like, but obviously now, who needs the cryptography PhD anymore? Like, I have enough AI power. Now it's a little duplicitous to say that, like it's not totally, like I don't think you can totally do it autonomously yet, but you're getting there. And like the AI stuff is much better at finding this out because it understands the intent of the code. It doesn't just understand what the code is, it understands like what the math that's supposed to be trying to replicate is, but in practice, you know, like whenever you're writing code, it's never really like exactly the mathematical abstraction you have. It's always like, I put together a bunch of different things and like hopefully they approximate it well enough, right? And that's sort of the difference between the theory and the implementation. And the AI stuff is actually very good at knowing the theory enough to know how to correctly tinker. And I think the humans have been historically just, again, like not people who are good at both skills, whereas AI has been better at both skills. And that's sort of why you're seeing that. So I think if you think about ticking time bombs in existing code, that stuff has to have a ton of stuff, because I just don't think there was even real audits on them when they launched in a lot of ways, because like, there just weren't enough people to do it.
So you think now with AI, it would be different?
Yeah, but then it's a cat and mouse game, right? Now everyone has AI, so then it's like, okay, well, I can be very secure, and it's like there's always this like attacker defender type of aspect to this, and I think we're going to go swing the other way. I actually think the bullish thing for crypto in the long run is it's sort of like the first place to get very serious AI driven attacks. You know, obviously a lot of them are social engineering, but like if you look at some of the code that's written, it's like clearly I think the attacker would have had more trouble, or it would have taken longer. They would have extracted less without AI. Like you can tell some of the code is certainly not handwritten. And it's like, was that due to discovery from the AI, or was that due for discovery from the human, right? Like you don't see their prompts, you don't see the traces, so you don't know, right? But I would argue there's clearly already some amount, even if it's not exactly provable. And I think if everyone has that, the defense is going to be better, right? The AI-driven defending is going to be better. But the other thing is, there's no fucking way all this closed source shit at banks is not just going to get completely destroyed. Like, I think like I think all these people are lying to themselves. They think like my code base is safe or whatever.
Yeah.
And I think crypto is going to be the first place that everyone's going to be like, well, these guys got attacked left, right, and center first. And actually it's safe. You know, when some big bank gets exploited in North Korea and like loses $5 billion, like the way that like the US central bank almost lost $1 billion from this North Korean social engineering attack like 8 years ago, that's when people are going to be like, oh, well, what's safe? What's left that's safe? And it's going to be like, yes, crypto, because it survived all the attacks and it was done in the open and you could see what happened fully.
I see. So like with AI now, I feel like everyone can sound smart. So
yes, but they all sound the same type of smart. That's the problem. So then it's like,
that is my question. I think like you would know this, like, because you could probably pick up like the BS in the mix of things. So like what's like a concept? I'm thinking like technical, but it doesn't need to be technical. Like what's a concept or framework that I'll go specific to crypto people misuse the most to look smart?
My snarky answer is using bold text in tweets, because most
Bold
people don't
text?
bother learning. Most people don't bother learning the special characters to write bold in text in a tweet. But you can tell when everyone is copy pasting from an AI because they copy pasted the Unicode for the bold, so it like shows the bold in the tweets. So whenever you see this like
It's
bold,
bold all the
big
time.
text, bold, big text. I'm just saying there's some people who you can see this huge stylistic change.
Yeah.
The other thing I think that's interesting is like the kind of I think the security stuff people are a little more like, okay, yes, they know there's stuff that's
I'm imagining like a founder pitching something and trying to sound really smart, but it's completely off, and you're like, what are you even saying?
well, I think certainly people who are like non-crypto founders or have been in crypto for a while, we're just like, oh, well, AI means I can do all this crypto stuff cheaply and for free, and I can just like make a wallet. And
Yeah.
I feel like there's a lot of people who are like, oh yeah, security is solved. It's already solved. You know what I mean? Like, and I think like that aspect I see a lot of. The other thing I think I see a lot of is just like people, right, like pretending to really understand something and then just like memorizing a lot of buzzwords about it that
Yeah.
are like correct, but then they just like, you ask them some questions about it and then they just like say the same buzzwords again. Like this has always been true, but I think the prevalence of buzzwords has become like very high versus like before it's like maybe someone knew 1 or 2 buzzwords. Now they've memorized 30 buzzwords because they just keep asking the same question. But then you notice that the same 5 people use the same 30 buzzwords repeatedly. And you're like, all right, they clearly asked the same model, roughly the same question.
Yeah. I guess like if someone doesn't know, it's better to not even go there. I tend to project the future, like obviously is a common it's been a common trend here on the stream to talk about AI, robotics, etc. So to me, like I obviously I like talking with VCs and investors because you have to think about the future and how that's going to look like. So thinking of AI agents running on crypto rails, I'm thinking, will they replace human DeFi users? Do you think by, say, 4 years, 2030, we would see that completely taking over? Or is this me projecting a movie?
So I think rote tasks that are like execution that you right now outsource to people, I totally believe that in 5 years, like figuring out how to TWAP an order, or like why pay someone to do the TWAP for you, figuring out like how to route across multiple venues. Sure. I think when it comes to like the alpha generation stuff, I'm much more skeptical. There's like been a lot of really great work recently on like injections of people are doing in language models to make the models like all crowd into some trade, while like you take the other side of it. So it's like, hey, if I can ask the model the same thing, I can just find a way to basically make the models all crowd into some trade of something I either bought already or something I'm shorting. And there was a really good example of one where like someone found a way of like injecting a bunch of really what are called homoglyphs, which are like like a Russian character that looks like the letter I but isn't an I. It doesn't have the dot, like a Russian or Turkish character. Injecting a bunch of homoglyphs into research reports that are like, hey, this stock is going to do amazing, whatever, and then observing like but like the one with the homoglyph says it's going to go up, and the one with the real character says it's going to go down, and that's like done by someone who has distribution of Ring report. And then they basically like track like which LLM basically is like pushing this, especially with the assets like low liquidity. And so there've been a bunch of these examples where it's like tricking the agents is its own game. And I think like that's gonna, so I don't think the alpha generation stuff is like I think people are using AI to generate alpha. I don't think AI finds alpha for you on its own. That part I don't believe, because I think people will eventually just train their agent to trick the other agents, or themselves make a strategy to trick them. So at that point, then you need to have your own custom intelligence, train your own models. This is why all the trading firms are training their own stuff, right? Versus like using commodity stuff. So I think like that's in the long run, it's like execution, yes, alpha, no.
Sounds like AI agent wars or something like that. Like
yeah, I mean, realistically, like all trading has kind of like TradFi trading has kind of been like that for a while, and it's just more that the agent stuff makes it the barrier to entry lower, but it doesn't change like how much excess advantage you have to have over everyone else. Like if everyone is saying the exact same thing, then clearly there's a strategy of trading against that somewhere, right? So I think there's certainly aspects of that. On the other hand, there's also like a higher likelihood for like meme stock type of things where everyone is crowding irrationally for a very long time because all of their AI agents are saying the same thing. And so there's going to be a whole class of trades that's just like follow the trends from the agents. And then, kind of, so like, I think it's just going to be more like the strategy space gets more complicated for that.
Yeah. Do you remember that? I can't remember his name, but like there was a guy that that started a fund, and the investments were all analyzed by AI. Like everything he got was AI driven. Like the entire thing. Did you see this? I don't know if this rings a bell.
No.
So he was performing. It was performing amazing, and it made news. So I was wondering if at some point that becomes a thing. Of course, like if everyone, the argument could be like, oh, if everyone has an agent, then anyone could do that. But also, like perhaps he has an edge because he's early, or he's actually really good at giving whatever instructions.
Yeah. So the value is going to be your context or memory, how much you've trained customly in certain environments, right? That part, no doubt, right? There's no doubt that that's going to be the
because he didn't have any experience. Like I must add that. Like he was very young, and
But that stuff is very human, right? That stuff is like what you're putting into the model, not what you're getting out of the model. That's what I mean. Like alpha generation is still going to be what you put in. You're not going to be able to like get it to give you some great hypothesis that no one else has early.
Yeah. Okay, interesting. What's the most unhinged but brilliant research paper you've read lately?
Unhinged.
More on the unhinged than brilliant, just because I feel like that would be more.
I think there have been a lot. There's like this, like, I don't know about unhinged, but I'd say,
okay.
Prediction markets have existed for a long time in the academic literature since 2003. Realistically earlier, but like 2003 is, I guess, like one of the bigger kind of papers came out. And what I'm finding now is there's this like kind of like FOMO / jealousy from all these academics who like wrote all these papers from 2003 to 2015 of like the theory for how you should design prediction markets. And then of course it turned out it was like kind of not correct. Like crypto people found something that was more correct. And then obviously now it's like kind of even different than that. Because again, these are this hybrid decentralized models. So it's like that changes the way it works. But there are all these papers written by the same people just trying to be like, oh, like prediction markets are a scam, whatever. And it's like unhinged because it's like they're just like jealous of their old work being successful. Like they're just like, oh, everyone is front running you. The Oracle is always manipulating. Like, and it's just like kind of funny. It's like these people invented this field. People figured out, took the entrepreneurial risk and became successful building the things from that field. And then after it's successful, they're like a curmudgeon, like, oh, I didn't make that money. So like, fuck these guys. I'm going to like try to take that. So I feel like that's a little unhinged. It's like a 20-year revenge arc. You know what I mean? That's like.
Yeah. Do you think that, I was talking about earlier about the trends, and you just mentioned prediction markets. I have a feeling that prediction markets could be a trend. I don't know if I'm off on this, but I think this is. I would like to ask you that question. Like, do you think prediction markets will have eventually a they're on a timeline basically, and eventually will die off? Or do you think it's going to sustain the same way like people invest in stocks and such?
Oh, I think to me, there's no doubt in my mind, but obviously I'm a biased early investor in prediction markets, so maybe that's a caveat. But like, you know, I invested in prediction markets in 2015 in a bunch of failed ones that were centralized. I also invested them in poly market and stuff, but in 2020. But I just don't think there's any turning back. I think like the genie's out of the bottle. People love this stuff. It's more accurate than news. I think my bigger take on prediction markets is that the markets themselves are actually going to end up being kind of inefficient / not making that much money for the venues.
Yeah.
But they're going to be more like media companies where like people, I mean, you already see this in like, if you look at the number of visitors to Polymarket and Kalshi secondarily, it's so much higher than the number of traders. Like it's a very small set of the audience is actually providing the truth seeking, like the journalist function of like trading, right? But there's a credible number of people looking at it, and there's sort of an influencer economy that's already starting to be kind of built up of like how you curate the news on Polymarket, how you curate which markets are interesting, what you're showing certain markets to your social media feed first, you know, like here's the alpha on this market, right? So there's a sense in which they have a bit of like a social media / almost media company aspect of like people care more about the price of the market than trading on the market. And you can't say that's true about most financial markets, right? Like where, you know, yes, there are some stocks, some, you know, it's by and large, there are exceptions, but most people really do care about, who are looking at it, care about trading it. Prediction markets kind of are almost like a media company though. And I think their terminal value, they will be much more valuable because they have competed with and successfully replaced media and or social media.
Yeah.
It's just like the prediction market itself is almost just like a mechanism to like enforce some amount of truth seeking. But after that, their competition is much bigger.
It's a bit of entertainment. Like it feels like it's financial social media in some way.
It's like all of this decentralized social media garbage bullshit stuff that people have done over the years. Like,
yeah,
prediction markets are basically that. They are a better version of that, and they are a version that makes money without the media part being monetized. Imagine if the media part was monetizable, it would be a totally different game. Like they would be bigger than Meta, right? Like I think that's why Meta wants, like I think it is actually disruptive to social media companies in my opinion, long term, like not now.
Long term, okay. In what way? Like, because you can comment on their markets, but you can't really do. There's no
so, like,
DM.
if you look at early Twitter, one of the reasons Facebook was very nervous about Twitter was like Twitter was the only social media network that like journalists went on and broadcast live news. Like people would first read. I mean, it's still kind of true, not as much, because now like every social media is like kind of interconnected. But there was a time where it was like the first place to see the breaking news in a war zone, right? Like Arab Spring 2013 or whatever. And Facebook then started doing all these deals with publishers to like get the publishers to put all their content on Facebook, so Facebook would get some first mover advantage, and that did kind of shrink the gap. But there was a time where people's entire consumption of certain social media networks was purely to read the news, basically. And if sometimes people stop believing the news as much as they believe a prediction market, which the elections have shown for some events that's very true already, but imagine that's a larger portion of events in the world. There is going to be some point at which it just is the news source you look at. You will go to polymarket.com, you will go to tiktok.com, and it'll show you you go to Robinhood and it's showing you the things, right? It's like at some point that will be a story. Like the trading activity will generate a story itself. Like the AI will read the trading activity, it'll read the news elsewhere and generate the story, with the prediction market giving it some truth, some way of not hallucinating. And in some sense, that's how people are going to consume media and social media and the news in the future, more than what you see now. That's like my long-term belief.
Yeah. Oh, that's awesome. I like that. Tarun, thank you so much for joining me today. It's been really fun. Have a good rest of your day.
Thanks. See ya.
See you. Oh, it was so nice having that background music. I was really enjoying that. I like classical music. We should have that next time. To our producer, just a little comment here. Or perhaps like it's better to be quiet, you know. So for everyone watching right now, if you're finding value in what you're listening, if you're enjoying the guests, I would incentivize you to share this with your friends. And we're going to keep having a really nice lineup. So my next guest is a sharp allocator who spent 4 years as an investment banker at Goldman Sachs before moving into digital assets. He specializes in managing massive multi-million-dollar token and equity investments across the entire ecosystem. Please welcome Alex, investment partner at Yeezy Labs.
Hi, everyone. Hi, Mia.
Hi, Alex. How are you?
Very good. Enjoying the sunshine. Thank you.
Joining from Dubai?
No, I'm in London today.
Oh, yes. We're same time zone. Such a nice day outside.
Yes.
Alex, it's been a minute since I talked with you. I believe market has changed drastically since we last talked. The first question to you would be, how do you make sense out of what's happening right now? Like, how would you describe the current state of the industry?
Yes, it's been a while. I think we all love like a bull market. There's a lot of interesting things to see every day, but bear markets have their own attributes as well. In fact, I think as an investor, most of the returns, like the outsized returns that we've done, came from investments we've done in bear markets. So it's a good time to invest. It's a good time to build as a founder. In a way, it's also better that you don't look at the markets. That there's people that actually delete the trading apps during bear markets so they can focus on building. Some people do that because they just lost all the money by trading. So I would say that the market is the market. You just take note of it. And as an early stage investor, in fact, you might as well, live and breathe during this cycle so that you can identify the best builders at this time of the cycle.
What would you say was the harshest thing the industry has experienced in the past 6 months?
Oh yeah, that's a very easy answer. We've experienced a bunch of hacks. Almost on a weekly basis over the past months, there has been some exploit of sorts of different, magnitudes. That's always, really unfortunate to see, and it sucks. But I think it also allows everyone to take a step back and kind of think about the security and the implication of how you should build in crypto. There is a lot of adversarial players, both like state-sponsored, all sorts of individual. Now that we have AI tools, it's actually very, very interesting time to be building. And, everything that we have is developed at such a fast pace that the industry is changing.
You must because for whoever doesn't know, Yeezy Labs is connected to Binance. I imagine you talk with a lot of institutional investors. Even being here in London, everyone is more, TradFi driven. Even if fintech, they're a little bit more closed off towards crypto. So crypto being down, I imagine you must have experienced some criticism to some sort. What has been the biggest, I don't know if the right word is pushback, but criticism towards the industry since the crypto market's been down?
Yeah, I think there's various ways to approach that. So yes, institutions and institutional investors are taking a lot more interest, and I think the reason why is because the regulation and the regulators, especially in the US, have opened up to the industry. So we have clear ways to engage with the companies that build and operate in crypto.
Yeah.
I think it was very obvious that this time will come. Although one of the main pushbacks that we all get, whether you're like a builder or a large crypto crypto player like an exchange or a wallet, I think it's about the nature of the utility of the things that we build. I think crypto as an industry has been very good at producing a lot of speculation, which is very common. I think speculation is not necessarily bad. It's just if it's the only thing that is being produced, then there's a lot of pushback against that. So we're seeing it with prediction markets right now. I think the speculative angle took foothold, but then the actual utility that comes from prediction markets, which is gauging people's opinion across different in different spaces, geographies, will take effect as well. Likewise, in the crypto industry, I think, let me give you an example. So I think stable coins are a perfect example of this. The initial idea for having a stable coin was to eventually promote more speculation, because in order for you to lock in your P&L, either loss or profit, you needed to have some form of integration with fiat rails before the advent of stablecoins. So someone, and we know who, came up with the idea of a stablecoin. Now you can move everything, including your speculative and locking in your P&L and all sorts of other speculative strategies into crypto-only rails. And that was great because then we could also start building DeFi. And with time, we kind of graduated from having a purely speculative utility into having more things like an earned product. Right now there's a lot of stable coins that pass on yield in DeFi to the users. And then the next wave of stablecoin adoption is in payments. So we started from speculation, we end up in actually delivering value for people in emerging markets that pay each other in stablecoins that were completely unbanked or primarily underbanked. So I think with time, we managed to actually produce value. It just took longer to get here than we initially anticipated.
Well, it sort of seems like, depending what is driving the industry, it feels like it goes in waves. So if we're talking specifically in terms of institutional adoption, it feels like now we're closer than ever. Why are institutions more confident? Is it because now everything looks more solid? Is it because of regulation? What is driving that?
Yeah, so the regulation is just the spark. It allows people to sort of open up. If you roll back, let's say 1 or 2 cycles, if you were, you mentioned my alma mater, right, Goldman Sachs, and they have personal experience about that. 2017, if I went into a room, which I did, by the way, and you talked to like a managing director and you mentioned to him, hey, I really love crypto, during the weekends I trade Ethereum or participate in ICOs, and then I do later on like DeFi, yield farming. They'll look at you as if you're some like bonehead, right? They would think you're a gambler and would probably question how you got the job at Goldman. So it will put your career at risk, pretty much. Like talking about crypto and TradFi, and we have lots of examples, from the very top of the leadership of various banks in the US that argued they would fire people who touch crypto if they're an employee of those institutions. So that was around 2017-18. In the meantime, we had kind of regulatory clarity around some aspects of crypto, and as we mature, it will cover the entirety of the crypto space. So now it's actually the opposite. Now, if you want to advance in your career in these institutions, you actually need to have a very clear strategy. How do you do, crypto or blockchain or digital asset adoption? In fact, if you don't have a strategy, you will likely be left behind, because apart from opening up a lot of revenue opportunities, there's various products, this traditional financial institutions start building with crypto rails. It's also a cost-saving one. So you can, enable all sorts of different cost-saving measures by moving things onto chain. Not least like tokenizing all sorts of what we call real-world assets. So for that reason, I think the regulation is just a small piece, like it's one Lego. Then we have like how much revenue on top you can generate, and how much cost you can save, and then how much innovation you can build. And we spoke, and some of your other invited, distinguished people on this show mentioned about AI. I think AI, the fusion of AI and blockchain, is almost inevitable, because agentic finance cannot happen with traditional banking rails. It's just not possible, right? Like you have $1, you can split it into 100 units, right? Cents. And that's about it. Like you only have 2 decimal places that you can operate with. Of course, like in the back end, you can do more division if you want. But blockchain actually are divisible all the way to like a lot more decimals. And that's just one example. The other is that blockchains are by default programmatic. So, programmable money, we heard that a lot in the previous cycles.
Yeah.
It's actually needed to enable agentic finance. And it has to work 24/7. It has to be secure, ideally decentralized as well. And also open source if you want to really like gain lots of adoption.
Yeah. What do you see as, if you do, as demand from the institutions? Like what's something that they want from the industry that maybe is not there yet?
From crypto, I think they need a few things. I think they really need people that are serious about building important, useful applications.
But more specifically, because there might be someone listening that like that might be a bit too vague.
Sure. So I think, look, crypto has a culture of trying things out, and then if they don't work, like people just discard them. I think permanence and sort of more professionalism in crypto is something that will likely be required in order to get a foothold with these institutions. Now, that means that the industry matures. It's probably going to get boring as well at some point, but that's what happens with all the industries. I think we've seen it on and on, from the automotive industry, which was kind of a very eccentric way to move people around, to now highly regulated and perhaps somewhat boring at times.
That's an interesting comparison. Okay, so from that angle, what's an established company that the public might perceive that will stick around for a while, but in your perspective, it's just not going to last?
Oh, that's a very loaded question. I don't want to bet against any company, to be honest. I think there's going to...
This is just a fun question. Like, of course, this is not investment advice. Like, this is a fun show, and people should take responsibility while watching. This is more entertainment.
Got it. Okay, let me answer this in the following way. So I think banks, like legacy traditional banks that we all know, are probably not going to last in the shape and form they are right now. I think every single bank will become a stablecoin company. So that's really it. They say they're going to pivot into having most, if not all, of their infrastructure working on a blockchain-based, model, with the currency being denominated in a stablecoin format.
That's it. That's the banks.
That's it. Yeah, banks are not going to be around in the way they are right now. Yes.
Okay, I'm bullish on that. I like that. What's the single most rewarding bet you've made on an underdog founder?
Yeah, that's I mean, we have, this is asking a parent, like, which one is your favorite child? I think we have a lot of good bets that we've made. Also, okay, so I think we work with a bunch of founders. I like Ethena founder, Guy, he's good.
Oh yeah.
I think what's really stands out about that is like how they think about risk management, and that's very important, especially in markets like this, right? So like turbulent markets reward the ones that have the most risk management hat on. So that's one example amongst a lot of other great founders we backed.
What do you think as a category, as a vertical, in hindsight, was a bad bet that you guys specifically bet on?
I think it wasn't just us. I think as an industry, we kind of got very hot about like GameFi and Metaverse in the previous cycle. So I think that was a pretty big sort of oversight. I think it was very short-lived because people were really participating in those, ecosystems as a way to yield, to farm yield with extra steps. So the game were the extra steps. It wasn't really because it was really fun to play, and they really enjoyed the the attributes of those games that they really stuck around. In fact, no one did. So most of those games are actually dead. Token is down, 99%, and everyone kind of forgot that we went through that very exuberant period. So much so that some of the big tech companies actually changed their name as well towards like a metaverse-inspired.
That's true. You think it's not going to come back?
I think, look, the product market fit makes sense to have digital assets in the form that people are still buying and selling. That happens even now with a lot of non-Web3 or crypto-based games. But they're not portable, and those are locked in those ecosystems. So putting those on blockchain rails, like skins for different items in games, makes sense, but I think it will not happen as fast again as we might think, because no one is actually necessarily like finding that as a big hole in their gaming experience, right? So if I play games sometimes, first thing that I log into a game, I don't think about, hey, can I take this and put it in my wallet? What I'm looking for is like, is this game fun to play? If it is fun to play, and then I discovered all of its features, perhaps only then that I get to the point where I start actually actively investing time and resources in the game. I think then, well, perhaps, I spent like $100 on this game. Perhaps I should be able to also monetize that effort. So if I open a bunch of loot boxes and I get some rare items, I'd want to actually be able to sell that or loan it out or whatever other financial transactions that might be available. As it stands right now, that's not really possible. And perhaps a reason is because it's on purpose. But imagine you have a game like, GTA 6. It will have like hundreds of millions of players. If you take that game and then put it on blockchain rails, and it will have its own currency, its own kind of economy, you would essentially be building an economy that would likely be larger by GDP, numbers than a lot of like European countries.
Yeah. Like when I was younger, I don't know, I didn't know about crypto at this point, but I have two examples. One was a social media platform, and another was a game that I played a lot, this game. So the game situation was, you make a lot of money on this game, and then you have a shop, like you can open a shop and you can sell stuff. This was Neopets, for anyone watching, if you're familiar with it. And you can earn Neo points. And I remember making so many Neo points. I would have my brother like playing on my account as well, and or like transferring by buying something from my account. And I was really excited about it. And I even had my account hacked. That's how much Neo points I had there. But I remember thinking like, oh my God, like would be so cool if this was money. And like I was young, like, you know, like 50 euros, I guess, would have felt like this is awesome. And I had like way more. Like today I'd be like, this is probably more like, I don't know, like 1,000. I don't know, maybe I'm exaggerating. But I remember having that feeling, and I never had any concept of crypto. And then the other example is there was a competitor to Musical.ly, which is what TikTok is today. Musical.ly is what TikTok was. And I had a big profile on Musical.ly, and this company approached me. It was called Cheese with a Z at the end. I think they were from China or something. And you would earn some points, some cheese. And I believe that one would translate into actual money. So I remember like reposting all my content there. There was nobody. I think I was one of the people that were posting most amount of content. And ironically, I never withdraw. I don't know how, maybe it wasn't possible in the beginning or something, but it got me excited about it. So I think there's a way. I don't know if younger kids think like me because I'm a little bit crazy, but I still feel, I don't think the metaverse, maybe, I don't know. I think that feels like a stretch, but the gaming industry, I feel like it could work.
Yeah, I agree. I think those are great examples. So where you can see product market fit. It's just, it also requires a fun game, not just the mechanics that are enabled by the blockchain. So we're still not there. If we had some fun games to play, they probably were not discovered. I have not seen them, but yeah, in the meantime, I think we'll get back to this question. Can we actually enable GameFi, but on top of really, really fun games, not just some mediocre gaming experiences.
Yeah, the game comes first and then that comes later.
Correct.
Alex, thank you so much for joining me. It's been a pleasure.
Of course. Thank you, Mia, always.
Thanks. All right. And my next guest is one of those people in the industry that if you know, you know. He spent years watching how traditional multi-million-dollar venture funds completely mismanaged capital from the sidelines, and then decided to take matters to his own hands and launch his own fund along with two friends to show everyone how it's actually done. Please welcome Oliver, co-founder and managing partner at Paper Ventures. Hello, Oliver.
Hello, darling. How are you?
How are you? Where are you joining me from?
I am currently in SF.
Oh, amazing. How is it there?
It's okay. Full of nerds and virgins, but yeah.
Nerds and virgins. I guess. What about, like, are you looking into, like the tech scene, like AI stuff? Is there any crypto conversations going on?
Not crypto really out here, to be honest with you. I think crypto's kind of no one really cares about it too much in SF at the minute, from my experience anyway.
Yeah.
Everything out here is AI. It's very lively, very, I guess, extravagant, and a lot of people are running around with pushing intelligence. I guess they don't really understand, but whatever. Generic shilling, I guess, which is flops.
Yeah.
Very vertical, right? So. Yeah.
Mm-hmm. So you used to be an LP on other crypto funds. I don't know how many actually, but I know you were an LP on one that is very close to my history. And I know we've talked privately about this. I don't know how much you want to share, but I'm curious to see, because now you've been around for a bit. How is your experience going from LP to actually running a fund? Is it as easy as you expected? Do you feel like perhaps you're being too harsh? Like, what's the feeling around that?
I mean, running a fund is not overly hard. Like, there's just one job description, right? Like, make loads of fucking money. That's it. And unfortunately, being an LP in many, many funds, I can confirm firsthand that most of them don't do that. Ventures never change, right? Venture in general is just a Ponzi, right? So you can dumb it down, you can make it a bit worse, but like it's just managers taking their management fee, right? Nothing's ever going to change, you know. DPI doesn't really exist or hasn't existed much in the crypto side of things, unless where I've put capital anyway. There is some outliers, but most of those outliers, the good managers at those funds have already sort of packed the suitcase and disappeared off to a new industry.
Yeah. Do you feel like you've learned something as you launched the fund for the first time that maybe would be valuable for anyone thinking about doing that?
I mean, my previous firm, the reason I left that fund was it just sort of grew too big, and like deploying sizable tickets like with Ascensive was just, you could deploy the ticket, you just can't really get out. There's no exit strategy on it. So, I mean, on venture specifically, I think smaller funds are always going to be better. Like, it's great. You can go fire whatever, a $2-3 million ticket at whatever's been hot the past year. Athena, Berachain, Celestia, yada, 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 right? And get your 100x from seed, but like, you can't get out of that position. So like, you might as well have just only fired 250K or played something liquid, right? It's easy to spend money. It's very hard to cash the money out in crypto, especially on the liquid token side, right? So.
Did you guys you didn't fundraise, you just put your own money, right?
No, we raised for paper. This was 2023. Yeah.
How would you describe that experience? Did you find it easy or?
Yeah, I mean, it was only like a 25 mil fund, right? So obviously myself, Danish, and Avila already had track records. So like it was pretty much closed within a week.
Oh, wow.
I think we're like 80, what are we? More, like 85, 90% deployed now. Yeah, I'm not really into the 300-400 mil funds, right? You just can't. I get it, but I mean, most of the ones that I put money into, all they did was buy Bitcoin and Ethereum, and like, you really want to pay 2 and 20 on buying BTC and Ethereum? Like, that's just mismanagement from the manager side, in my opinion.
I think your position is really interesting because like LP turn GP is like, I find it interesting. Like, what's the biggest lie funds tell their investors during market turn down?
They mark a lot of stuff up, you know, like a lot of managers mark stuff up high. Paper profits are not profits, right? I mean, the joke was why we called it paper, just laughing at everybody else. But I have some places I'm an LP, and like they have a $200-300 million position in Pump.Fun, or I'm like, why am I getting an email saying this is amazing, you've got a $200 million position in Pump.Fun? Like, I'd rather you just go sell that 200 mil position and send it to zero, right? Like, but you can never get out of that 200 mil position or whatever it may be, right? So
yeah,
like, don't write it down, right? If you can't sell it and give me the profits, then don't write it down. But I mean, look, that's not the name of the game, right? It's paper profits, raise a new fund, get your management fee, pay your salary or whatever. Like, it is what it is.
So you call it like a Ponzi. So do you feel like you're running a Ponzi in some way?
No, I mean, like, I think it's more Series A funds sell to Series B funds, who sell to Series C funds, who sell to Series D funds, or whatever, right? But like, if you have all of those funds, you're just selling your own bags and marking it up, right? It's just, I don't know, there's so simpler ways to make money, you know, like, just fucking press the red button and sell, you know? But maybe it's just a lot of think managers get sort of too high on their own supply, right? Like they get a project or a company that launches well, does well, and next thing you know, they think they're best friends with the founder, and like, yeah, like most of them just talk shit, you know. I think it's just generic, whatever.
When you say just press sell, you're talking about like liquid fund.
No, like when you have there's a lot of, even companies we've invested into, right? Like, tokens launched, something's happened, like companies changed. We don't deem it a valuable investment anymore. Like, we don't just let it go to zero, right? Like, we exit the position. Like, that's our job, right? A lot of other managers just kind of, okay, well, we just write that one off and leave it to zero. Like, no, just go sell everything. Business is business, right? Like, not like, I don't know, I think everyone's just too like, a lot of people on the venture side, they try to be very prim and proper. I guess very American, like just like generic bullshit. You know? I guess it's the easiest way to put it.
Yeah, I see what you mean. What's usually like when you're talking with companies, with startups, what's something that comes across as, and not something rare and obvious that you would find rarely, and it's very obvious, but something that you've picked up perhaps over time, or perhaps from being good at picking up things from people that you find, for you, it's a tell that it's not a good investment, basically.
Oh, that list is quite long.
It has to be something that wouldn't be so obvious, and that you find that actually happens more often than people might think.
Founders finding a reason to take something that already looks successful and just make an add-on to it, you know. Glorified copy-paste stuff. There's a lot of that now. That's you know, like I get the Hyperliquid, right? Great product, cool, whatever. You don't need lighter, you know. No one cares about it. I guess if you go speak to every market maker out there, hey, would your life change if lighter doesn't exist? No one gives a shit, right? Like Hyperliquid's fine. We don't need another 50 perp dexes or whatever, right? And I'm not a hype holder, by the way. I've never had any affiliation with it. Don't use it, whatever, right? But like, product's fucking great. Everyone talks amazing about it. We don't need that another 20 more times, you know? Like, I think that's when it's very easy to spot that founders are just grifting, want to go raise a big amount of money or whatever, right? And then just go take salaries and stuff like that. That's a lot of crypto in general.
Yeah. Okay. So I'm getting a bit distracted because our next guest seems to be having some technical issues, but I'm listening to everything you're saying. And I bet that the audience is following as well. So from founder pitches, what's something you like about a founder, I guess, because you have a very, you have like an outlier personality. That's something that I find really interesting about you. And I would imagine the way you judge investments is, I don't know, but like perhaps a little bit different than a traditional VC. What is something that you look for, perhaps in character, perhaps in the way they work, that would be less common on traditional? When I say traditional, it's more like common, well put together VC funds.
I like the founders that can answer the very basic, simple questions that most people don't ask them. That's a huge value add to us. And it's like interesting. We ask like very basic things of, okay, what do you guys actually need? Like, what are you struggling with? Not marketing or fundraising. Don't give me like what do you actually fucking suck at, right? And the amount of founders are like, oh, like we've never been asked that question. And I'm like, why would you not just ask that fucking question? It's very like, what the fuck? Yeah, that's when you get founders that can just answer those very simple common sense things, you know, it's going to be a lot easier path.
Yeah,
it's a lot easier problems to solve when things go to shit, which they always will with every founder. Like, always going to fuck up somewhere or other. But like how they're going to handle it, right? And with those very simple questions, you can see how they can sort of handle things under pressure, which is, if you can figure that out, usually then you're just betting on people, right? Which is makes sense.
Yeah. What's interesting to you right now in terms of investments?
On the crypto side or in general?
I'll ask double question. I want to know in crypto and outside of crypto.
In crypto, not a lot, if I'm being honest. There's a lot of stuff, but it's all pretty crap. I think crypto in general just needs to go back to the basics of what it was originally here for, like payments, transactions, and whatever, right? No one wants to wrap their Amex points and stick it into a fucking DeFi vault, like all this random bullshit that's getting fired around now. And honestly, if it's just about making money, like, which it should be on the investment side, like, probably generic to say, but like, all the money has just gone to AI. You know, like energy looks great, space stuff looks great, like really novel stuff that's like so wild and out there. Like
robotics, are you into robotics?
Yes, I've not, it's cool. I've not sort of gone deep into it, but and I'm probably not really going to, right? Like if I want to know anything, I'll just call Andrew or something.
Space feels like you're investing so far down in the future, you might not even see it coming. That's how it feels for me. While like robotics and AI. Tell me.
Like, are you? I get that of like, but then are you an investor or are you a trader?
Oh, I see what you're saying. Okay.
Like people would misunderstand the difference, you know. So like, yeah, will I invest in some robotics companies? Yeah, but like, it's kind of silly for me to go and do a ton of DD on stuff like that, right? If it's robotics and it looks interesting and it's like novel, like I'm just going to call Andrew and ask his thoughts on it, or something like that, right? Like, it's I think people try and be an expert in things when they should just use their network. When the network is going to be way more intelligent, right? Like, so.
Totally. I obviously agree with that. So you think crypto doesn't have anything, won't have anything interesting going on, or you're sort of like waiting for something interesting to happen? Are you pivoting, or are you gonna just go check something else while this is sort of like cooking?
I think it's hard to say you're pivoting. It's more just like, my job is to make money. Like, I don't really care what industry that's in, right? Like,
yeah,
obviously if that industry is going to be whatever, pets or home goods or real estate, like I'm not going to do it. I'm going to go find something different because that's boring as fuck for me. But like something in the tech and something weird and autistic and out there, like there's loads of stuff, you know, like there's data centers being built at the bottom of the sea. There's people building companies where they're putting Bluetooth stuff around Earth, like so much like random shit that's like, okay, this is like interesting and cool. And like venture is about taking those bets where it's like, this is like just a stone zero or like completely fucking insane. You're not going to get that with another DeFi protocol, right? Or another Perpdex or any of that stuff. Like, it's kind of flushed out. Industry's boring on that side for me right now. And even if it was making good money, like there's just not enough liquidity there. Especially to run like a large scale fund, in my opinion.
Interesting. Okay, so you're in a SEF. Obviously, all the AI stuff is happening there. I'm imagining you're looking into AI stuff. I've heard it's overpriced. I've heard that there's somewhat of a bubble. So are you not concerned with that?
I mean, I guess, I think people, yeah, sure, valuations are high, but like valuations in crypto have been high for fucking 10 years. You know, like no normal seed round of a company should be starting at 40, 50 million, but everyone still fucking funds it. So it doesn't really matter. Like valuation is, yeah, so everything is always going to be overpriced no matter what, because everybody always wants something cheaper. So it just based upon what your exit strategy is. But I think most people, they focus on how do I deploy money in these sectors, not once my money is deployed, how do I get the profit out of that sector? And then you adjust your valuation based on that. Like sure, is a space company seed round at 250 mil valuation overpriced? Yeah, sure. But like when SpaceX is going public at $1 trillion, then no, it's not. Your multiples theoretically can be there, right? So valuation is always based upon your exit multiple, like not the industry-wide sector, you know? I think Bezos' new AI company just was what, 38, 39 billion post-money seed round. Like, is it overpriced? Like, right? Like, half the people will say, yeah, it's insanely overpriced. Half the people were like, who cares? It's Bezos. You just bet on him anyway, right? So, I think it's not really a question that can actually be answered.
Cannot be answered.
Every deal is in a vacuum based upon the valuation, right? Like,
so if you find something at a good price, it doesn't matter the state of AI, I guess.
The valuation to me is who is pushing and managing the company. You know, like, yeah, that's what it is. So,
okay, well, thank you for joining me. It's been a pleasure. I wish I could talk with you longer because I haven't talked with you in a long time, but I'm sure we'll catch up at some point. Have a good rest of your day. Enjoy SF.
You too, darling. Bye-bye.
Bye. All right. We've been doing this for a while. It's been 2 hours and a half. Okay, so my next guest is the strategic force deploying institutional grade capital at Maelstrom, alongside with Arthur Hayes, pioneering a massive shift away from volatile liquid tokens and straight into cash flowing off-chain infrastructure giants. Please welcome Akshat, co-founder and managing partner at Maelstrom. Akshat, welcome.
How's it going?
I'm glad you managed to make it work. I was live, but I was following everything that was happening, seeing you going upside down. I'm glad we made it work. It's been testing how good my focus is working today, and I'm glad you made it happen. You're also I brought you in very last minute, so I really appreciate you joining me today.
I'm slightly losing you, but I can hear most of it.
Oh no, this is not great. Can you hear me? Well, it seems that we won't have you in the end.
I think I'm losing you.
Okay, so perhaps we can bring Oliver back, producer. But Oliver is away. Oh, he's back. Perhaps we bring Oliver back. Akshat, I'm really sorry. Oh, seems like you're working. And you're gone. Okay. Sorry, Akshat. Maybe another time. Oliver, seems like we have a little bit more time. If you have the time, I would love to keep chatting.
I will. Let me... Coffee. Sure. I'll send you a bigger invoice.
Okay. That's all right. Okay, tell me about anything interesting you've seen in AI there in SF, because I'm a bit skeptical. I think everything is a little bit overhyped at this point.
Do you know what? There's a lot of stuff going on here that's not just AI. I think everyone sees SF as AI. It's not. I would probably say 40-50% of the stuff is AI, but like with SpaceX, I guess, what do you class as AI? Right? Like, there's infrastructure. So, like I said, there's a company who's putting data centers at the bottom of the sea, or they're going to try and do that, right? Like
data centers at the bottom of the sea. That's interesting.
Yeah, the cooling issue or whatever, right? Like that's a pure venture bet for me, right? There is. I'll try my best not to mention any names or whatever, but like. So I'll give you the...
you can mention whatever. So, it's up to you.
There is a company I looked at about a week ago, which they are doing something with Bluetooth. So I'm going to butcher this explanation because I've only just briefly skimmed over the deck. But Bluetooth will pretty much now become Wi-Fi on there. So the Bluetooth will come straight from satellites and be crossed everywhere around the world. So if I'm in SF and you're in London, like I can send you a 100 megabyte folder or whatever it may be, like via Bluetooth. Like that's what they're trying to do, right? Basically extend the range of it to, I'm obviously butchering it, right? I'm not a technical guy, but like, it's like stuff that like would just be very basic level valuable to people, right? Like it's hard to send a file and keep it sort of structured well. And if you zip it and email it, or it's airdropped, or if I send you something on WhatsApp, like it becomes distorted and shitty, like just solving those very basic level issues. And supposedly, like all the infrastructure, or I guess software, or whatever you want to call it, that is already pre-built into pretty much everyone's iPhone. So it's just a switch. Like a lot of random stuff like that, which you're like, oh, like that's very simple, like makes sense. I understand the basics of this, or this is just really massively out there, like data centers at the bottom of the sea or whatever. There's a lot of random novel energy plays. You know, like everyone's just make more chips, make more chips, make more chips, right? Like, sure, maybe in 5 or 6 years, there's just dump sites everywhere with a massive influx of chips and then no fucking energy or space to power most of these chips, right? So a lot of people are trying to solve issues like that. It's just a more fun, vibrant kind of shoot for the moon type of stuff that seems to be happening here. So, and I've only been here a couple of months as well, so I'm still sort of getting somewhat integrated.
Yeah, yeah, no, I get that. Did you feel like you had to like build a network there to find these deals, or you just went through, because you already know a lot of people?
No, luckily, everyone in SF is also a degenerate gambler, so a lot of them play poker, so it was very easy to build up, or I knew a lot of them from,
yeah,
I guess sort of ICO
network.
and SF and crypto side was actually relevant, but yeah, it's been interesting to see a lot of people return or come back, or I know I've always thought SF was kind of, yeah, I've always thought FS was a bit of a shithole.
Yeah.
Like it still is, like it's still like pretty scruffy and whatever, but like there's something happening every day, every night, you know, like, which is kind of cool, right? You go to New York, it's not, right? Or it's just the same idiots doing a house dinner or whatever the fuck. So
yeah,
that's been good, you know.
That's been good. Are you gonna stay there for a long time?
I don't know. I think you've always got to be in Europe for summer, so I'll probably go back to Europe for 2 or 3 months and then figure it out. I expect I'll be splitting most of my time between sort of Hong Kong and SF moving forward. Though.
Okay. Well, I'm gonna be in Europe, so perhaps I'll see you around.
Yes.
Thank you for joining me for a few more minutes. It's been lovely to have you.
Yeah.
Okay, so maybe we bring Akshat a little bit later if he can figure out good connection. We're gonna keep going with our agenda. This next guest is the mastermind behind the industry's DeepIn Meta, renowned for executing massive, incredibly lonely, high-conviction bets on physical hardware, networks, and hyperscale infrastructure long before the rest of the market catched on. Please welcome Chayun, investment partner at Multicoin. Hello.
Hi. Nice to meet you, Mia. How are you?
Nice to meet you. You're one of the few guests. I think you're the only guest. Well, we had someone replacing, but you're perhaps the only guest that I've never actually interviewed before. So I'm excited.
Yeah, I'm happy to be here. Thanks for making the time.
So I mentioned in your introduction, lonely high conviction bets. What has been the loneliest, most contrarian thesis that you've supported? And do you have one right now?
Yeah, I mean, look, I'd say DeepIn as a category has been certainly lonely at certain moments in the course of the last 2 or 3 years. And it's kind of how it always is in crypto and crypto capital markets. Certain sectors and themes tend to get more attention than others. And for a kind of asset class like DeepIn's, where the price action is like very correlated to, the success of the network, so their ability to acquire resources they need on the supply side. It's been, when the market's down, that directly impacts the success of those companies. And so, we were the first to partner with Helium when they were inventing this model. And then we've sort of worked very closely with, extensions of that into things like Render, and Grass, and GeoNet, and things of that nature. But we are still extremely, high conviction on the category. I think you look at networks today like GeoNet and Grass, and they're just very steadily compounding demand side revenues. And I think it's one of the more, it doesn't really get as much airtime as it used to. But we're still massively convicted on, net new teams and existing teams that are continuing to compound in the space.
I'm curious because I haven't talked with you as much. I don't know if for the audience this is boring, but how do you feel on the Solana versus Ethereum kind of perspective? And what I mean by this is like, if Solana wins the L1 infra war completely, what happens to Ethereum? Does it become like a museum asset?
Yeah, look, we're no strangers to being bearish on Ethereum. And we've sort of like for the longest time held the view that the thing that matters is building, a layer that is high performance,
Yeah.
consistent resistance, and low fees. And unfortunately, Ethereum's only able to give you one of those. Solana is able to give you all three of those. And we're starting to see the revealed preference from institutional spot issuers and candidly, net new founders that are looking to access capital markets, all over the world. But Solana is like the de facto place. And I don't really have to make the argument. You can see it on chain. You can see it in the rate at which new credit products are being issued on Solana relative to Ethereum. You can see it in the rate at which new founders are choosing to launch their tokens on environment A versus environment B. So it's already happening. Ethereum's just sort of been stuck between a rock and a hard place for quite some time. It does sound like they're trying to rejigger some of the commerciality through things like Leap Labs and things of that nature. But there remains a lot to be seen for an asset of its scale and size. And so, look, markets will do what markets do. I think fundamentally as a network, Ethereum's in a pretty challenged place. And, I think both sentiment is turning on Solana, but on the technicals as well, I think we're starting to see validation that this is what, this is the default environment for new founders, new institutions.
I don't know if you are in a noisy place, but your sound is a little bit off. We can hear you, but it's
okay,
not.
I'm sorry. Yeah,
it's
let me
not,
try and
yeah.
move a little bit. I apologize. I'm not in my current home setup. I'm traveling for 4th of July, so I'm outside. But let me try and work some things out.
Okay. In the meantime, anyone watching, you can send us questions. You can share the stream with your friends. We have coming up, well, we don't know if Akshat's going to make it, but we're going to try bringing him back. We're going to have Santiago Santos joining us. And of course, we're going to have Hoseeb from Dragonfly joining us as well. We have Mert on the lineup, but I'm hearing that Mert is not feeling so well. So it's we're gonna find out if he joins. Perhaps he joins together with Hoseeb towards the end. Let's see if Shayun is back.
You can have a bald guy special. You can put Mert and Hoseeb together and
like, oh, I would be overly stimulated with both of them at once, but I guess there's a chance it will happen, and I might need that because it's going to be towards the end.
Fun. Is this better? I tried some settings on my side, or is it still kind of murky?
I think because the sound is coming through, because you're wearing the AirPods, the sound is coming through that because you have the sound block for the background, which is great. It's not that bad, so we can continue.
All right, let's power through, and we'll get it better.
Okay. What's the most frustrating part about arguing with ideological maximalists who hate practical network scale? I guess this is like a question angled fighting with Ethereum maxis.
I mean, look, I love fighting with Ethereum. I love fighting in general. Like, I think one of the things that is underrated and unique and rare about our space is that, people really care. And, like, regardless of whether there are merits to their opinions, people have opinions and they are incentivized to voice them because they have capital assets that reflect the performance of, how loudly they're voicing their opinions and how accurate their arguments are.
Mm-hmm.
And, that's unique, right? Like, a lot of industries are fairly insular. I'm sure, like, in like the semiconductor manufacturing process, there are people who have all kinds of different opinions about like what is the first order correct, way to do things. But you don't hear about them. They're not on Twitter, or like they're maybe restricted to like some dark corner of the internet. But like, crypto is, built on the backs of religious figures and communities, and I think the more I'm very firmly of the belief that all attention is good attention, and so I love fighting.
All attention is good attention. That's very bold. I mean, we know that in the industry, that has like a higher cap. I guess like people are less, they're more likely to do more outrageous things. I like that. That aligns with the Solana ecosystem very much. When a thesis you spend months researching fails completely, how do you mathematically separate bad luck from bad judgment?
Yeah. Look, I think theses failing it's like a part of life, right? Like it's the same as like any venture investment. Yeah. Like the vast majority of them are not going to work, even though the hit rate in crypto and crypto capital markets are like slightly better. But what I will say is that there's very rarely like any sort of thesis work that goes fully wasted. I think a good example of this is, we invested for the longest time in this idea of distributed compute networks, right? So aggregating like consumer grade GPUs from all around the world, or like long tail data centers, providing token incentives to the supply side to keep them retained on the network, and then essentially using them for distributed inference or potentially training purposes. The latter kind of never worked. The first sort of worked to some extent. And we made investments in companies like Render and Ionet and Cusco, and all of these were sort of the same sort of instantiation of that core thesis. And then sort of over time realized that just the supply profile here is not necessarily the right one, which is to say, inference workloads require such tight bandwidth, such tight networking properties. They require production grade GPUs, and just like the latency and the memory requirements of like doing this work was essentially just like not going to make it, production performance grade. And so that thesis, while it continues to work on in some cases, like the data centers seem to be working, that thesis may not have played out exactly the way we thought, but it sort of fed into where I think, this is going in the future, which is compute as an asset class. And so the idea now is, you have OpenAI and Anthropic spending trillions of dollars every year in CapEx, and there's no real robust financial markets around compute. Like you can hedge energy futures, and you can forward reserve chips, but you can't really go long or short compute on a 6-month time horizon or a 12-month time horizon, which is ridiculous, right? Like if you think of compute as a commodity, and if it's like the entire US economy is like levered to it, you need robust financial markets, you need derivatives, you need hedging. And so now we're seeing teams kind of really build that core infrastructure around compute as a financial asset class, as opposed to trying to like organize it on the distributed ends. So that's just like one example of like a thesis that we didn't think, we knew the market was huge. The market continues to be huge. That specific instantiation that was not perfect, but like we now have a new thesis, which I think is going to be, a better instantiation of that core view.
It's interesting. Why does the mainstream Silicon Valley tech industry still look down on crypto infrastructure builders? I guess like this question. So let me rephrase this. Why is, because I was just talking with Oliver and he's in SF. Why is SF not interested in crypto?
Yeah, I mean, look, I have a somewhat contrarian view on this. If you step back maybe 5 years ago and you thought about where is the cheapest cost of capital for a founder, where can a founder who has the least amount of product and the least amount of experience raise the most money at the highest price? Okay, 5 years ago that was crypto, right? Those founders used to come to us, right? They used to come and want to build something that barely made sense broadly in the Web3 space. And today that founder is going to AI. They're going to the venture firms that are based in the Bay, because you can have half an idea and go out and raise $20 million for whatever agent harness it is you want to build. But it's all the same cycle. It's all global. Like it's all the same sort of wave. It just happens to have shifted in the other direction. And so AI is obviously, like, you don't need me to tell you that it is the hot ball of money that is sort of like capital flows moves around. It was in crypto 5 years ago. Now it's in AI. And what that generally tends to attract is the wrong people. And so when I look at the set of founders today, really, the ones who are doing crypto, especially in San Francisco, like they're doing the contrarian thing. They're doing the thing, they're taking the status hit. Like they're walking around saying that I'm building in crypto, and those are the people you want. The people who are like missionaries. You don't want mercenaries who are just like in a space because it's hot. So I actually think this is like the best time to be doing crypto ventures. It's the best time to be a crypto founder. There's a lot less kind of noise in the space more broadly. And I think that's a healthier environment. Like we had gotten overextended 5 years ago, obviously. Crypto made a huge bunch of promises to the world. It delivered on a handful of them. But relative to the prices and relative to where things were, it was definitely too hot. And I think what we're seeing now is a period of market efficiency. Like markets always get more efficient over time. And that's exactly what's happening here, right? It's just re-rating in a way that is more healthy and more sound. And so, yeah.
Let me just stop you for a bit because we're hearing some background noise. Is there any way you could sit perhaps further away or I don't mind you picking up the laptop and moving around, like if you're comfortable with that. That's right. We're on the go.
Sit outside.
It's fine. Yes, go anywhere. This is, we're on an adventure here. As long as we can hear you, because, like the most valuable thing is ultimately what you're saying. So if I can't hear you. So what we have next, we're going to have also a little break because we don't want my Aura ring telling me that I'm being a bad girl for sitting all day. So that will come in a little bit, but for now, we're going to join back with Shayun.
All right, how's this? Is this clear?
Oh, yes, so much better. I wish we had started here.
All right, I'm so sorry for that.
Yeah,
cool.
always go into nature. No, as long as there's no background noise, we'll be able to hear you. Glad you found the spot. Okay, so fun question. So if you had to take all Multicoin's money, you get it all back, and you had to make one single bet, where would you put it? You just have one.
We've been fairly concentrated as investors historically. I do think that like diversification is the opposite, is the enemy of returns. You do want to concentrate into your largest winners. I'd say I'm most convicted, between Solana and Hyperliquid. It's kind of a toss-up, right? Like those are two of our largest positions right now. They are demonstrating real product market fit. They are, I think, bellwethers for the rest of this industry. They are, they are both those ecosystems, both those communities, both those products, I think are exceptional, and a very strong example of like what you can build in this space. So yeah, I it's hard picking between children, but I'll say Hyperliquid and Solana, and you can sort of go from there.
Hyperliquid, okay.
Okay.
Yeah, okay, that's good. That's valid. Okay, so what do you make up of the current state of the industry and where it's going? I don't want to keep this too open because I've asked this question before. Like we have some interest from institutions, so it's not like the industry is dead or anything like that, but there's lack of engagement, I would say, on the community side. Is this a concern, or is just the industry maturing? That's sort of what I mean by what you make out of it, and then projecting towards the future. Paint me a picture of what you think next year will look like, and like we know you're projecting, so just make whatever you have in mind.
Yeah, look, crypto, as I was saying earlier, right, like as an asset class, every market sort of matures over time, right? It gets more efficient over time. And 5 years ago, crypto was a fairly inefficient market. Things were priced based on attention and flows, and were pretty untethered from fundamentals. What's happening now is the pendulum has shifted in the other direction. It's because the market structure is maturing. We're just getting better as an industry at figuring out what is sustainable and what works. I would say that the consistent pattern, the single, the two driving forces of the industry right now are sort of regulatory clarity, which is the fact that we had stablecoin legislation last year and market structure legislation that's imminent, that essentially sets strong guardrails around how these assets are going to be regulated, how they're going to be custodied, how people are going to think about them, which opens up this universe to people beyond the 10,000 people who are addicted to crypto Twitter, which is, I think, much needed. And then the second is the maturity of the infrastructure, which is we spent the last 10 years, stress testing different, ways to build credibly neutral permissionless systems. And I think we now have a good answer. Like, it looks like Solana on one end, and it looks like Hyperliquid on the other end, but like credibly neutral systems are finally at the point where they can sustain, real economic activity. And so the big trend, I think, the single largest mega trend in this industry is, over the last 10 years, crypto has been very circular. It's been very inward looking. It's been like people will launch tokens and borrow tokens against tokens and then trade tokens for tokens. And it's just sort of this like circular loop of money. What's happening now is, every single financial market in the world, every single economic, every single vehicle for economic value is coming on chain. So equities, rates, commodities, FX, like the tens of trillions of dollars of value that move around on a daily basis in these legacy systems from the 70s, all of that is moving on chain. And every large regulated financial institution is aware of that. They understand that putting things on crypto rails is strictly better because you get to access global capital markets, you get orders of magnitude in efficiency in terms of the system of record, and you also have the sort of transparency guarantees that prevent systemic failure in credit events and things of that nature. And so the big trend right now, and I'd say my prediction for the next 12 to 36 months is you will see 1, 2, 3 orders of magnitude more quote unquote RWAs on chain. They won't all look the way you think they look. It's not all going to be like tokenized spot or tokenized, I feel like that as it becomes a monolith when people mention it that way. But you'll see, new, real world assets show up on chain across a bunch of different market structures. And that's what's going to drive, sort of the next decade of this industry. It's like not this inward looking issue tokens, trade tokens, for tokens. It is bring the rest of the world's economic activity on chain. And you're already starting to see that happen.
Okay, that's interesting. Do you think that a lot of the stuff that people believe on right now and have high conviction, it's like, oh, okay, now this is it. Do you still think that there's a lot of mistakes happening in the industry?
Yeah, absolutely. Look, it used to be like the old adage was crypto is speed running. I'm sorry, can you hear me? Okay, my bad. I'm just hearing some echo for some reason.
Good.
Yeah, this is better.
Okay.
So look, yeah, crypto is always like speed run kind of like all of the mistakes of traditional finance, like people realizing that traditional AMMs don't actually work, and then eventually the market structure evolution to figuring out order books, and then eventually getting to prop AMMs, and there's all of these kind of core lessons that you learn. In some ways, crypto borrows from the traditional financial markets. I'm kind of seeing the inverse happen, which is traditional financial markets are borrowing from crypto. If you look at the SpaceX IPO, it looks like a day one Binance listing, which is very interesting, right? Like there's like such little float out in the market and so much attention around it. You see like regular stocks like Micron and SanDisk trade the way you'd think crypto would trade. And so, obviously there's mistakes being made on the emission side, on the market structure side, across a bunch of different things. I don't really think it's worth going into that. I think the more interesting point is that the traditional equity markets in the world, the credit markets in the world, are starting to borrow from crypto, which is this broader kind of behavioral shift that, people used to come to crypto because they wanted volatility, they wanted variance, they wanted skew, they wanted to hit a clean 10x. That's happening in the equity markets now, right? That's happening less in crypto.
Yeah.
There still is some version of that, but that behavior, that core risk-seeking appetite, is never going away. Right? That's something that's fundamental to humans. It's one of the theses that were extremely long, is this idea of entertainment finance. Younger people across the world view participation in financial markets not as sort of this like boring boomer retirement money management thing. It's a form of entertainment. It's a form of status. It is a new consumer behavior. And I'm almost more interested in the lessons that, the traditional equity markets are learning from crypto, which is how do you bring an asset to market? How do you do investor comms? How do you treat your retail shareholders? Do you take them seriously, or do you just pitch to institutional analysts? Like, should you have perps instead of options? And so I think these worlds are merging in a certain way. And I think the more interesting thing is, like, yeah, of course, people make mistakes in crypto, but I think the stuff that we're doing right is like carrying over into the rest of the markets, which is, I think, cool to see.
Very interesting. Thank you so much for joining us. We're going to give Akshat another chance. If you want to stick around for a few seconds in case it doesn't work. Otherwise, if you have to go, it's been a pleasure to have you.
Yeah, thanks for having me, Mia.
Thank
Have
you.
a good one.
Bye. Okay, so we're going to bring Akshat back on. Let's see if this time we can make it work.
You guys hear me?
I can hear you. Perhaps turn horizontal so we can see you a little bit more.
Okay.
Yeah. Let's see if we can make it work. Did you fix your Wi-Fi?
I don't hear your voice. I see you, but I cannot hear you.
I don't know how I could help with that. You're wearing earphones?
Give me 1 sec. Let me try.
Okay. We can definitely hear you. So it seems like we're gonna have 2 to 3 minutes.
Test. Can you hear me?
I can hear you. It seems like you cannot hear me. We might have to cut it.
Hello.
We're gonna have to cut it. I'm sorry, Akshat. Maybe we bring you on another time. Okay, so what do we have on? This is perhaps the time for me to go stretch my legs, drink some water, and we're gonna be back. So guys, go grab some snacks. We're gonna be back with Santiago. Perhaps Mert joins us. We'll see how he feels, but Hoseeb is definitely gonna be on, and we're gonna have Hoseeb for an hour. I'm excited about that. And in the meantime, guys, enjoy a message from Cello. We'll be back in 5 minutes.
Gold wasn't formed on Earth. Every civilization, every era, independently chose one thing. 5,000 years, it never went to zero. Gold, now at your fingertips.
Producer is really surprising me all the time. I almost fell asleep here. I'm not criticizing, by the way. I think that's great. I'm really excited about my next guest. I don't know if you guys checked the agenda, but we definitely pushed some of everyone's great, but we pushed some of my favorites for last. We definitely left the best for last. My next guest is an institutional heavy hitter and a major voice on Blockworks. He is completely flipping the script on venture capital with inversion, using crypto rails to buy out and transform traditional real-world businesses. Please welcome Santiago Santos.
Hey, Mia. How are you?
Hey, how are you? I'm going to ask you to flip horizontal so we can see you a little bit closer.
Oh, might be difficult because you're catching me maybe the other way around. Is this better? Nope.
Is this going to work? Maybe just leave it like that. Maybe actually sit closer because I've now realized.
Okay. All right. I am in the. Is this better?
That's better.
Yeah.
Yes.
I'm in the middle of nowhere in a wedding and I stepped out. And so
No
you're
wedding.
saving me. You're saving me from being in a wedding right now. And
Oh,
I'm
I can't
excusing
believe
myself.
it.
Therefore, it's hot. There's no AC, so you can imagine where I am. And but this is how much I love crypto.
Really? I was about to apologize, but it sounds like you
No.
feel relieved to join us.
Look, it's a great wedding. Congratulations to both of them. But I have to, every time you want to leave crypto, it pulls you right back in, right? And so there's no escaping the vortex. So here we are. So I'm excited to chat and see where this goes. And this is now my third time on your podcast live.
Yes, but this one is actually mine. So I appreciate
go.
you joining this time. And this is a live stream, so it's a little bit more hardcore. I don't think it's for everyone. So I appreciate you making it from a wedding. That's incredible. So Santiago, what has been the most interesting thing on your radar recently? Because I feel like you always have something good.
Oh, I'm obsessed with AI.
Yeah?
Fascinated. I can't get it out of my head. I think it is the most exciting time to be alive. Like it's amazing. Like I wake up every day and it's like, what am I going to do today? There is literally no constraint to building and creativity in today's world. Like you saw this kind of like in software and low code, no code. But when I my journey as first an investor, then a founder, I always felt that I was very disadvantaged, and maybe I am still, because I wasn't technical. Like, I'm not an engineer. I want to build a technology first business, and we can get into what that would mean. But I'm like, I have an imposter syndrome because I don't know how to code. And I always felt that I was at a disadvantage, and still there was an insecurity. And now I feel like maybe I'm hallucinating, but I feel very empowered to accelerate and literally open a cabinet of ideas in my brain and say, what am I going to do today? And there's infinite possibilities, and it's so fucking exciting. Like, I don't know how else to say this. I've always been optimistic, but I
Yeah.
hear someone like Elon and what's going on in SpaceX and everything that's going on, like, it is, I don't know if you feel this, but I have this incredible, like, I haven't learned as much as I have in the last 6 months.
Yeah,
And it's like, it's amazing. So I'll pause there. But you could sense the energy because I wake up every day. I was like, I don't want to go to sleep. And I wake up and I jump straight into just thinking what I'm going to do. And it's very empowering. It's a very exciting time to be alive.
Yeah, I love the energy. I mean, it is, we end up after a while just, like, it just feels like it normalizes, but that excitement is definitely real. And I love that perspective. Are you talking more from a point of what it has enabled in your life, or more in terms of what you've been reading and researching?
Personally, what has enabled me personally and my family with health, personal health, also ideas in healthcare, but also with my team at Inversion, like everything. It is amazing. And at risk of not sounding like overhyping a technology, but it's very tangible. Like if you're not paying attention to how these models have progressed over the last year, 6 months, even Fable now coming out in the last 5 days, like it is truly remarkable. And I think that the slope of innovation, I think like now the infrastructure has been built, and we can tie it back to crypto because there is a crypto story behind this. I promise. I'm not pivoting to AI and I hate
I
crypto.
thought
Not
for
at
a
all.
moment you were.
No, not at all. But it's just like front and center, right? I'll tell you, I'm talking about what is top of mind and is most exciting to me. And it's I think the infrastructure has been built, and every time you're sitting there and saying, wow, like, are we gonna reach like AGI? Are we getting robots? Like, even now, I don't really, there's like a lot of negativity in the timeline. In crypto, obviously, because prices are down. In AI, because people always find, like, social media is always skewing negative. Like, just how the algorithm works. It's fear-based, and that drives more click-through. But if you like really zoom out, like if you just pause and listen to just one clip, I want it to be this, like, zoom out and really just focus on what can I build now? Because there's really infinite bounds of what you can do now with this technology. Like, we don't have to wait for AGI. We don't have to wait for robots. Like, right now, models as they are, you can quite literally do anything. There is no more bound friction. Like, I've never, as an investor, you would always hear people say, oh, I don't have money. And because I don't have money, I can't execute on an idea that I have. And I always felt that was like the biggest bullshit I could ever hear, because that's just not true.
Yeah.
Like, you can apply yourself. And look, I appreciate you can be in places that it is difficult to move up the system. I think America is the best country in the world because it allows anyone to, if you work hard, if you apply yourself, and it's free education, like you can get far. Like, you could have sat there and say YouTube is free, public libraries are free, public education's free. But now with AI, it's like, it's really remarkable what people are doing. And I think there's a lot of negativity around AI is going to displace a lot of jobs, and like that's terrible for a whole segment of the population. But that might be true. But I think there is a more important narrative that is, to me, how I feel it in my personal life and how I see others is, let's talk about like all the people that are creative and now can really do way more, like orders of magnitude more, and put to work their creativity. Like, that is what excites me the most. And you extend this simulation over the next 5-10 years, and I think we're going to see many more ideas that have been just shelved because people had this insecurity about not being able to build. And
yeah,
I can't just wonder what those would be. I'm super excited about that.
You're making me think of something. I think building with AI has put building under a different umbrella. Where previously, like, people would build for others, building for yourself, because building is becoming easier, is becoming more common. So like a good example of this is my producer here that's been experimenting with building things, and it has been primarily for her own use, but I think that's enough. Like we don't need to, like the point where we're at, perhaps the things that we build are not necessarily to be commercial. Perhaps we're building stuff for ourselves to use, you know?
And that ends up being, like, if you look at the evolution of influencers for content creators, like, it's no surprise that like some of the most popular artists in recent history have come out of YouTube pre AI. And now you're here, you have like 10 years ago, 20 years ago, it would have required 1 or 2 orders of magnitude to have what we're doing right now, like a studio and content creation and live streaming. Like all of that has unlocked so many different professions, so many different revenue monetization, and people start doing it because they love it, right? And obviously crypto is important in this intersection of, like, barriers have come dramatically down. And now, you know, for instance, if you're a content creator, you can get paid in stablecoins. And by the way, you can get paid in stablecoins much faster, and you can maybe circumvent the tax of YouTube, right? If so to speak. Like Ansem, for instance, is, you know, I'm paying attention to that because I guess the tie to crypto. I promise we come here to talk about crypto. Like what is happening right now with the Ansem coin. I don't own it, but I just find it a super. Crypto's always been like a social experiment where like you tie social mimetic culture with money. And in that intersection, there's just been explosive both booms and busts of creativity in the way of meme coins, in the way of creator coins, in the way of obviously DeFi and NFTs. And I think we're at a moment in crypto where prices come down and, you know, there's a lot of negativity in the timeline, but then you see something like the Ansem coin and I can't help but wonder, but like, wow, that's pretty remarkable. Like you have a coin that is now worth, I don't know, like 200 million or 170 million. And he's like, I think doing interesting things like distributing those tokens to people that are their fans. And it's $100 million marketing budget. Like think about that for a second. He has like probably 100 mil. I saw on the time of today, he has $100 million of marketing budget in the way of tokens, like literally one day to the other. Ansem 20 years ago, the Ansem of 20 years ago would have had to go to LA and would have had to beg and try to get into a studio and sign 20 or 30 or 50% of his earnings, lifetime earnings to his agent. And that's no longer the case. What the caveat to that I will say is because barriers have come down, it is just more difficult to capture attention.
Yeah.
Right.
I think on Ansem's token, like, I mean, given how quiet it is in the trenches, like if you launch a token and you have such a big audience, whoever is still around, there aren't many tokens being launched. So that would sort of be like the counter argument. I mean, I think it's genius.
Oh, but like if you look at Pump, like the number of tokens that have been launched in the bear market there continues to be a lot of tokens that are being launched. They're just not getting traction. This is something that maybe takes us in a direction that should be addressed when we talk about technology. Technology can be an incredibly centralizing force. Like if you look at the internet giants, the Mag 7s, like the amount of value that has been captured by Google, Facebook, Amazon is very concentrated. And that technology does two things simultaneously. One, it radically lowers the cost of production, right? The cost to do this video streaming, the cost to surf the internet, the cost to do shipping and all these things. At the same time, it really has concentrated value to a select number of companies that own the user relationship, whether it's a social media platform, a video streaming platform. And crypto's always been kind of this like, let's resist that. Let's try to break that phenomenon in one way, shape, or another. I don't know how successful we are on that journey. But I think what is happening with Ansem, for instance, and meme coins, and look, let's not forget, like Ethereum, I think continues to be the piece of technology that has minted the most amount of millionaires ever.
But is that something of the past?
In what sense? Like Ethereum? Or the phenomenon of like
the phenomenon on Ethereum?
No, well, crypto is very good for capital formation. Like anyone with an internet connection can now participate in this ecosystem that is experimenting a lot. And sometimes those experiments don't work out. Unfortunately, when those experiments don't work out, we tend to overemphasize how negative that experience was. And there's a lot of fraud, there's a lot of scams, there's naturally also experiments that don't work out. And that's just the normal iteration of technology cycles. And so
Yeah.
I'm unfazed by like where we are. This is probably my 6th or 7th bear market or cycle. But I think like it's so easy to sit and be an armchair analyst and say, you guys are idiots. You've invested 100 billion plus in venture and you haven't produced anything meaningful of scale of societal value. And these meme coins are just a distraction. Go back to building rockets like Elon. Like it hits hard. Like no, it hits hard. I'm not gonna lie. Like there's no sugarcoating. Like you see someone like Elon like just apply himself and really just like full port his entire net worth into making SpaceX a reality.
Mm-hmm.
It makes you wonder. Like, am I being the most productive with my life right now?
I mean, to compare yourself with Elon Musk is perhaps a little bit crazy, but you could say that, you know, like it is true that some people in the industry maybe give up on ideas. It was mentioned before here on the stream. Some people in the industry tend to give up on ideas more quickly rather than try to make them work. That is a fair comment. Do you think
is that true though? Is that true? So like I wasn't listening to now the 3+ hours of stream, but what was said that like people in crypto just leave as soon as prices go down?
No, we're not talking about prices here. We're talking more from a startup perspective. So the idea was that there's a lot of crypto is great This is what was said pretty much in my own words. Now saying it to you. Crypto is sort of like a good playground to experiment and try things, but you know, like these people that are trying to builders would be pivoting from ideas much faster than, you know, like the kids that go to Silicon Valley and apply to IC and so on.
No,
like
that's not. I don't buy that argument at all. But let's
No?
look at no, I don't buy it. Let's look at the hard data, and I would characterize like launching a meme coin is not the same as starting a company in crypto. Let's
Right.
make that distinction. Like the sample size, like the denominator needs to be calibrated by actual people building like teams, not just like going on pump and launching a meme coin. Now, a meme coin can turn into a project, and that's sort of an interesting idea that I'm not dismissing from a capital formation standpoint. But I lived in San Francisco. There's like there's plenty of. I mean, startups are hard, right? In
Yeah.
crypto and outside of crypto, crypto obviously has introduced a bit more challenges, so to speak, right? But let's not forget, like, if there's been like phenomenal successes in crypto that I think we should celebrate, we should champion. And people might have heard me talk and be critical about valuations, but I continue to believe that Ethereum is one of the most fascinating coordination networks that have been created in literally in the history of humanity, and coordinating a disparate set of participants and community to like, you know, implement like, you know, the merge, for instance. Like, holy shit. Like it took years, but it was done, and it was a Herculean effort. Like when money's involved, and like it's on par with like some of the more biggest feats of like governments, right? And formation, like coordinating a species is an incredibly hard thing to do. Crypto pretends to do that, and pretends to do that with like interesting cryptographic and economic incentives. We're super early still in this journey, and I really respect and salute the people that are here, that kind of like as a builder, you have to put aside, but you can't ignore a community that screams at you because prices go down and just continue to power through it. Like hats off, because it's super, super hard for everyone building in crypto. It's startups are hard in of themselves. Crypto with a token and like, and being accountable to a community adds another layer of complexity. And then the smart contracting risk, and North Korea being a constant threat actor, and you know, AI like in Mythos, and like all of that, I think has made just continue, like it is not easy to be a founder in crypto and outside of crypto.
Yeah.
But I definitely do not believe that people in crypto just quit easier. And also, there's like glorifying grit. Like it's like you're a founder, right? You want to see through it. And sometimes ideas just don't work out. And I think I really respect some founders in my portfolio that have come to me and said, hey, look, we've been on this journey. This was our idea. It's not working out. I just generally am going to return capital to you. If I start something new, I may call you. And more of that should happen. There's a great book by Angela Duke, I think that is, she has grit and then she has quit. And no one ever teaches you when to quit, because there's this fear that if you quit, you're going to be deemed a loser and you're going to be a rage quitter. But I think there's a lot of value in recognizing, look, the world changes. The world constantly changes. It's changing faster and faster. And I think you just have to adapt. And we should celebrate. I think what makes the US and maybe Israel, maybe China, some of the best places in the world, but definitely Silicon Valley.
Yeah.
The reason Silicon Valley is because you can fail and it's okay. In fact, it is celebrated. It's like if you're not failing, you're not taking enough risk. And the biggest risk is not taking enough risk. And so I think that crypto has a lot of that, like risk-taking energy. And we should celebrate that.
When you look at venture deals in crypto and Web3, whatever you want to call it, do you think it is time to restructure them? Like, do you think, because I've seen the comments around this arising. I wouldn't call it a trend, but I've seen it quite a bit.
You mean the token versus equity discussion that is happening on?
Right. But I would take that question beyond, like, maybe you have your own idea of how we should have always been. I would love to hear your thoughts on that.
Yeah, in a perfect world, yes, you only have one instrument that accrues value. And that's what Ethereum is. Like the base layers are that. That's why they're successful, I would argue. Like they made it explicitly clear that there was a token and that value would accrue to the token because the token acts as the mechanism to coordinate. Like it is so embedded in, you pay in ETH, you raise money in ETH, like NFTs are denominated in ETH, as is you pay in Solana. And there have been some evolution of the narrative of what it means to hold this instrument, whether it's like an oil, like Bitcoin's gold, Ethereum is oil, or for this internet superhighway, right? And so is Solana. And then it's like, no, it's also moneyness. And I think we've evolved in our thinking into what these tokens are. But in a perfect world, yes, you would have one instrument that represents the being a participant and owner in a network. Like when you think about what does it mean to hold Ethereum or Solana, or I don't know what else, like Ethereum and Solana as examples.
Mm-hmm.
In my mind, it is you are simultaneously excited about the network and the growth of the network. And if that continues to happen, value accrues to the token in the way of fees. There are two different kinds of fees. There are transaction fees and then there's MEV. And MEV is block inclusion. It's like you have to believe that, to make the analogy of a highway, being an ETH holder, or used to be, Ethereum has sort of broken, but being a holder of ETH or Solana means that there's a toll booth and there's a highway. And the highway has some lanes and cars can go through that. And every time there are cars that goes through that toll booth, you earn, there's a fee that gets paid. And that fee, you have a claim on that fee in the way of, right? And there's mechanisms to do that. Like there's local fee markets, there's priority lanes, there's parallelization, and then there's a fast lane, right? Block inclusion. Like if you're trading a meme coin, you want to you pay more for that. And so as a holder of these instruments, consciously or subconsciously or you are excited about the growth of the network, right? Along the way, that broke down for Ethereum because there were L2s and the roll-up roadmap was just broke the value accrual to Ethereum, and that is just a reality.
Better solutions arise, right? Like as technology evolved, like ultimately, I'm a big believer that the crowd will go where it's the easiest cheapest, fastest, whatever. So despite the people that had the hardcore values of decentralization obviously stick to Ethereum. And also if you've been heavily invested in building some, have been building a castle for 5 hours, you don't want it to be turned down so quickly. So I think there's a lot to that.
But on that, but yes, but then why do you see some of the strongest ETH community members launch an L2 and launch their token?
I think
this.
If let me, since you asked,
Yeah.
I think L2s are a reflection of, I like it, but a little bit different. I like that, but not really like that. And there's a lot of that. And it just feels like a plug in a wall with multiple things on it, instead of just having like a clean one thing in the socket, you know.
Yeah.
That's sort of how I see it. I don't think, listen, I'm not against Ethereum, but I think my view is that Ethereum has gone through like maybe a personality crisis. Like its position is uncertain for someone coming in new. Of course, if we've been around for a while, it seems very obvious. But and feel free to push back.
No, well, no, I think the biggest moat of Ethereum, I believe, is the community and the brand that it has.
Yeah.
And that is something that has endured the test of time.
Yeah.
The community developer kind of community continues to be strong. And just to be fair, I do think that eventually if you were a builder, you realized, hey, there's all this traffic in the highway. I need to figure out a solution because I can't deal with traffic. It's like if you live in LA, you need to get to work and it's like 5-hour delays. Like you have to figure out a different means to get to work. I think that was, I don't mean to portray like L2 builders, because I've invested in many of them, as like just like value extractive to Ethereum itself. I think these are genuine people that try to figure out a way to make Ethereum great, and continue to, but
let me put a question here, because I think it's interesting. What do you think it would take Ethereum to do to sort of get people back in? Like, what would it take for Ethereum to do for people that are super into Solana and other ecosystems to come back to Ethereum, or to come for the first time? They'll be like, undoubtedly, this is the best.
Well, let's not forget, most of the value continues to be in Ethereum and secured by Ethereum. So this idea that people have left, I think personnel have left to Tempo and other ecosystems. And I think I'm excited about the galvanization of the community in the way of like Joe Lubin and some of these other like factions. I think the Ethereum Foundation just had too much going on. Like Consensus had too much going on, and it just, you just needed like a more, in many ways, the success of other networks was like a wake-up call to Ethereum that the game was not won. And that took a bit more time than I would have wanted. But I'm not here to comment on like architecturally, technically, can you overhaul this highway? Because there are more efficient highways out there, like Solana, that candidly had the benefit of seeing what Ethereum and how it was architected and saying, learning from that and saying, said differently, if Vitalik were to like build Ethereum today, he would not likely architect it in the way that he did. And that is just the evolution of trial and error of especially open source technology, right? Like you would hear builders in Solana say, hey, we're going to learn what Ethereum kind of did and understand what was going on there, and saying, okay, maybe local fee markets are interesting, parallelization needs to happen. Like, and my view as an investor is that first mover advantages are overrated, incredibly overrated.
Yeah.
Like as a moat. I don't know. I don't want to. I'm not the best person to comment on whether Ethereum can re-architect its fundamental like building blocks to compete without the need to leak value to L2s, because the position was made that like you needed to have L2s and L3s and like roll-ups to scale Ethereum. That I think Vitalik conceded earlier this year, saying, look, that was, L2s like really need to probably like Ethereum as an L1 should tax L2s more. like the taxation is off, right? Like if you have, it's like if you're a state, like you hear people talk about these networks as governments, and you're like, okay, well, if you're the U.S. federal government, like Ethereum L1, you should probably tax 30%, and then states tax, like some states like Florida tax 0, and Texas, and then California taxes like 10. So I think that's we should study. I always believe that if you study history and other ecosystems and other disciplines, you can even nature, in biology, you can start thinking about how things should order themselves. And analogies are imperfect, of course, but I think, to me, that's how I have thought about Ethereum as a federal state broken, because it's not collecting as much tax. It's providing so much security to L2s, but it's not collecting enough tax. And the sole usefulness of governments, and as is with Ethereum and other base layers, is to provide security, right? Guarantees that, like, Mia, if I'm sending you money and it settles in the blockchain, it is an immutable record of transfer of value. No one can corrupt it. You need a lot of value to stake. And that is a lot of security. Ethereum has the most out of any other system other than Bitcoin. And I think it is a very sustainable method, because Bitcoin, not to open a whole nother can of worms, but like no one really wants to address the elephant in the room, the Bitcoin. What happens when all the Bitcoin get minted, when you have 90+% of the economic incentives for miners in the way of block emissions? What happens when that goes away? Are you going to drive up fees high? And what does that happen? What happens then?
I was concerned that at some point someone would own more than 50% of it, and if that would have an impact. But then when Michael Saylor sold, I was like, okay, maybe we're too far from that. Like maybe that's not.
Well, but Michael Saylor is going to be an afterthought in many ways. Like whatever ends up happening with MicroStrategy, he owns 5%, less than 5% of all Bitcoin in circulation. So it is certainly I believe the largest, other than Satoshi, holder of Bitcoin. But it is, in the grand scheme of things, inconsequential. It might hurt. It might like cause a lot of. It is, I think, stirring up a lot of calamity in the market, so to speak, because he said he would never sell, and now it appears that he will have to probably sell, or is selling. But I'm not worried about.
Give me. We've been talking about a lot of stuff that obviously some of it the audience will agree, some of it they will disagree, but it's very familiar. Give me a piece of information that is new, something that you've learned recently, something you've been excited.
Oh, well, I started telling you what I was excited about.
Yeah.
Like I think we'll cure some of the major diseases in the next 10 years. Like cancer. Yeah. It was a computational problem. Like you have a lot of data, and now you can use a lot of historical data to, sequence and do protein unfolding and look at old clinical trials and do relationships between data sets that were impossible because you had one scientist that is siloed. Like the problem with science is that like you have one scientist that like develop his entire identity in academia in the lab by saying like, this is my theory of aging, this is my theory of what causes dementia or Alzheimer's or obesity or what have you, and you really had to, and you had a funding problem, but and a lot of that was like it's incredibly expensive to run clinical trials, but like there's a lot of coordination problems in the world of academia. There's a lot of coordination problems in the world of pharma. But what AI has allowed us to do is like you have now the ability to look at historical data and make interesting inferences about that data, and that is remarkable. Like in a prior life, I was at a health startup called Elysium. We were studying aging. Like we still don't know why quite literally we die. There's some theories, and one of them is by Lenny, who started this company called Elysium, and I had the great fortune of just being there for a couple of years, and it was like before the Brian Johnsons of the world like came around. Like Lenny's been studying aging, for his entire career. And I feel like that is just going to explode in a very positive way because it now requires like look at what's happened over the last 6 months. You have like this guy in Australia that his dog had like I think a rare form of disease. I think it was a cancer, and he like just applied himself with some knowledge of biology, but like really just used I think it was Claude or OpenAI or Chat, and then he built a vaccine for his dog, and he had to overcome some like real like constraints of like government regulations that really didn't make much sense, but he got through it. He had a lab to build the vaccine. He administered that vaccine to the dog and he basically cured it. Like the tumor like just went away. You look at that and you say like, and then if you study history, most of the greatest discoveries were made by people that were not experts. They were discoveries that were made by people that were just a bit too crazy like Elon and say, I'm going to challenge the current norm and like totally be crazy and be deemed crazy and be willing to risk it all and my reputation and say, I'm gonna put it all on the line. And that's, I think, like that's what I talk about. Like creativity is going to really explode because now you've really radically lowered like the bid and the ask is just collapsed. Like people that are crazy enough to just, I want to cure my dog. He's a cancer and I'm going to figure this out. Like stem centrics, penicillin, like just look throughout history. Like all of these discoveries have been possible. And I think like the crypto is interesting because I will always tie to crypto is there is a potential here to fund these ideas much faster with internet capital markets. Because that is like, I'll tell you, like Elysium, for instance, we had, I think it was like up to 12 Nobel laureates. And the biggest, one of the biggest shocks while I was there was I would have thought that all these people that were like at the peak of their profession have no problem getting funded because they are the best. Like if you're a Nobel laureate, you have excelled in your discipline. Like you're the elite in academia. And to my surprise, many of these did not get access to funding because the NIH, which is a health organization, the way they administer grants is problematic. And you would have said, okay, well then there's like all the, charities and foundations that like, surely you get funded, right? It's a very personal thing. Like if you have billions and billions of dollars, like you have these people that are donating all their money, and it's still a coordination problem because like charities, like I'm not convinced are the best way to administer money, right? Like if you're going to donate to a charity, like maybe out of that dollar, like 40 cents go to actual real funding, maybe at best. I don't know, TBD. It's unclear, right? And I think we've had these like DeSci projects, which I don't think have like really amounted to much, but the idea of connecting ideas with capital is uniquely powered by crypto, I think, in a way that has never been possible before. And money is moving at the speed of light. And so if you connect those two dots, I think they're at that intersection, there will be something really explosive. And I think I remember hearing the story of like StemCentrics, which was his daughter, I believe, one of the founders of StemCentrics had a very rare disease. And pharma does not have an incentive to kind of fund this type of research because drug development takes like, it's $1 billion molecule. Like if you're going to develop a drug, it takes over like $1 billion to do. And so you only have so many shots and you have to deliver something of value. And so the incentives are just kind of broken for pharma. They'd rather wait for a small startup to really figure it out, get phase 1, phase 2 in clinical trials to then acquire that. But it's really hard to get funded, right? And so crypto is just this crazy universe that we're just risk takers. We're like out in the frontier. And that, again, should be celebrated with the mindset that it is definitely worth it to invest money. Like, especially in venture, it is great that we are able to take these moonshot bets. And I think if we apply ourselves as an industry, we can be that capital formation for a lot of people everywhere in the world. Like I've invested in, like over 200 projects all over the world. And you fund with stablecoins and you connect with them online, and you don't have to be in Silicon Valley. Maybe you do, maybe you don't. But that's like that is what keeps me here, I think. Not I think, that is what keeps me here. A big part of what keeps me here. It definitely hurts to see fraud and scams and maybe not so useful ideas. But I rest easy because I think that something good really comes out of this. There's value that is here in the way of attention and their internet capital markets. If we just stopped innovating, we don't need to like
We're
I think
done. We're done innovating.
no. I certainly don't think we do. But there is something that there's an important point that I want to make. Crypto, if you're in crypto, it's very natural to become defensive because you get asked at weddings, at family events, "Oh, you're in crypto," and you take a defensive position because still not many people believe in it, or still not, people have probably more negative than positive connotations of crypto because again, unfortunately, like people are surprised to hear that Ethereum's created all this value for people all over the world, right? And they maybe just have remembered NFTs or that went down, and Bored Apes are worth zero now, and Terra, Luna, and FTX. But and so there was more often than not, we become defensive. It's like we have to justify our existence. I'm here to tell you, we don't have to justify our existence as an industry. We have produced, and I think if you just sit with that idea, life it becomes better being in this industry. You do not have to justify your existence for being in crypto to anyone. Just you can be a piece. You can be a piece for that decision. And the sooner you realize that, then you start saying, okay, like let's go. What can we do? And by the way, like a lot of I've learned a lot by being a founder now at Inversion, and I always tell my team, I think experts are overrated.
Experts are overrated.
Overrated. And again, if you go back to this example I was telling you about, like drug discovery and just discoveries and innovation, the history of innovation is full of people that were not quote unquote experts, but were just applied themselves to learn and believed and really applied like discipline and creativity and high output, like high energy and enthusiasm, like and optimism. And I think if you truly kind of stick to that, something good comes out of that. And you just kind of navigate, right? You're in this river, and sometimes you see interesting things, and just get on that river and just apply yourself, and you don't have to just be a piece in the present and saying, okay, I'm here. And yes, crypto's gone through goods and bads, but by the way, there's no industry that hasn't done that. There's been fraud in every single industry. There's been scams in every single industry. You think crypto's bad? Boy, healthcare's bad too. The internet, it was bad too in the 90s. Like these things are normal because humans make mistakes. Like we're social species and we're animal, like
that's right.
That's not inherent to crypto. But I think as an industry, I hope that this message to me is very refreshing, because now the age of, when you think about like what AI really displaces, imagine you're like a professional academic that is, like a coder, like an expert coder. I think judgment is really valuable, but these hard skills that were once valuable, that like we deem you an expert, I think sometimes get in the way, in the same way that like super high IQ above 130 gets in the way, because you're paralyzed. Like sometimes I've asked these experts, like, hey, what do you think of this? And they're like, not possible. It's just not. And they just believe that the world is molded in the way that conforms to their worldview. And time again, like that type of rigidity, in the same way that maximalism in crypto is like this expert view that like Bitcoin is the be and end all. And then you don't allow yourself to like entertain this idea that Ethereum or smart contract platforms can be useful. That just is a recipe for disaster. And I think crypto has invited and captured imagination of people that are not necessarily experts, but are crazy enough to say, I want to reinvent finance. I want to maybe build a different social media that is more fair and equitable. And I think, just to round it out, because I think we got to drop, like crypto, the core values of crypto, I think, are intact. Whether the institutions buy all your tokens or 5% of Bitcoin, the fundamental premise of crypto is open source. Creativity, like you join this industry and there is more information sharing, there is more continuous iteration. Sometimes you learn that the hard way through a hack or some event, but it is open source has always been, if you study history, has always led to a faster compounding rate of innovation. And sometimes that requires it hurts when you fall, and it hurts when you hurt yourself, but that constant iteration, and then you tie capital to it in the way of like internet capital markets, and like you're just iterative, right?
Yeah.
And it's like that meme, and like you're just chipping away. Like, okay, we're gonna build like internet capital markets, and now we have tokenized stocks, and now we have hyperliquid and stuff on chain, and it's working. Holy shit! Like we had fees that were really high. Now they're not. Okay, what else we can do? Okay, we can bring perps on chain, and oh, by the way, now there's price discovery, and like the SpaceX IPO and the Cerebras IPO are all like being priced in these markets that are on chain. Like sit with that for a second, and if you are here saying that this technology is not going to be useful, you simply are not paying attention.
Yeah. Santi, it's been a pleasure to have you. Your energy is amazing. And I feel like you just brought I feel like crypto is up now after listening to you. You're really good at bringing on the energy and the right motivation, the right mindset to really stick through it, because it is true. Like, you know,
it's not meant to be easy. It never has. Anything that is worthwhile is not meant to be easy, but it's worthwhile. And so that's why you do it. And I think crypto is very much worthwhile. So thank you for having me. I'm going to go back to this wedding before they kill me.
Thank you for joining from the wedding. It's been great.
Yes.
Thank you so much.
Thank you. Take care.
All right. Well, that was I'm full of energy now. I feel like we've been doing this for 4 hours now. To be honest with you guys, I could be doing this for another 4. I thought this would be a lot harder. The only thing is to manage through, you know, you have people in different places and we never know what's going to happen, but that's been part of the fun. And so I'm really excited because we really left the best for last. Oh, I want to update you guys for something. Mert will likely not be joining us. Last report I got from him, he was still in bed. So I'm imagining he passed out. He's feeling sick. So perhaps another time we'll be able to do it again and have him on. So without further ado, our final guest is a former top 10 world-ranked high-stakes poker player champion who completely broke the mold of traditional VC. He has historically raised during the absolute worst market conditions and recently raised a massive news-making $650 million fund for Dragonfly. Leading by example and known as one of the best founder mentors in the entire industry, please welcome Hoseeb, managing partner at Dragonfly.
Hello. By the way, you forgot to mention, I am also founder of Helios, and I am a well-known Solana KOL. So happy to answer any questions you might have about that.
I was hoping Mert would at least come for like, you know, like some 10 minutes, just show face, and you would be on and like, you know, like wake him up.
I'm here. Well, yeah, you don't need any Mert. I'm here.
I need Mert. Like,
you need to make your bed.
It would be nice to have him, but yeah, thanks for coming earlier as well. Like, I don't know if we disrupted your agenda.
No problem. No problem. It's July 4th weekend here in the US, so there's not a whole lot going on today, so it's all good.
Now you're not checking the fireworks.
There's no fireworks yet. Fireworks should start tomorrow because right now it's July 3rd in the US.
So I have some questions for you. You know, like how I usually just improvise the whole thing. I've been improvising 70%, but I have some questions that are interesting. So I'm checking my notes now and then. I never asked you poker-related questions, but I know in trading, they often hire people who can play poker. Have your poker skills been useful in venture?
In venture. So poker and venture don't have a very large overlap. Poker is very similar to trading because it's very fast feedback loops and very tight iterations. You know, you play a hand of poker, you immediately know, did I win, did I lose, did I do the right thing? In venture, you have very, very slow feedback loops. So you back a founder and it takes years to know whether or not you made the right decision. And you start to see a little bit within the first year or so of, okay, this company's growing, they seem to be getting some traction, but then, you know, the company can always blow up after Series A or after Series B. Even they can seem like they're making progress for a couple of years, but the founder had some fatal flaw that caused them to fumble the ball in, you know, the last play of the season. So the reality is that it's very hard to learn quickly, did you do a good job as a VC? And there's a lot of funds that have raised money on early marks in a portfolio that turned out they didn't have any winners. You know, if you invested early into Axie Infinity or into OpenSea, it might have looked like, wow, I'm an amazing investor. I've done such a great job. There's a couple funds that were very early investors into FTX that they were just, like, oh my God, this guy's champion of the universe. Can you believe he did the FTX seed round? And just a couple of years later, it ends up being like, okay, this fund is kind of a nobody now because their star portfolio blew up. So venture is unique in that way. And so what that means is it really requires you to give yourself that feedback as opposed to expect the world to give you that feedback. Because as a VC, you got to learn, you got to keep getting better, even though you don't know the outcome of an investment for many, many years. And so that really has to come from your own judgment of how you're doing. And that judgment being the form of feedback as opposed to the world being the source of feedback is very difficult for a lot of people. The other way in which it's different from poker is that venture is a team sport. Poker is a single player game, right? You obviously play with other people, but it's you against the world. It's like PvE. Venture is not like that. Venture, you only win if your founder wins, if the rest of your firm wins, if the other partners who are doing deals at your firm win. And for that reason, it's extremely collaborative and relationship based. Whereas if you're a poker player, you kind of don't need to care about anyone else in the world. As long as you can sit down at a poker table and play and do well, you can be an asshole, you can have zero friends, and you can still be a successful poker player. So that's another way in which it's quite different. And most VCs who are very good at what they do are very good relationship people. I don't think I'm that great of a relationship person, but I'm much better than I used to be. And I'm a lot better than most of the people I know who are traders. Most traders, it's like poker. They don't have to be nice. They don't have to be good relationship people. They don't have to have a lot of connections. So I think for that reason, the skills that lead you to being good at venture that do come from poker are the ability to think clearly about risk, the ability to control your emotions very well. Those things I find a lot of VCs actually are not very good at. They can get very emotional. They have a tough time with conflict. Those are two things that I'm very good at. But for the most part, I don't think those matter nearly as much as the other core skills of VC, to be honest.
Oh, right. Yeah. Well, when you put it like that. We recently, well, I don't think we talked about it on an interview, but we've talked before about how venture is in some way full of distractions. And as you put it, at the end of the day, it's about hitting the ball. Well, two questions here. One, tell me who you think is really good at hitting the ball other than yourself. And what does it take to quiet the noise and focus on hitting the ball?
Hitting the ball. Who is very good at hitting the ball? I'd say, probably the most controversial investor in our industry, which is Kyle Samani. Obviously, he has now exited his ball hitting days, so he's like the Babe Ruth. He's retired, but he probably has the most pound for pound IRR and P&L on a dollar invested basis than anybody else in the industry. So if there is a GOAT in VC, it would have to be Kyle Samani. Now that said, he is a very, very, what would I say, non-consensus person. He obviously attracts a lot of drama wherever he goes. But he's a true contrarian. And the best VCs have this contrarian streak that they don't just index what other people are doing. So I'd say Kyle Samani in terms of who's good at hitting the ball. What it takes to hit the ball, I mean, this is the hardest thing about VC, is that it's very easy to convince yourself that you're wrong. It's like, okay, well, Chris Dixon's doing this deal, or Paradigm's doing this deal, or oh, this company's so hot, they're blowing up on Twitter, everyone's talking about them, and especially in crypto, where so many of these deals are done pre-product market fit. Where okay, there's this new L1 that's launching. There's this well, Bitcoin L2s are hot. Babylon is hot. Eigenlayer is hot. These concepts that they haven't necessarily proven themselves at that stage, but the idea has so much traction and is kind of flying around everywhere in people's minds and in their collective conversations. It's really hard to convince yourself that no, I'm right. I don't believe it. Or I do believe it, and this thing that no one's talking about, that no one cares about, they will care about it. That is it's very difficult to do that. And so what it takes in terms of quieting down your mind to hit the ball, I think the answer is it's built through the discipline of your investment committee. It's part of the reason why VCs often operate in firms. They don't operate alone. When you're alone, it's very easy to get peer pressured. It's just, there's so many voices and so many external forces that are acting on you as a thinker. But when you're within the context of a firm and you've built this institutional culture of like, look, we don't take anything on faith. And even if you're getting swayed a little bit, your partner's not getting swayed. Your partner's like, well, no, prove it to me. If this thing is so great, if the Bitcoin L2s are so great, then show me the data. Show me the evidence. What is the argument? Let's like really map it out and walk through it step by step. And if you can't do that for me, I don't believe it. That discipline is a discipline that, we at Dragonfly, we've built over the years in the culture that we have as a firm. But if you don't have that, that's what I think makes it really hard to be a great investor.
What is the most dangerous blind spot that crypto VCs currently share?
The most dangerous blind spot. I think if you're a crypto VC, you are a creature of crypto cycles. There's everyone who's done this for long enough has experienced the ups and downs, has experienced the sense that, okay, none of this stuff matters. It's all bullshit. It wasn't that long ago that financial nihilism was the cultural zeitgeist within crypto Twitter. And people believed that none of this stuff mattered. None of it was valuable. It was all memes. Now people, I wouldn't say it's financial nihilism today. It's more that like, oh, it's not that nothing matters. It's that only a few things matter and they only matter if they have revenue, and these things that don't have revenue don't matter. I think if you're a crypto VC, it's easy to fall into this view that, oh, there's this kind of Hegelian dialectic that things just come and they go and they come and they go. And there's an infinite time series of booms and busts waiting for us. The longer you're in crypto, you just get more 4-year cycles, and it's 4-year cycles all the way down. And if you allow yourself to be lulled to sleep by this idea that it's inevitable, that this is how it's going to play out, I think you can potentially make very, very bad mistakes as an investor by just not really thinking deeply enough about what's going to change. The other thing I think people don't think enough about is that at some point, crypto VC might just be over. There might just be a last vintage. And if you think about, for example, social media was the biggest technology trend of the 2010s. Almost all the public market, if you think about, Google and Facebook and, Microsoft with their acquisition of LinkedIn, the biggest social media networks just kept growing and growing and growing and growing. But VC in social media was basically done by like 2009. There were almost no new social media companies that were created after 2009, except for TikTok. ByteDance was pretty much the only one that actually was able to build a real meaningful business after that time. And although the products themselves evolved, the platforms didn't evolve at all. It's basically still, Meta, WhatsApp, Instagram, blah, blah, blah. All that stuff existed in 2009. So it may be that crypto actually looks like that. That even though crypto continues growing, stablecoins continue growing, Bitcoin continues growing, Ethereum continues growing, all these things go up and to the right. But, let's say maybe by the year 2030, pretty much every important company is built. And the platforms are just so big that they keep growing, but there's really very little room for new players to be able to come in and disrupt. Now, I don't know that will happen. And if that does happen, I don't know when it will happen, but it will almost certainly happen at some point. It happens that way in almost every industry, especially when there are returns to scale and there are network effects, as there are in crypto. But I think most crypto VCs don't think about that. And I think that's a potential blind spot, is to believe that, well, because we've been doing this, we'll just continue doing this forever. There will always be consumer companies. There will always be new consumer companies. It's not clear there will always be new crypto companies. There may be, but there might not.
I felt that actually. It's interesting you're saying that, because when I went to this fintech conference in Amsterdam, Money 2020, it felt to me that this is the moment for these crypto companies to claim their spot and eat up, like partnerships and eat position basically in the fintech world, and really set ground for a chance to even grow and stay around. So that's very interesting. Dragonfly has been good at skipping categories that later failed, also known as trends. Are there any categories still around that you believe won't last?
Yeah, I mean, good question. There's a lot of categories that are basically dead or they're on death's door. We do occasionally get pitches for some of these. There's still occasionally, I'm doing Bitcoin layer 2 with lending or something. We do occasionally get stuff like this, but it's pretty rare now. I would say one of the categories I see a lot are these structured products on Hyperliquid, where it's like, this is a CLO on top of Hyperliquid, and CLOs are a huge market, and so Hyperliquid will have them, and it'll be a huge. So we still see a lot of these kind of esoteric financial products that are trying to launch on Hyperliquid or on some kind of isolated venue. I think this will probably stop sometime soon, just because like these are not businesses. Like having just one financial product is not, like, there's no business ever been built on selling one financial product. So especially not if you don't own the distribution, right? If Hyperliquid owns the distribution, then you're essentially just like a reseller, or Hyperliquid's a reseller of like your product. That's not a very compelling business model. What else might go away? There's a lot of people who are tokenizing individual assets. So it's like, I'm tokenizing gold mines, or I'm tokenizing, this cars. It's just like, this is not a business, like this is maybe a product, like this it's good that this exists, I guess. But if you're not tokenizing something really big like treasuries or stocks and bringing them to scale and actually figuring out the distribution, these people who are trying to say, I'm going to tokenize this one asset that I own and please venture back it. I think this stuff is gonna go away if not already. Those are the things that jump out to me the most. There's a classic one. So there's this joke in traditional venture capital that there are these kind of these basins that founders keep falling into all the time, especially when they pivot. They just tend to like the same ideas and constantly do them over and over and over again, even though VCs will always tell you, don't do that, right? So one of them is dating apps. Like anytime a founder pivots, they always consider doing a dating app. And it's almost always because like founders are young and single, and so they think a lot about dating. Or another one is co-founder dating is also a very common thing that founders end up thinking because they're trying to find a co-founder. And dev tools, right? A lot of productivity tools. A lot of like, I'll make a better to-do list. I'm going to make a better, Asana or whatever. So there's a lot of these basins of bad ideas that people just keep coming to again and again and again. Crypto has these as well. I'd say the most common one is Bloomberg for crypto. So it's funny because like Bloomberg for crypto was like a bad idea when I first became a VC. Like 10 years ago, people were pitching me on Bloomberg for crypto. And every year you always get pitches for Bloomberg for crypto. And they don't really know what they mean. It's a little bit vague what Bloomberg terminal with crypto would even mean, or like what's supposed to be in there, or blah, blah, blah. But it's kind of like, look, it's 2026. You need a crisper angle of attack than just like a tagline like Bloomberg for crypto. So those are things, I don't know if that's a trend so much as just like a little tidbit of, there's a lot of these things and they stay in the air. They never quite go away.
How can less experienced investors maintain an objective, clear perspective when constantly surrounded by market hype and 24/7 noise?
I think talk to less people is honestly my advice.
Really?
Yeah, I think if you're a new VC, I think a lot of new VCs make the mistake of talking to too many people and having their opinion be the average of what a bunch of people who they know are. I think as a VC, it actually really helps you to really kind of force yourself to think for yourself. And it's very easy to be like, oh yeah, I'm thinking for myself. I have my own ideas. I wrote a blog post. I whatever. I write my notes after I talk to someone. But the easiest way to not think for yourself is to just talk to too many people who have strong opinions. Now, it's not to say you should talk to no one, but most VCs I know, they just are basically a pastiche of like the 7 people they talk to most often. And the more that you are actually by yourself and just thinking and like reading and learning, the more you're actually going to have your own unique opinions. Now, they might not be right, they might not be totally accurate, but at least they're different from other people around you. And the most likely way you're going to have alpha is by actually thinking differently. So there's a risk that maybe you're wrong, but there's a risk also that maybe you're right about something else that everyone else is getting wrong. And as a VC, that's what you get paid for. You don't really get punished for being wrong. You know, if you have a portfolio of 50 deals and 15 of them are wrong, who cares? All that really matters is that you get the one thing right that everyone else got wrong. And that comes from being able to think differently.
I think that takes some degree of self-awareness, because even through the podcast, I've had guests. I've interviewed a lot of people, so it's not from today. Saying this mostly for people listening. That they will obviously talk with a lot of people and try to piece things together and feel that that's an original idea, but in reality, it just feels like they're sort of regurgitating Twitter timeline or things are being said around instead of having something truly unique from stuff that they've read online or something that they've put together from their own minds. So I think perhaps it takes a level of introspection to reach that.
I think it also takes a level of self-confidence. It's very easy and safe to talk to a bunch of people and be like, oh, okay, here's what I think about, you know, neobanks, because I talked to 5 people and they think this about neobanks. And so I'm going to average their opinions and then say that on my next podcast. I think it's a lot, it demands more of you to not do that and to really try to re-underwrite and think for yourself about what you believe about these things. And again, like the cost of being wrong is not that high. So I think most people are trying to optimize for seeming smart or seeming good at the job, as opposed to actually being good at the job. And that's, again, one of the reasons why I always say Kyle Samani is the GOAT. He is crazy, right? He clearly is just in his own world. He has very, very weird beliefs about a lot of things. He's gotten a lot of trends wrong and very confidently stated, oh, I think XYZ is going to happen, and he's totally off. But it's kind of like, it doesn't matter. If you get the one thing right that pays for everything, who gives a shit? VC is not the business of like trying to seem unobjectionable or trying to seem like, you know, an audience, you know, a focus group would think that you're smart and respectable. That's not how you win as a VC. You win as a VC by getting the one thing right that everyone else gets wrong.
What has fundraising millions taught you that you wouldn't have learned otherwise?
Well, first, I've fundraised at this point over $1 billion. So
Billions.
Fundraising in the millions, I think, there's a different set of lessons you have to learn than fundraising in the billions.
Okay.
But
The question
in
is
the
on
millions. Okay, you're going to modify the question. Okay.
No, I'm changing the question.
Yeah. Here's what I'd say. When you're fundraising, one thing you realize through fundraising is that there's very different styles of fundraising, and they can all be successful. One style of fundraising is really like building trust and getting to know somebody on a personal level and making them invested in you and want to back you because of who you are and what you believe. I am not good at that. I am no, not at all. I'm a pretty antisocial person. It might not seem that way, but it's very much the case that I have a tough time being able to build deep relationships with a lot of the folks who are investors and allocators. I think the place where I end up being successful, and there's many strategies to succeed in fundraising. There's not just one. My MO, and this is also where I tend to succeed more in fundraising, is more with institutions. And institutions, what they really care about more than anything else is you demonstrating extreme levels of competence and knowledge and mastery over your domain. If you're a family office, you're an individual, you're just very often that's where relationships and trust is going to matter a lot more. And they kind of want to know you for a very long time and get to know who you are and how you operate. And they want to be able to pick up the phone and call you, you know, and maybe even get a beer with you every once in a while. Whereas institutions, what they're looking for really is that you are the best in the business. You are the best at this of anybody that we speak to or know of. And you can make the most ironclad robust argument of why you're going to win and other people are going to lose, and you bring the receipts for it. That is where I tend to be strongest in that kind of fundraising. But the reality is that if you're raising for a fund, if you're raising for a lot of money, it's a team effort. You need people who are good at these different styles of fundraising to be able to attack different parts of the fundraising market. So, if you're a fund, if you're a founder and you're raising, you're basically raising from VCs, right? Maybe some corporates, maybe some individuals, but mostly you're raising from VCs. And VCs are all pretty similar to each other. But if you're a fund and you're raising from pools of capital, those pools of capital are very different. They're not as similar to each other as VCs are to each other. So raising from an endowment versus raising from a hospital foundation versus raising from an insurance company versus raising from a public pension versus raising from a family office, these are all very different experiences, and they require different skill sets, different angles of attack, different storytelling in order to get this stuff to work with each of these different groups. So fundraising is its own skill. The people who are really great at VC are good at both investing and fundraising. I've gotten better over the years, but I'm definitely not a world-class fundraiser.
Well, it's very impressive. I think for a lot of people, you are. We're gonna turn the conversation from being an investor to now being a founder, because this is something that I always hear you providing a lot of value. What is the biggest tell that a founder is highly likely to succeed at scale?
At scale. That's an interesting addition to that question. At scale, what makes someone likely to succeed at scale? I think being very intellectually flexible is probably the best predictor that I've seen of somebody who's good at handling scale.
Can you
The reality
expand
is
on
being a founder, so people think of being a founder as like, okay, there's founding skills or CEO skills or whatever. But the reality is that if you're a founder of a successful company, your job changes every 2 to 3 years. Being the founder of like a 3-person company versus being the founder of a 15-person company versus being a founder of a 100-person company versus being a founder of a 1,000-person company. Each of these really requires a different skill. It's a little bit like, being, it's like going from being the head of your PTA to being the mayor of a small town to being the president of America. Like, those are actually really 3 different jobs, and they require different skill sets. Being the president of America does not mean you're going to be a good PTA member, and also doesn't mean you're going to be a good small town mayor. So the founders who are very good at adapting are ones who are very curious about learning, changing their minds, letting go of old frameworks and adopting new ones. The founders who don't tend to do well with this are founders who are like, oh, I used to do this when we were 7 people. Why are people not following my instructions? Why is the product velocity slowing down? Why is there so much politics now? And they sort of think that this is a problem that needs to get solved. Oh, the problem is there's so much waste, or we have, leeches in the executive team. I got to fire them all. We got to go back to basics. No, it's not to say those things are never problems. They often are. As a company scales, almost inevitably, they're going to be growing pains. But the best founders are ones who are curious about the way in which the job is supposed to change as you get to scale. And they adapt their skill sets to be more, again, like running a 1,000-person company is more like running a small town, where it requires political skills. It requires diplomatic skills in order to run a company of that size, as opposed to running a 7-person company is really just all execution. When you're in a 7-person company, you don't need a lot of management. Everyone's rowing in the same rowboat, and you don't need to talk. You just see what everyone else is doing and you row. But when you have 50 people, 100 people, 1,000 people, then everything is about communication. There's nothing that you're going to do personally in a 1,000-person company that's going to move the needle. Everything that you do is about moving the troops through the commands you're giving as a general, and orienting those troops and inspiring those troops to be willing to go the extra mile and really put the attention to detail they need in order to create a great product. So that's why I say that's the hardest thing for most founders who get to scale, is navigating those changes in their job. And not everybody can do it well.
Yeah, what would be a tell? I guess you mentioned something, but I'm imagining, like, if an idea has potential to scale massively, and then it comes down, can this person do it? What would you seek in their skills, personality, whatever, to
Yeah. In order to underwrite a successful founder, generally our philosophy is that we look for spikiness. So we're investing for strengths, not for lack of weakness. Almost every great founder has weaknesses. If you think of Mark Zuckerberg, at the time that he was building Facebook, obviously not a great leader, had very significant weaknesses in his ability to lead a team. But at the stuff he was strong at, he was world-class. Almost every founder, Travis Kalanick, founder of Uber, also very famously, he had tremendous strengths, but also very significant weaknesses. I think this is a kind of a universal law of startups, is that the best founders are not the all-rounders. All-rounders make for great executives when a company is at scale. Somebody who they're never going to quite drop the ball. They're never going to quite say the wrong thing. They're never going to make anyone mad at them. These people are good when a company is at scale. They're great executives, but they're not good for 0 to 1. And they're not good for navigating these phase transitions that a startup generally goes through as it grows and scales. So we're okay with deeply flawed founders. I think you have to be in order to fund great companies. But we're not okay with a founder who's not great at anything in particular.
If I flip the question and I think like a tell that a founder wouldn't succeed, so let me paint a scenario. The idea is great, it's scalable, the team is great, everything looks good on paper, and they even managed to get a lot of good funds in, but there's something off. What is that usually?
There's something off. I mean,
say more than one thing.
Yeah. So, one of the most obvious things is integrity. So if this founder is not being completely honest or completely transparent, look, every company, there's always a little bit of puffery. There's always a little bit of, we're going to take over the world. We're going to have a cajillion, we're going to do this, we're going to do that. We have we're going to have a partnership with this person tomorrow. And you ask them, okay, but is it, how far along are you? Yeah, there's confidence, but then there's also confidence that veers into dishonesty. And that is a very, very, very strong tell, because that kind of behavior only ever accelerates. I've never seen it get better. It only ever gets worse as a company grows. So that's one that is kind of like a showstopper. If we see a pattern of dishonesty, that'll get us to say, you know what, we're good. The other thing I'd say is just consistency. Is, very common mistake that a lot of investors make is they really like the story, they really like the founder, they really like the team, they really like the market, but things just aren't quite adding up. The founder is saying that, they're super eager to get this thing closed, but then they're kind of slow rolling and they're not moving very fast. Or, the founder is, they're very, very bullish and they have a lot of demand, but they're willing to relent on all the terms and they're actually giving a pretty low valuation. Okay, so these things are not consistent, right? Like the story is not quite adding up. And very bad investors oftentimes will just ignore these. They'll be like, it's probably that I'm so great. Or it's probably that, they find some innocuous explanation for why the story is not consistent. Almost any time the story is not consistent with the behavior that you're seeing from a startup, you're missing something. And if you don't know what it is, probably it's not good for you. That's almost always the answer. If you don't know what it is, probably it's not good for you. And if you learned it, you would not want to invest. So that I'd say, it's not a specific thing, but it's like a category of things that as investors, you just learn the more experienced you are that, hey, spidey senses are tingling, pull the brakes. Something isn't adding up and we don't know what it is. And if you don't know what it is, probably it's not something you're going to like.
How often do you catch founders lying? Is that like a common thing?
So most deals, you never even get that far along, so that if the founder's lying, who cares? Because we're not even going to pass, or we're not even going to investigate it because we're just going to pass.
Yeah.
The founder lying when you get into the actual meat of things, pretty rare, but not so rare that you don't see it. So it's more often, again, puffery is more common, right? Puffery of just sort of, we're going to have a deal with NVIDIA, or, we're going to, Binance is really wanting to come in. And then you go talk to Binance, you go talk to NVIDIA, and they're like, we're thinking about it. This kind of thing is very common. So I wouldn't consider that a lie. I would consider that, okay, they're obviously trying to get us to buy. They're obviously excited. They like their company. Maybe they're not even calibrated. Maybe they think that they're going to come in and they just don't know, because look, it's an early stage startup and these guys maybe are young and inexperienced. So I don't generally take that as being that dispositive of I can't trust this person or they're lying to me. But somebody like actually lying about something material, I'd say very rare, but it does happen. And when it does happen, it's like an absolute showstopper.
Yeah. The idea of solo founder used to be frowned upon, but now in the AI era seems to be celebrated. Did you ever have any frameworks around it? Why do you think it existed? And do you think it's actually true that now someone can run the show on their own?
They can, and it's always been possible to start up by yourself. It's more that it's not that it's that hard to start a startup by yourself. It's more that most people who try to start a startup by themselves, there's some adverse selection in that, like, if you're really good, people will want to work with you and build a company with you, and you'll find really strong co-founders. If nobody wants to build a business with you, it could be that you don't understand that you're not good enough to work with the people you want to work with. Or you think you're better than everyone and you're not. Or
Maybe
you
the
just don't,
person is
or you don't get along with
antisocial.
people.
It's like,
Yeah. So maybe you just don't get along with people, which is not a great signal for building a company and being able to win allies and customers and hiring people well and retaining them and so on. That said, if we don't think there's anything wrong with the person and they're just starting a startup by themselves, yeah, we don't care. It's totally fine. So it's not so much that, like, oh, there's a bad sign, so much as it's more likely that this will be a bad founder if they're a solo founder. The other thing, of course, is that there are oftentimes fatal flaws with a founder, right? So let's say a founder is extremely technical, they don't really have any business sense or business experience or sales experience or whatever, but they've partnered with somebody who has that. Then it's like, okay, this team balances itself out and they're making up for each other's weaknesses, which makes you less worried about the downside of this founder CEO. If you're a solo founder, then it's like, okay, now I'm really worried because, like, who's going to stop you? If you hire a chief business officer or a COO, right? The reality is that within a company, founders are special. They're always special. Doesn't matter if, like, oh, this founder has a weakness and they know they have this weakness and they hired this COO and the COO doesn't matter. It's always true that the founder is special. And the COO or the chief business officer or the head of sales or whatever is always going to be slightly holding themselves back because they don't have control. And if they don't have control, that always means there's a power distortion field that's being applied by the founder, whether they know it or not. And having somebody else who's also in the distortion field, they're sort of sitting inside the bubble with the founder, is a very powerful corrective in being able to avoid some of those failure modes or those weaknesses. So that's why, as VCs, we care about this. But if the founder doesn't have that, then yeah, whatever. It's totally fine to be a solo founder.
Okay. Yeah, I definitely agree on the bubble part. So the industry in the past 6 months obviously has been shaken, and a lot of the founders had to pivot, like look inside of the company and restructure things. Some people have been laid off. Do you have any advice for founders that are still around? And when I say founders, not, like pre-raising, but like people that have been around for a while and maybe are feeling a little bit lost, like if they should just quit and exit what they've been building for maybe a few years, or if there's a better mindset around it.
Man, I'm very loath to give advice without having somebody and their situation in front of me. It's a little bit like giving advice to young people and saying, oh, you're in college. Well, here, you should do this. You should go take this degree and you should do blah, blah, blah. And it's like, if you don't know this person, you don't know their environment or their circumstances or their skills, I think it's actually it's not just hard, it's probably bad to be giving advice in generality without really knowing what someone's situation is. The number one thing that I would say that may be useful is oftentimes what holds people back from being able to make decisions that they know are good is shame. And there's a lot of shame that gets wrapped up in the time, the energy, the money that you've raised, the employees that you have hanging on you, that prevents people from making what ultimately is the right decision. And the right decision might be to wind down. It might be to get acquired. It might be to do something else. It might be to keep going. But the most deleterious thing for a lot of these founders is that they feel ashamed of making a decision or straying from the status quo. And the only advice I'd give is try your best to let go of that and to really try to assume that, okay, imagine that it wasn't you, it was someone else that was in the situation that you're in. What advice would you give them?
I imagine a lot of it could be having the confidence that they are having the right judgment. So I guess the question could also be formulated in what's the right framework to look at the current state of the industry, and from that perhaps people can take information and make their own decision.
Yeah, I think it's very clear there are parts of this industry that are never coming back. You know, if you're sitting around holding NFTs, hoping that someday there's going to be another NFT cycle, I'm like, you should probably let go of that. You should probably move on. You should probably find something else to do that's going to be a good use of your time and your capital and your talents. On the other hand, there are parts of the industry that I do think will come back and that are deeply cyclical. If you look at DeFi, DeFi is a perfect example of this. You know, a lot of DeFi things are down bad, but DeFi is one of these things that I think is just never going to go away. And it's going to be a fundamental part of how the world works and about how crypto works. So that's why I say it's hard to speak in generalities. There's the famous line from Anna Karenina by Tolstoy, which is that all happy families are alike, but all unhappy families are unhappy in their own way. And I think it's very true of startups as well.
Wow. Okay. So we've covered.
Deep, right?
That was very deep. It distracted me from the question I had next.
Okay. Good. It's working. That's why I'm such a great VC.
So beyond that, like when you think of all the categories, we've talked about the categories that won't be around. We're talking now, like a lot of this is not going to be around. What is certain to be around? Others, like, don't tell me DeFi, like be more specific. Yeah.
What is certain to be around? I think prediction markets will be around. Layer ones will be around. DeFi will be around. I think it's very clear that the connective tissue between on-chain and off-chain, on-ramps and these kind of capital corridors, they'll be around. Remittances will be around. Payments will be around. What else is there? Stablecoins obviously will be around. The issuers, the orchestrators, and so on. Those are pretty much guaranteed in my mind to continue to matter. Pretty much everything else, it's hard to say. Okay,
that's good. You predicted that a major tech giant will integrate or launch a crypto wallet this year. I don't know if you recall that. Which Web2 company is closest to actually doing it, and who is completely missing the boat?
So to be clear, I am already right. I made that prediction in January, and I think it was in March that it was leaked that Meta is going to be launching their own stablecoin wallet. So nailed that. They've already announced that they're doing stablecoin payouts in emerging markets for creators I believe on Instagram. But they're going to be expanding it. They're going to be launching a wallet at some point soon. And obviously, Zuck has been very bullish on crypto ever since Libra. He believes in the space very clearly. So I think Meta is probably going to be first to the race. But if you look at this OUSD announcement that took place just a couple of days ago, this stablecoin consortium, that's going to be all these different companies that are stablecoin issuers. Google is on that list. Google is one of the members of the OUSD consortium. So could well be that GUSD or Google's USD, which is a wrapper over OUSD, may go live. OUSD is supposed to go live later this year. That said, I have some skepticism about OUSD, and I've been tweeting about how I think I said on the chopping block this week that I thought OUSD was probably not very likely to succeed because of this consortium of 140 companies. It's kind of like this, sort of UN type model with way too many cooks in the kitchen, and this kind of diffusion of responsibility doesn't tend to end well. And we already saw just this morning, I was tweeting about this announcement that some of the Korean companies, I think it was, what was it, Hyundai and SK Telecom or something, they announced that They were like, yeah, I don't know why we were in this announcement. We don't know about this. We haven't signed anything. I don't know why they included us. And there may be more of this coming, of just like, oh, I thought I signed like an LOI. I didn't approve you saying to the world that I'm launching a stablecoin. Which, by the way, also happened with Libra, 5 years ago. So what's old is new.
I never, so the fact that it is Meta, like I feel like Meta says we're gonna do this, it stays around for a little bit, sort of like launching products that don't seem to work. So Meta launching a wallet, I'm like, for 3 months, like how long is that gonna be?
What?
I don't know.
Hold on, that definitely, how does that not count? That's a top 10 company in the world.
It is, and if they launch, you're right. But in terms of it lasting, it's a different story, which is not what you said. It's not what you predicted. But this is just me adding to it. Like I would feel like something has
Sounds
happened.
like you're nitpicking. Yeah.
Am I? well,
I think you are.
We'll see how long this wallet lasts.
We'll see. I mean, look, when it comes to like coverage of emerging markets, there is no rival to Meta. Like if you look in places like India, Southeast Asia, LATAM, these people live on WhatsApp, and obviously Instagram as well is ubiquitous around the world. So these are enormous platforms with respect to their reach. So I wouldn't take it lightly that they're launching a stablecoin wallet. Like the only person that has more reach than Meta when it comes to people's wallets is probably Binance themselves.
Yeah. What's a core philosophical belief about crypto that you've lost over the years?
That I've lost over the years.
It's been many.
That's a great question. Yeah. I mean, yeah, probably the biggest one is that the best technology wins. I think I had a conviction in that early on that I have since lost, and I no longer believe that.
What has it been replaced by?
It's been replaced by a combination of go-to-market, distribution, partnerships, product quality, UX, all the obvious things. I mean, I don't think this is going to surprise anybody that best technology doesn't win. But I think I had a somewhat Pollyanna-ish belief that crypto was incepted by technologists, and the technologists, the tastemakers, the people who are like very deep in the core, in the code, in the algorithms, that they were ultimately kind of gatekeeping for the rest of us what is good enough to use, what is robust enough and trustworthy enough to use. And we've come to a world where a lot of these things don't really matter so much anymore. People don't really care. And maybe that's normal, maybe that's inevitable, but it is a little bit sad to see that, we may end up converging on technologies that are not really the best that we have to offer.
Is there any other beliefs that you had that you no longer hold in the industry?
Beliefs that I had that I no longer hold. I once believed that crypto was fundamentally opposed to the state, and that this stuff would eventually get so big that it would get banned pretty much everywhere. And that crypto was going to have to become valuable despite being this kind of underground, anti-authoritarian asset. And we're in a world now where like that's just not true at all. Bitcoin is in ETFs in the US and Japan and Hong Kong, in Europe. Stablecoins now are legal. You can send $100 million instantaneously to, someone in North Korea, and no one will stop you, and it's totally legal. I mean, it's obviously illegal in that, okay, it's a sanctions violation, but in terms of having to stop the stablecoin before it gets there, that's just how stablecoins work. It's completely the law. So this version of the world is very surprising. I would not have predicted this 10 years ago. And that, I think, has been a fundamental shift in my perspective about what crypto is and what role it plays in the financial universe.
We sort of begins to like normalize crypto and like blend it with how the world works.
Exactly.
I definitely had some.
It's become, it used to be that crypto was a rebellion, And now, it's a little bit like America, right? Like America was founded on a rebellion. It was literally a bunch of people said taxes are too high. They grabbed guns and they killed their government and pushed them out and started over. And now America is an institutionalist. Now America is like, the longest running freestanding constitutional government in the world. You sort of live long enough to see yourself become your dad. That's kind of the moral of the story. And so I think like Bitcoin was born out of this, this rebellion against the banks. And now here we are negotiating with the banks. Like literally that's what's happening right now with the Clarity Act. So things change.
What is the biggest mistake we ever did as an industry?
Biggest mistake that we ever did was making an idol of Sam Bankman-Fried. I think that was the biggest mistake.
Out of everything that happened in the industry?
Yeah, that's what I would say.
Do you think we'll ever have another event alike?
Alike, probably not. It's kind of like the great financial crisis, right? It was a housing crisis. The next crisis is never quite the same because you build all of these defenses and all of these rules to be able to see the next one early. Now we have proof of reserves. Now we have all these sleuths looking on chain and marking what's coming in and out of this exchange or that exchange, checking for solvency tests, all this stuff, all the regulations that are now, Binance getting kicked out of EU, blah, 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 blah. All this stuff is designed to stop the next FTX, which means that probably we're not going to get another FTX. We'll get something. This is definitely not the last failure. This is definitely not the last public embarrassment. But it is probably the last one that will look like that.
Hopefully. Hopefully it's the last one.
Hopefully.
We never know. We could never predict that happening, I guess.
That's right.
So the industry has had these big turning moments, that I guess being one of them, not always for the worse. We've had moments that things turned massively for better. Do you think we're going to continue to have that? Like, because as the industry is maturing, seems less likely. We had, for example, one of those moments, I guess, like Trump launching a token was a massive event. And I feel like every year something happens. But I don't know if as the industry is maturing, perhaps we're going to lose that. Or do you think we're going to continue to have those big moments?
I think we will definitely continue to have big moments. I mean, just look at OUSD, right? OUSD was just announced 2 days ago. This is the biggest consortium of like some of the largest companies in the world of, BNY Mellon and, the big banks and Google and, Samsung and blah, 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 all coming together and saying, we are going to build a stablecoin to take down Circle and Tether. That's crazy. If there is a path to stablecoins getting to 3 trillion by the end of the decade, it's going to look something like this. Now, I don't know if it's going to succeed. Obviously, I have my doubts, but this just goes to show like, yeah, history's not over. We're still in the early innings of this industry. So despite everything that I've said about the things that are not coming back and the things that you sort of can't be complacent in assuming that, oh, okay, it's all going to just rewind and we're going to play it back forward again. It's very clear crypto is still early. We're not done. On the scale of financial assets, stablecoins are $315 billion. If you're BlackRock or, a financial institution, that's not a lot. Stablecoins are still pretty small in the realm of looking at actual dollar flows, treasury issuances, et cetera. It's growing fast. It's positioning itself to become systemically important, but it's not systemically important right now. It's basis points of the total dollar supply. But that will change. And when that changes, you are going to see a lot more crazy shit happen in this industry. It's going to look different. It's not going to be quite the same form factor as we've seen in the past. But no, the story is definitely not over. And I expect a lot more to be happening over the next decade.
You mentioned earlier that you compared crypto industry with, I guess, social media, like social media VCs and crypto VCs. As crypto begins to blend with fintech and finance and becomes less of a category, all the crypto VCs will have to, like they will no longer work as as a category VC fund. So what do you think is going to happen? Do you think the majority is not going to be around? Like, what are you thinking also for Dragonfly? And what's the best way to look at it as well? Like imagining from a point of like someone else running their fund, perhaps not as big as yours. What's the best framework to take?
It's a good question. What's clear is that when crypto succeeds and it crosses that chasm, it succeeds because crypto just becomes ubiquitous. It gets in the water supply. You know, in the same way, like, okay, social was a category in, you know, the days of Facebook and LinkedIn and Snap. But eventually social is just a feature. You know, you build an app and you have social features in it. It's not you're building a social network. It becomes part of everything. And in the same way, crypto will not be the company. It will be a feature within the company. Is that, oh yeah, we have stablecoin balances, or we have this thing, or we have, you know, blah, blah, blah. And so I think that is where we are going. And if that's where we're going, you do not need to have a unique expertise in crypto in the same way you don't need to have a unique expertise in social to underwrite a company that has social features. If it's not primarily a social media company. So I think that's where we're going. If not, that's already where we've started to transition. And in that world, the answer is that to be a good VC, you have to be a good VC. You have to be good at all the things that VCs are good at, which means that now generalists are coming into your lane. Fintech investors are coming into your lane. If it's a crypto AI project, AI investors are coming into your lane. And you just have to be a better partner. You have to be a better VC. You have to be a better support. You have to be a better advisor. You have to be a better supporter of the founders that you're working with. And if you can't, then you don't get to manage money. The end. So it's kind of quaint advice, but it's the obvious answer, is that if crypto wins, it wins by becoming ubiquitous. And the companies that use crypto are not crypto companies. They're just companies.
Yeah, that's interesting. So crypto and AI. Give me the latest, most interesting thing you've seen. Agentic payments, anything.
Yeah, well, so we just backed a company called Venice, which obviously is one of the big darlings of crypto right now. Venice, they're growing really fast. They're about 70 million run rate, and they're using crypto largely via Near, actually, for their confidential compute to allow you to run private, uncensored inference on models. And the idea, I think, is actually very similar to the story for crypto itself, which is that, you know, Bitcoin allowed you to be able to hold private money. So money that cannot be stopped or censored. You know, I analogize it well as something like Apple. Apple created a phone that can't be tapped, right? That, like, you know, nobody can open and get into your phone except you. Right now with AI is trivially surveillable. When you use OpenAI, when you use Anthropic, when you use any of these model providers, they see your messages. They see everything that you say. They see everything that you do. And that means, one, of course, they are going to stop you if they're doing things you don't like. Right now, we just had the re-release of Fable, and Fable has very severe guardrails. If you want to talk to Fable about biology or cybersecurity or anything, it will stop you and it will basically shut itself off. And these things are probably only going to accelerate. We're going to have more and more restrictions over time on what you can and cannot do with AI. And then, of course, the fact that every one of these companies, they see everything that you say. And it's not just that they're training on it. They are. But it's also that they're potentially selling the data to other people who are going to be using it for training. And then, of course, there's the fact that your data can be retrieved by law enforcement or by the government without a search warrant. It can just be subpoenaed because you've shared it with a third party, and therefore these are not your personal papers or effects. Under American law, they can just take it and look at it anytime they want. And this is not what people's intuitions are about their AIs, right? Their intuitions are that, wait, no, hold on. This is my closest confidant. These are my innermost thoughts. This is like, this is the little genie sitting on my shoulder that I whisper my secrets to. This is not just like me sending some stuff to some other company. This is obviously different. But right now, the law says that if you ask your AI for legal advice, it can go into discovery, and your opponents can pull all the conversations you've had with your AI. This is not what most people believe is the way that AI ought to be regulated, but the law has not caught up to our intuitions and to the way in which our society is changing. And so Venice, from the ground up, says zero data retention, complete privacy. You can create a encrypted tunnel between yourself and the GPU. There's nobody except that GPU and yourself can see anything that you're saying. That is again, you were just talking previously on the show about privacy being this thing that people are waking up to. That's exactly, I think, the core story behind what's happening with Venice.
Yeah, I was about to mention that. I think, I don't know if that's a general thing or it's because I'm inside the bubble myself. It's hard to tell, like if I go outside here in London and just ask the average person if they're concerned with privacy. It might be true, at least here in London, I guess, could be actually very possible.
I think it's very intuitive to people because there's been a lot of these viral stories about people who had their data from ChatGPT pulled by law enforcement in a lawsuit, in all these different circumstances where they really kind of feel like this shouldn't be available to anybody else but me. But you learn very quickly that no, that's not how it works. Unless you really own your model and you have this direct private enclave that's protecting you, right now, no. The conversations you have with your AI are less protected than any other personal effect you might have.
How long do you think it will take for people to trust AI to make payments for them the same way they trust that their judgment is better than going with an expert? Because that's already happening.
Yeah, I think not long. I think maybe another year or two, honestly, is probably as far as it will take. These models are already getting really good at being able to use resources intelligently. And now I think the economic nature of people are spending so much money on AI tokens that they're already effectively spending money, right? Like they're just spending money in the form of tokens and API calls, but those API calls are very expensive. That's isomorphic to them having their own wallet that they're spending money with. But having them make general spending decisions and doing so in ways that are intelligent and thoughtful, that's going to take a little bit of time, but I don't think it'll take that long. I would guess, by 2028, you're going to see people have their AIs making significant spending decisions on their behalf.
I'm just getting a message from Mert saying that he might be able to join in 15 minutes. So if we stay around for 15 minutes more, because I thought we're gonna end at the 5-hour mark, but if you have the time,
we have an encore. Sure.
Okay,
let me do it.
Come as soon as you can. Let's see if Mert joins us in the end.
Okay.
You know how much I like talking about AI. I actually been holding back talking about AI with you because the last time that we recorded, we talked about that. So I specifically set the intent of not going into it.
Okay.
But I'm happy to talk about it. Throughout this show, my intent of having you for longer as well was to go through somewhat what had been talked about in the show. So we had RoboStrategy talking about robotics. We had Yat talking about agentic payments, and the conversation was very focused on AI. Tarun explained some of the terminology as if I was 8 years old. So it's been very interesting. We also had Solana versus Ethereum going on. Actually, your feelings on Ethereum right now would be insightful.
My feelings on Ethereum. Right now, price-wise, obviously, alts are pretty challenged. And Bitcoin itself probably needs to get a floor, some footing in order for ETH and Sol and kind of everything in the alt space to be able to do well. That's going to take some time. It's pretty clear right now there's not a lot of appetite, and retail is gone. Retail is trading AI stocks and memory stocks and space. All this other stuff is captivating retail over crypto right now. But if you assume that comes back, I think actually Ethereum is pretty well positioned to be able to do well in this environment.
Mhm.
The recent launch of ETH Labs, which is the spin out from the EF, which is this new organization that's more commercial and more focused on acceleration relative to the EF, I think is a good change. And it shows that Ethereum is expanding beyond the initial remit of the EF. The EF has always been kind of this like innermost chamber of the high priests of Ethereum, and they're kind of devoted to the core values, whereas ETH Labs is more pragmatic, and I think that pragmatism is good. It's really what Ethereum needs at this point, when it's much more about adoption and institutions and market support. So I think that is a very good development for Ethereum. Solana is still a little bit, I think, struggling to nail down its identity. If you remember the last cycle, Solana was the retail chain. It was the meme coin chain. It was the trading chain. It was like everything consumer goes on Solana. And that was very much Solana's positioning. They embraced it to some degree. They kind of never were really super comfortable with the meme coin stuff, but they sort of knew where their bread was buttered, and they didn't resist it. Now it's very clear that that's not the tune that Solana is singing, right? And this will be interesting if you get Mert to come on and you let him know what I said.
Yeah.
So I think Solana right now, it's a little bit of a no man's land, because the reality is that still the fees, the money being made in Solana is being made by Pump.fun, and like the meme coin activity is still there, right? So right now, Ansem coin is pumping, it's getting all this action. So there's some residual activity still happening in the trenches, but where Solana is trying to position themselves is about TradFi. They're like, oh no, we have stable coins, and we have asset tokenization, and we have this, and we have that, and we have TVL. That's the story that Solana is trying to tell. It's where they're spending their money. It's where they're pushing all their effort. But it's not really working on that level. Right, Solana is not best in class there. Ethereum is more TVL and more institutions and more tokenized assets and RWAs and so on. And if it comes to volumes, Hyperliquid is eating everyone's lunch. And then, number two behind them is Lighter, which is built on Ethereum, and so on and so forth. So that's part of the reason why there's this dissonance right now, I think, in Solana land, is that we are still the meme coin chain de facto. We really don't want to be. We know that that's kind of a dying category, and we're trying to diversify our brand away from that. But there's a dissonance right now in Solana that's difficult to resolve. I'm curious what Mert would say to that. But you should tell him that I said this and get his reaction.
Let's see. So it sounds like you're bearish on Solana now.
I wouldn't say I'm bearish on Solana. I think that Solana is probably not as well positioned as Ethereum is right now. The thing about Solana, though, is that they are kind of the only other player. They're obviously very big, very well capitalized. They have a lot of users. They have a lot of adoption. So I think the Solana team is very good, and they're very capable. And the chain obviously is itself very, very strong. I just think that narrative-wise, they're between a rock and a hard place, and they don't have a lot of good moves available to them about how to reform the narrative that fits better into this market cycle.
Couldn't Hyperliquid become more dominant?
They certainly can. I mean, right now on a TVL basis, I think Hyperliquid is above Solana now in FTV, if I'm not mistaken. I mean, FTV for Hyperliquid is a little bit of a joke. It's not apples to apples with Solana, because so much of the FTV is not yet issued, and the team holds an enormous amount of it. Whereas for Solana is like, it's been around for a very long time. The assets are out there. It's pretty liquid relative to the FTV. So it's not apples to apples, but technically, if you go look on CoinMarketCap, I believe the FTV for Hyperliquid is higher than Solana. Let me just verify that, so I know I'm not talking out of my ass.
Okay. While you check, I also want to know if you think that any other L1 could get up on the podium.
I think they certainly can. Okay, yeah. So just to give you the numbers, Solana FTV is 51 billion. The Hyperliquid FTV is 70 billion. So Hyperliquid does have a higher FTV than Solana, but Solana circulating is much higher, because of course most of the asset is already circulating, right? So Solana circulating is 48 billion out of the 51 billion FTV. And Hyperliquid is only 15 billion circulating. So very different numbers that we're comparing here. So sorry, what was the question you were asking?
If there's a chance that any other L1 would go up in the podium.
Yeah, I do think so. I think there's been a bit of a reset, right? Like we've seen so much churn and so much, the activity on Solana a year ago was crazy, right? It was a year ago that, Trump coin was still relatively new. The market wasn't quite in the depths that it is now of bearishness. And at that time, Solana was printing money. Solana was super high. And, the daily actives on Solana was like 5 million or something. Today, daily active addresses on Solana are sub 1 million. It's come down, more than 80%. And what that tells you, obviously still Solana rules the roost. It's still one of the most active chains, if not the most active chain. But it does mean that it's very possible that in the next cycle, we just see very different activity in the same way that, Solana in this last cycle basically went from zero and nothing going on in the chain, just like small NFTs trading on Solana, to, oh shit, Solana is the center of the universe. There's really nothing to say that couldn't happen again on a different chain. And that's why it's so important to not get too attached to what happened in the last cycle to determine what the next cycle is going to look like.
Yeah. Interesting. What's the most brilliant thing you've read recently?
The most brilliant thing I've read recently. That is a good question. There was a tweet that I read recently about OUSD that I thought was very well articulated. Can't remember who it was by, so I feel like this is a bad example because I'm not going to tell you what the tweet was.
People can go read it.
Yeah. Maybe just look up people talking about OUSD. What is a brilliant thing I've read recently? I don't know. There's not a lot of brilliant people right now. Not a lot of brilliance. No. I feel like mostly the brilliant stuff is coming from me.
Oh, your own stuff.
Yeah.
I can see that.
No, I think it was pretty. Like the thing that the back and forth I had with Simon Dedek, I thought was pretty good. Thought that was quite brilliant.
I mean, the original question was unhinged and brilliant, so you could just go with unhinged.
Oh, unhinged and brilliant. Unhinged. Since it's unhinged, let's see. Who's unhinged? I don't know. This is not a good question for me. The thing is, like, I don't really read Twitter that much.
No, it doesn't have to be Twitter. Like, so I asked this question to Tarun, and it was about research papers, but I left it more open for you.
Okay.
Like anything
well,
you've read.
that's very generous of you.
Anywhere.
Yeah. Anything I've read anywhere.
It's too broad.
I mean, I wrote this piece about the 149 person company. Went semi-viral, this article that I wrote recently about how the economics of AI subscriptions is ultimately going to be distortive to company size. And it's going to incentivize more and more companies to stay smaller so that they can basically be on better price tiers for AI. If AI becomes the primary input to your company and it starts displacing more and more of your labor costs, then actually there becomes this notch in your size that if you go above this size, a bunch of new rules kick in that basically massively increase your costs and cause you to start losing money where you might have been making money at 149 people. And so this theory, I got this from looking at Semi-Analysis. They published a little write-up about what the marginal price of a token is on these different pricing plans and how subscriptions are basically being subsidized if you actually max out your subscription, something like 30 to 70x the same cost that you'd get paying for a token via API. And that just got me thinking and kind of led to me coming up with the idea for this blog post. So again, kind of, I guess I'm sort of touting myself as being brilliant, but I think also semi-analysis was I think quite brilliant in the way they analyze this. Yeah.
Yeah. Do you think we're going to get past the subscription model? Because that's something I've been thinking about.
No, I think subscription model is going to exist forever.
It's going to exist forever?
It's going to exist forever. I mean, it's a very, very old form of pricing. And I think it exists for a reason. I think it is economically optimal for there to be subscriptions as well as pay-as-you-go pricing for different assets.
Are we going to have new models with AI, new payment models, you don't think?
I don't think so. I think this is basically it. I mean, Alex Karp, the CEO of Palantir, he has said that why is it that models are paying based on their costs AI providers are paying based on their cost rather than paying based on the value that they're creating. Obviously, Palantir is the opposite. They pay for value as opposed to pay for costs. I think this is just structurally very difficult for AIs to be able to figure out what you're doing and how valuable it is to decide how to charge you. And there's fundamentally, I mean, the reality is that fundamentally AI is a commodity. There's different companies that offer the same product. GPT 5.5 or 5.6 Sol is maybe going to be competitive with Fable. And okay, maybe Fable's somewhat better, but it's not infinitely better. And so there's always going to be some exchange rate. Or maybe there's a multi-agent system that you can build that's going to be as good as Fable or as Mythos. So I think that is going to force the economics of AI to stay as commodities. And if it's a commodity, that means you pay for cost as opposed to pay for value.
So we have Mert here. So before you go, I'll let you ask the question.
Okay.
I'm going to add
Mert.
The question on Solana.
Oh, I have to ask it. Okay.
Yes.
All right,
yes.
fine.
Of course.
Okay. Good. All right.
Okay. I'm going to add him and then I'm going to kick him out. And okay.
Okay.
Hi, Mert. I'm going to give you a proper. I'm going to give you a proper introduction, but you're coming in now because Hoseeb has a question for you. He's going to confront you with something, and I wanted him to do it, not myself.
Okay. Are you wearing a suit?
No, I'm wearing a Charlie Kirk Freedom shirt and a jacket.
Okay. All right. I was just like, holy shit, you're very dressed up for this podcast. I'm impressed. Okay, so the question that was posed to me that I am reposing to you, Mert, is about the future of Solana. And the question is particularly around Solana's positioning. So in the last cycle, Solana was the consumer chain. It made its name because of all the retail activity, the meme coins, pumped out fun, all the social apps. The idea is that everything that's retail, everything that's consumer is coming on Solana. And Solana has seemed to increasingly move its positioning away from that, more toward finance, TradFi. We're launching stable coins. We've got X stocks. We've got all this. The original pitch of we're NASDAQ on the blockchain seems to be what Solana is increasingly going with as its public positioning. But the reality is, if you look on the chain, most of what people are doing is still the meme coin stuff. Ansem coin is pumping. There's still like this. This is ultimately what's actually animating most of the activity on Solana, relative to if you look at Ethereum, you look at Hyperliquid. That's where most of the TradFi, RWA, blah blah blah, stablecoin stuff is happening. So how does Solana square that circle of trying to move away from being this we're the consumer retail chain to we're the TradFi finance chain? That is my question to you.
Well, I guess my question to you before I answer would be,
when
you say Solana...
You can't ask a question with a question. That's not fair.
Well, I always get, it's very hard to, you need to frame these things correctly, right? So when people say Solana has been doing this, like who do we mean by Solana?
I think we mean the big Ouija board that is comprised of all of the players acting on behalf of the Solana ecosystem. That's my non-answer to your question.
Well, one thing I'll say is that if you, for example, look at these consumer type successes that Solana has had, whether it was NFTs in 21, 22, where it was a major chain other than Ethereum for really collectibles and NFTs, or the other, so for example, Magic Eden and Phantom were the big winners there. They weren't pushed by Solana Foundation. They just organically arose from, hey, we can enable such an experience on this chain. We can't necessarily do it on Ethereum, at least not at that time. Same thing with, if you look at the past cycle of Pump That Fun or Axiom or even Jupiter, where, for example, Jupiter has been vocally known, and I don't want to single out Jupiter, but like many teams have been vocally known for basically saying, hey, Solana Foundation won't help us. Which like, I think that's probably changed a little bit. But that is to say the consumer stuff has always kind of been organic on Solana because it's just, there are certain things you can get with a top-down BD approach in terms of PMF, but consumer is not one of those things, right? People either download the thing and come back and don't churn, or they do churn, right? Nothing that me or Anatoly tweet or Vibu, whatever, it ever changes that. And so the retail stuff has always been very bottoms up. And what one may say something like, well, Solana has a variety of things that support that. For example, Super Team, which is like a global network of founders, and Coliseum hackathons and partnerships with Alliance, and now Y Combinator and all these different things. But fundamentally, that has never been necessarily neglected as much as it's just something that can't be forced. That, I mean, one thing they might be able to do, for example, is help teams like Backpack and Sunrise help list tokenized stocks, which I think is an interesting one, because it's unclear to me if tokenized stocks are this thing that institutions care about, which my guess is probably not unless they're issuers, versus it's just something that gives access to a different base of retail users outside the US, right? So when you ask, for example, how do you square that circle or whatever, I would say the consumer side of it, Solana Foundation and Solana kind of infrastructure altogether has always supported it. Now, just because, I mean, totally now does this actually, but just because like I or Lily don't tweet out CAs, for example, doesn't mean it's not something supported. Now, the other part of it, the RWAs of it, which I recognize Ethereum has a good chunk of, Hyperliquid as well in terms of verification. That is an area where we are, relatively speaking, I would say, very understated compared to what we're capable of. And so it seems to me like that is actually the place where we need to pour some, because most of this stuff, you know, I mean, you know pretty well, but the listeners might not, that a BD institutional sales cycle is a very long and arduous thing. And it's not necessarily about the best product. It's about if you can get on the table, if you can, find the correct decision maker, and then find out what's blocking them, and then doing all sorts of politicking. And so like that's a part where if you're a startup, you're not going to be able to navigate that too effectively unless you're like a repeat founder. And so that's the part where you have, let's say, more of a machinery for support for, getting, I don't even know what they were called, West Money Union or something, Western Union, something like this. Like that type of shit is what they can help with. But I mean, make no mistake, it has to be the case, in my view, that for crypto to actually be meaningfully effective, you need to have some concentration of all these different things. You need to have the borrow land, you have the RWAs, you have the trading, you have the consumers. Otherwise, you are doing this thing where you're replicating the existing walled garden structure of Web 2 just with different rule keepers and different gates, as opposed to this truly composable thing where you don't need permission. So that's a long answer, but the short answer, I guess, is that you do need both. And institutional deals are where such a structure like a foundation can help the best. But make no mistake, the consumer stuff, everybody's interested in helping out on all the time. It's just not as loud.
No,
I think you're muted.
Mia, you're muted. Okay, well, I think that is my, well, Mia, you good? Oh. Okay. Am I the only one who's audible right now? Okay. Well, I will keep the people entertained while you're figuring that out. Hey everyone. How are we all doing? Maybe I should do some ASMR. People want some ASMR? Do some of this. Ooh. Hello. Welcome to the stream. Yeah, I'll do some. Still can't hear you. I can't hear you. Does that sound good? I have no idea how that sounds. Can't hear you still. Zero hearing. There we go. Can you hear that? Here's some rubbing. Okay. This is good. Maybe this will be like a good, like going to sleep stream. Yeah, just imagine me. Okay, I'm running my fingers on your scalp. There you go. Yeah, that feels good, right? Okay, now I'm getting some shampoo. Squeak, squeak, squeak. Now I'm shampooing your hair. There you go. This will make it. I can't hear you. I can't hear you at all. I don't know what's going on. Is Mert still here? be clear, I didn't sign up for this. I haven't done. Oh, there you are.
Hello,
Mert, you're back. How's your head
can
feel?
you hear me?
Yeah, we can hear you.
Honestly, I'm pretty fucking sick, man. I'm overheating right now.
Oh shit, I'm sorry.
all good.
Mia, are you good? Do I need to interview him?
Mia, just change your audio input to the laptop if you're using something weird.
Yeah, we do not hear you.
Restart the browser, click the microphone, the settings, all that shit.
All right, I think Mert, it's on you and me to tag team this ASMR session.
All right,
you do this. Run your fingers through your beard. Get like really close to the mic. Oh no, it's too far.
I can't. The mic is in my ear. Yeah, I don't have my pro setup. Wait, one sec. Comments. So okay, what is this show about anyway? It's been on for 5 hours.
It has been on for 5 hours. I think Mia is getting delirious. So at least I am. I've been on for over an hour now. I'm
talking about what?
I'm losing. I just random stuff. I started doing some ASMR for the audience because both of you dropped off.
I heard.
Okay, Mia's gone now. Yeah, you did. I don't know what else there is to talk about, dude. I've basically given every inspirational statement I can make. I'm pretty fresh out.
Well, what did you talk about? What was the theme?
We talked about OUSD. What's your feeling about OUSD? Let's talk about that. This consortium stablecoin thing.
Can you hear me?
There we go. We can hear you now.
Oh,
thank goodness.
So it's just like, okay, Mert, I'll see you in a second. Okay, Hoseeb, it's been a pleasure. You literally just saved me. Yeah, and
You're very welcome.
More distracted during our session, so thank you for being great as usual.
You're very welcome.
I'll let you go now.
All right. Godspeed.
Thanks, guys. We're sticking through it. Obviously quite happy that Mert came because we were going to end with Hoseeb and quite a few minutes ago. So I'm quite happy that he stayed around and literally held the stream for us. So without further ado, my final guest, I promise this is the last one, and I'm glad he made it given the circumstances. My final guest for the day is the most vocal developer advocate in the space and top crypto Twitter shitposter. While CEO of Helios, he has become a massive, widely known truly key opinion leader for Solana and Zcash. Please welcome Mert, founder and CEO of Helios.
Yo.
Hi, Mert.
Hello.
Thank you for making it. I know that you're not feeling so well, and we're gonna make it short, so we're not gonna do the full initial time because I know that you're not feeling so well. I want to start with a fun question because we need to bring the energy up. If you could delete one crypto Twitter influencer account permanently to fix the vibe of the industry, who would that be?
Oh, that is a good question. Crypto Twitter personality that I would delete. I would say, I mean, I just block the people that I don't want to see. So I don't even remember really who they are anymore. But
Who's ruining the vibe?
Well, to be clear, I think most of CT ruins the vibe. It's nothing personal. It's just everybody's just so pessimistic all the time, and it's so unbecoming to me. I don't understand why we have finally gotten to a place where the chains scale, they're used, regulatory things are being cleared up, and startups are coming on chain, and businesses are being built on chain, stable coins are being built on chain, and everybody's just like, oh, but the price went down 5%, therefore my life sucks. It's like, that is just a loser mentality. But okay, so probably one of those weird ETH guys, I would say, like Eric.eth or Sassel or whatever his name is. I don't like those guys. I think they're intellectually fundamentally dishonest.
Are they? Is it because they're on more like Ethereum maxis?
No, I'm friends with lots of Ethereum maxis. certainly quite a few, and good friends with them as well. But there is a difference in between a maximal advocate for your beliefs and then just purely lying about other things to push your own agenda, or maybe just not knowing anything about the others and then using your ignorance as this cloak, this veil to just say a bunch of shit that you have no idea. Like, for example, oh, well, you know, I did a major in, you know, weaving dog treats together, whatever. It's like, so now I can comment on engineering matters about how fast whatever pre-confirmations are. It's like, please shut up. But anyway, I'm not gonna talk behind anybody's backs. If they want to talk to me, they can
come
do
to
something
you
directly.
Listen,
Yeah,
this is not society. You could say whatever here. I'm not gonna censor you. You've been very vocal that you're not a big fan of Ethereum. So from a technical angle, so we keep this very eloquent. What is the single biggest architectural flaw in the Ethereum rollup roadmap that nobody wants to admit? I mean, just give me a flaw in Ethereum that no one can, like, dispute.
Well, the L1 doesn't scale. That is indisputable. That is why we've been saying this since 2020 at the very least, and why it took until really about last year for them to finally admit it and then say, actually, we do need to scale the L1. And then by that point, most of the talented people left. Now, granted, there are still interesting and talented people that I respect in that ecosystem, but you can't out-paper your way from physics. The physics and the incentives either work or they don't. You can build the most eloquent engine for a Formula One car, or you can build the most eloquent design for a Formula One car, but fundamentally, if the engine that is the L1 is lacking, I don't care how beautiful or how cool your tires are or your steering wheel is, it doesn't have the power to actually keep going. It has to be a holistic thing. And the problem is twofold. One is the physics of it. Obviously, it doesn't scale. But two is incentives, right? For example, the thing I like about Solana is, for example, the RPC provider, the prop AMM, the front-end router, and the retail app can all work together. And the sum of those individual parts is greater than the whole. It's PVE. Everybody makes money. Everybody provides a good user experience, provided they're actually caring for the customer. And there is no knife fight games to say something like, well, now we're leaking value from the L1. Why aren't they paying rent to the L1, right? There is none of that because the activity is already on the L1. And so then you get to a point where you're siphoning off activity from the L1 to the L2, but then now the activity on that L2 doesn't benefit the other L2s. And so now the other L2s are knife fighting that L2. And so now you have like a three-dimensional fight where the L2s are fighting against each other, but then the L1 is also getting siphoned by the L2. And the thesis was something like, well, they will use it as currency, and as a result, therefore, it'll be the global currency reserve, whatever. And that just does not work unless your activity is like 50,000-fold higher. And that would be okay if the L2s actually scaled past Solana, but even the L2s don't scale past Solana, which is also kind of crazy. But then also, they don't scale past Solana while still being centralized and while still having admin backdoors and multi-sigs. So there is just so many problems with it. And I do think they are soluble problems. But like it seemed to me for the past 3 years that instead of actually solving those problems, the answer was to just basically gaslight. And so anyway, I don't think I need to say too much more about that. I do like people from Ethereum. I've invested in Ethereum L2s, Ethereum L1 projects, all these different things. Mm-hmm. So this is not to say that the entire ecosystem is guilty or anything, but there's a few vocal people who are complete liars.
Okay. Very strong statements. I like this. If you woke up tomorrow and Solana code was completely wiped from existence, which ecosystem would you go build on?
Zcash.
Give me the case. I know you're
Well,
bullish on Zcash, but you know, like maybe not everyone listening.
Well, yes. So there's actually quite a few dimensions to this. I'll figure out a way to keep it short. But so one thing is that it's just the final untackled frontier in crypto. So if Bitcoin started to legitimize internet money, P2P cash, proof of work, thermodynamic money, all these different things, it legitimized it. And then Ethereum came and said, well, we can make it programmable. And then Solana came and said, we can make it scalable. Well, the one prong everybody kind of forgot about, which is ironic considering that the cypherpunks, who are the ones who pioneered privacy in all sorts of different fields, including messaging and file sharing and P2P protocols, that is the final untackled frontier. And it's just also happens to be the thing that you must have in order to achieve the ideal of crypto, right? You cannot fundamentally achieve crypto's vision if you have built a giant surveillable ledger that you have no optionality to opt out of. If everything you ever do is on-chain forever permanently, if that's then linked through KYC linked identities, if you also have AI being able to make sense of unstructured data, then you have literally built the panopticon, which is much stronger than any banking system ever was, because at least that was fragmented and you would need the rule of law in order to be able to get certain information. And maybe depending on where your jurisdiction is, maybe it's in Switzerland, they wouldn't even hand it over. But with a blockchain, you don't even have to ask permission. It's just there. You just go and take it. That information is public, free, forever there. And so that is a nightmare scenario. And it might be somewhat hard to understand for some people, depending on their background and depending on the political difficulties they've faced. But trust me, there will come a time when you will really wish you had that optionality. Like imagine if you today could not do any private messaging, if you could not encrypt any of your files on the internet, if every thought that you had in your mind, everybody could read it at all times, right? You just didn't have any choice. Yeah. It's the same thing, except now for the root access to all your finances and assets, right? So especially in a world where asset seizures are going up, wealth taxes are going up, socialism is going up, these kind of weird draconian like emergency acts are coming in to say like, hey, actually, we think you're a criminal just because we saw you made a bad post. Show me all your data. Oh, you have money, let me take it, right? Like all these different things are just a nightmare scenario. There's also the monetary property aspects of it, where the entire purpose of cash is that it's fungible. You can trade $1 for another dollar. It's just, there is no information in that dollar or in the amount. But if you have a digital asset, that information does exist in its provenance. You can see its history. You can see who held it. You can see if Iran held it or what, all these different things. And all of a sudden, now you're treated differently based on the history of that coin. And so it's a non-desirable monetary property for a store of value asset, the complete lack of privacy. So, and then, you know, like there's also all sorts of structural things here, right? For example, I'm building a privacy protocol on Solana, but there's a bunch of things that I physically cannot do. Otherwise, I will literally end up in jail, right? Now, the law I don't think is fair at all. But if you look at Tornado Cash precedents or Samurai Wallet or any of these other things, if you are a singular entity like a Tornado Cash and you helped conceal some information and some bad guy happens to use it in the future, you're not fucked, right? Like now you're being charged with conspiracy for money laundering, sanctions evasion, and money transmission. Okay, but with Zcash, that is not really an issue because there is no one team that deploys it. There's tons of core teams, there's tons of wallet teams, there's tons of miners, there's all sorts of these different jurisdictions. And so it is truly decentralized P2P such that it cannot be stopped because there is no single person to arrest, right? And so that is something that unless we work on it, literally would not exist in the world. And the types of problems that I really like working on are the ones like, hey, look, if I didn't exist, this wouldn't be worked on. And so, because otherwise it just feels like a waste. So for all those sorts of different reasons, as well as, you know, you can, as your libertarian ideology of the day in there, or the fact that it's, you know, it'll be quantum recoverable and all these different things. And with AI, you want like provably scarce assets and all these different things. Zcash would be certainly number one if Solana was just non-existence.
Was this privacy angle? Because I guess it's private. Like we were able to send money private, like without revealing our names in crypto since the beginning. But but privacy as it stands, as we're talking about here, was this like a core? Like this should have been there from the beginning. It sounds like. Do you see it like that?
Yes. So, well, there's a few things to support it here. So one is that obviously, so actually people don't know, Satoshi in the first Bitcoin post directly linked Zuko, who was already working on this problem. Zuko is one of the co-founders of Zcash. Hal Finney was also a supporter of Zcash. He knows Zuko. Well, when he was alive, he was following the project. And he tweeted things like looking to add anonymity to Bitcoin. There's a forum post of way back in the day when in the Bitcoin forum, somebody's talking about adding privacy to Bitcoin using ZK, but ZK was very early at that point. It was not proven at all. And Satoshi literally himself says something like, this would make for a much better, effective and efficient implementation of Bitcoin. I'm just not sure how to get around the double spending problem, right? So one may say something like, most of the reason why blockchains today are transparent is that they couldn't get around the double spend problem without knowing how much everybody has at all times, which is completely fair. Technology evolves to fix such gaps, right? But now we do have the tech, right? And I mean, there'll always be some sort of trade-off here. Like some people want perfect supply auditability. Some people want the option of privacy. And so nobody's going to, or some people will, but not me. I won't care if you opt out to not do privacy. That's totally your choice. The same way it's your choice to take a selfie, and if you want, you post that selfie on social media, good for you, whatever. But it shouldn't be mandatory for you to publish that selfie on social media, right? Which is kind of what you're doing with your money if you don't have any optionality. Privacy is choice in how you conduct your affairs, right? It's not secrecy, it's not mandatory anything, it is just choice. And the second you don't have choice, you have tyranny.
You recently published the Helios Manifesto, pushing for extreme speed and zero corporate fluff. What is the most toxic, slow corporate behavior infecting crypto startups right now?
Well, I think there's so many, honestly, it's kind of hard to even, but I'll list out a few that come to mind. One is this obsession with distribution and fake cheap quality distribution and virality over any focus on product. So I get where it's coming from, to be clear, right? Most people that are technical think, oh, I built a good product, but nobody cares, and therefore I need to do all these different games to get virality and all these different things. But the problem is most of the time, your marketing problem is really a product problem, right? It's very unlikely in such a new field that the product you built is good and people just don't use it because they don't know of it, right? Because you don't need 10,000 people using it. You need like 12 people using it, and then you need one of them to tell a friend. And then that person tells a friend. And then maybe 3 of their friends tell a friend, all these different things. And she's like, Axiom happened this way, right? And so and what this leads to is, for example, paying KOLs to do all sorts of like these different things that are undisclosed and you know, these farming games of like, hey, look, we promise to give you money if you pretend to use our product, but then we will give you like a much less money than we said we would, and then you can't complain. And it's like this super weird like beg-fi incentive in some sense, where like both sides are lying to each other for no real reason other than to circulate the money without creating value. I think that's super stupid. Certainly distribution is extremely important, but distribution does not mean paying KOLs. For a very interesting set of products, it could mean that, but you're generally speaking, if you can't even get 12 people of your own friends to use this app every day, every week, whatever, then you obviously have a much bigger problem. So that's one. I think the other really big one is people chasing narratives rather than markets. So whenever there's like a new narrative, whether it's AI coins or whether it is token launchpads, I get the same pitch like 600 times while that meta is alive. And it's like, why are you building for a meta, right? Like a meta by definition is something that's ephemeral. It does not last. It lasts for a very specific period of time and then it dies. So unless you want to build a company that lives for a specific time and then dies, which you shouldn't because that's not a company, that's a grift, then what are you doing, right? Like you need to build your business around something that, or at least if you're using that meta to get started into something, you need to expand aggressively into some adjacent markets. But stop chasing, like stop outsourcing your thinking to Twitter. Like that's just fundamentally stupid. If I want to do that, I could say, Claude, look at Twitter, summarize the top 10 trends you see, release a product for each of them. Okay. So clearly if a bot can automate that, then you didn't add too much value to the world, right? Like for a founder, what's important is what you believe to be true that others do not think, or they're overlooking, or they cannot do it, or they will not do it, right? There needs to be some edge that's contrarian.
Yeah. What's the biggest bet beyond like Solana and Zcash? What are you super high conviction on? And this doesn't need to be a project or L1, whatever. This could be a category.
In crypto?
In crypto. But you could give me also, you could double answer, could say crypto and beyond.
So beyond Solana, Zcash, privacy, etc., I think ZK is tangentially related to privacy, but it doesn't have to be. I think there's all sorts of ways it could be used. I think identity hasn't been done well at all in crypto. The approaches have been quite weird, where you have to scan your eyeball onto like a device. And so I think there's all sorts of different things you can do there. I think, well, I do think, so this is an unsexy answer, but I think self-custody itself is this thing that's super obvious, but that nobody has figured out the ideal guarantees for the user for them to feel comfortable enough. And so what ends up happening is you just store it on an exchange, right? Or you store it in a ledger and then you never touch it again. And so we've created this thing where, technically speaking, it is a more safe form of money. You have the keys, but then you have the responsibility. And so there's ways around that, which we're kind of working on right now, actually, where you can give user the freedom and the benefits of owning the asset, but the security of a bank, where it just can't be rugged away because you just forgot your seed phrase or you just lost your ledger device or something. And then I think the one thing that's super slept on still is just a decentralized stablecoin. I think all these stablecoins that are coming out, I'm sure you talk about the open standard one, but also obviously Circle, Tether. These are all fundamentally centralized issuers, and they can freeze the funds at any moment, which Circle just did that like last month with Zama, I believe. It froze the entire pool, by the way, not an individual user.
Yeah.
That just fundamentally can't work, right? Like, because now what's going to happen is CBDCs will happen, and then the governments will start, pressuring these companies to be like, well, actually, I want more data, right? It's same thing as Android and Apple and all these operating systems that's been happening. So you fundamentally need a decentralized, stable alternative. Like, I don't think crypto will ever really work without that. So I think that's a category I'm excited about. That I think Luna has or USD has completely scarred people's imaginations of what's possible here, and they'll say something like it's literally impossible. I don't think it's impossible, unless you can show me a mathematical proof or a law of physics that says it. I don't think it's impossible. I think it's entirely doable.
What's going to be the next biggest turning point? We had a lot of turning points in the industry. What do you think is going to be the next one?
I think there's two that come to mind.
Mhm.
One is probably the AI bubble bursting. I think fundamentally it'll happen at some point. It kind of has to. Who knows on the timeline? It could be Q4, it could be Q1 of next year, it could be maybe the Q1 of next year. But it is going to pop. And so then we'll see where the money goes. Does it go to gold? Does it go to Coca-Cola and Walmart? Does it go to crypto? Like, where does it go? And what role does crypto play in that global economic movement? That's going to be a big turning point. And then I think that second is going to be these assets decoupling from Bitcoin. I think that needs to happen, and I think it will happen. I have no idea on the time frame here. I think it'll probably take longer than most expect, but it's just like a world in which Robinhood is perfectly correlated with gold, for example, makes no sense. Like, they're not really related. I mean, I guess you can trade gold on Robinhood, but that's about it. It's not going to drive their business revenue meaningfully.
Mhm.
But now, like, the way crypto is structured is like Bitcoin has an effect on Solana and Hyperliquid, and it's like, why? And the reason is because the entire assets class is seen as a homogenous thing, where everything is like Bitcoin beta in some sense, and that will change at some point, especially as more apps with PMF come to fruition and more people are aware of what Hyperliquid and Solana and Zcash and Near and all these guys are doing. I think that'll take some time, but that'll be probably the biggest turning point in the industry.
That is very interesting. I didn't think of that. How do you feel about Bitcoin?
I think Bitcoin is extremely important. I think what my one concern with Bitcoin isn't necessarily Saylor, but more so the second order effects of Saylor, which is to say that, you know, what's the last thing you remember about Bitcoin? Like, if I say Bitcoin to somebody, what are they going to say? And chances are they're going to tell me about strategy or Michael Saylor. And that is just super depressing because, like, why do I give a shit what this random guy is doing with this weird Ponzi scheme that he vibe coded with ChatGPT, which he literally said? I don't care. I care about separating money from the states. I care about self-custody. I care about using internet currencies and quantum proofing and scaling these things. And that interesting, that fascinating, that exciting discourse just gets completely overlooked because Michael Saylor exists. And it's like, oh, okay, how much is he going to buy today? How much is he going to sell today? That's the entire discourse. So that's where Bitcoin, I think, is in a temporary, facing some temporary turbulence. But I think fundamentally it'll be fine. I think it has to work. I do think hopefully it does work. I do think hopefully Zcash will get to a meaningful chunk of its market cap, such that Bitcoin itself will also consider adding privacy natively onto the chain itself.
Yeah. Okay. One last question, because I know, well, like, Twitter will literally kill this once we hit 6 hours live. So I need to end it before. I want to ask you, out of all the companies that are still around and focusing more on, you know, like companies that have been around for, let's say, more than a year, is a bold question. So to answer it, if you don't want to answer it, I'll give you another one. Who do you think is not going to be around? Who do you think is not going to survive in the long run?
I'm not.
You don't want to do it?
Thing is, even if I do disagree with approaches, I never want to be in a position where I'm telling an entrepreneur that what you're doing won't work, because it's just like, maybe they can figure out a way. I don't want to discourage entrepreneurs.
Give me a category that you're not bullish on. Let's soften this up.
Okay.
Like, you personally are not bullish on it.
I think interoperability is something I'm not bullish on, where people keep randomly assuming there'll be like 1,000 chains and all these different things, and you'll need all these middlewares to kind of connect them together. I don't think that'll happen at all. I think really the only way crypto will work is if there is concentration of liquidity in markets, because if you don't have concentration in markets, then the markets are useless and meaningless, and they can be manipulated and all these different things, right? For example, like consider a prediction market. If a prediction market has the same bet, but like $10,000 in volume across, or in open interest across like 7 different venues, that doesn't tell me much. But if it has one with $1 billion in open interest, that tells me something, right? And it's the same for any market, really, whether it's perps or pre-IPO discovery or whatever, the price of anything. And so I think this world in which people, and by the way, it's a huge security risk. Like, it's not an accident that almost all the hacks that you see happen on bridges or like Oracle related things. That's not an accident at all. Like at some point you got to ask, like, okay, this is literally just a bad design. If you have all sorts of these walled gardens that are connected together through these like weird arbitrary structures with trust assumptions, that actually is just Web 2. And so that's why Solana is important, for example, where you do need extreme scale to concentrate all these different things. Now, I don't think Solana needs to be the only one. And for example, there could be 2, 3 others, right? There to Android, there's iOS. To Mac, there is Windows and Linux. To Nintendo, there's PlayStation, Xbox. So there's always kind of 2, 3 people who end up winning that category. But then it's just like you're not going to be able to business of just interoperating between 2 chains. And maybe you can actually, but there'll probably only be like 1 or 2 of those. And so the category itself, I don't think works.
Mm-hmm. Great. Mert, thank you so much for making it and joining me today. I hope you feel better soon.
Thank
It's
you.
great to have you on.
Okay.
All right. And we're coming to an end. Thank you so much for everyone that joined us today. We ended up having very insightful conversations, but also some random ASMR as my microphone, like the battery went off and I had to reconnect here. So it's been very entertaining for me to do this. I hope everyone else that tuned in enjoyed watching. Thank you so much for my producer to joining me on this. We're going to be doing more of these, so you guys should follow one of the accounts of your preference. Twitter probably makes sense. And for that, you can go to madsocietytv. And that's been it. Thank you so much for Cello for powering this stream, as well as our media friends from Genzio and Nolcha. I'll see you guys next time.
I think crypto is doing great.
Like everything could be collapsing and you'd have like the most positive take.
Like, why don't we have more users?
Okay, holy shit.
She's very depressed.
I'm clearly not depressed.
So crypto is money.
No one is really getting in trouble.
That's fine.
Very hard when the president of the United States also did one.
ChatGPT was very helpful in that.
Whoa. You would get killed for that.
What?
Yeah. We should just post this.
Yeah, 100%.
It's not very positive, but it's true.
And like, to be clear, it's always about making money.
That's a good way to put it.
I'm glad we're having this conversation. I don't want to get bored here.
I came into crypto being like, oh, they're a scammer.
Everybody's coming for me.
There's an aura here.
And now I'm like, you got to give them credit.
You never really know until you do it.
It's always been about making money.
At this now, it becomes like Somali pirates.
Have you thought about any of this?
There's a billion problems. I have no time.
This is very dark. I know I started with like, hey, we should be very positive.
We don't have to be positive
Okay,
all
we
the
don't
time.
have to be positive all the time.
Are we recording already?
The thing that I optimize for, other than meditating on death, is being able to sleep at night.
That got me interested. I'd like to say I'm a little bit of a pre-boomer.
Jesus Christ, like that. This is some serious shit.
Censored.
Feels like a movie.
This might happen.
I'm here to be entertained.